That's been hit hard, Nadia, that you think has fallen far enough to get back in? I noticed yesterday it wasn't just real estate that was down, but also consumer discretionary was now negative for the year. Those two industry groups are the only two of the 11 on the S&P that have fallen.
You know, we are least preferred on those two sectors. And again, I want to make it clear that our call on consumer discretionary isn't so much a call on the consumer. We're still quite constructive on the consumer, but it's more of the makeup of the index. I mean, you'll have this index that skews more towards good. You'll also have the top two companies that account for nearly 50% of the index. When you talk about market concentration, this is one in terms of market cap, the most concentrated sector. And as you know, noted, Mike McKee noted earlier about some softness that we're seeing in housing. That has implications for big ticket items, and so we think that will remain a headwind. And
ECB's Lane says under the baseline, more cuts can be expected over time.
To estimates on the EV side, so still a little bit too early to jump back into.
So ECB's chief economist Lane currently speaking to Finland's MTV.
That might be the opportunity.
All right, Nadia, thanks so much for joining us. Great to get some time with you. Nadia Lovell there of UBS Global Wealth Management talking to us about the sectors that she's interested in and those that she doesn't want to buy just yet. Quick note on FX. The yen is making some moves. Right now we're seeing the drop turnaround in the dollar yen. Right now 160 is the level, and that's about the level that we've been watching, but you can see a little bit of a change in direction there as top-ranking FX official Masato Kanda is speaking in London right now, and of course, in Paris right now, and of course, the thought is that if this currency, the Japanese yen, continues to weaken, that Japan will intervene on Friday. That's at least what market players are talking about as a possibility. Let's get a look at some of the individual stocks moving ahead of the opening bell. For that, we go to Abigail Doolittle. Abby?
Well, we do have futures lower, as you know, Matt, but first let's take a look at two stocks that are working, starting off with the shares of FedEx, really popping sharply higher right now, up more than 13%. This, of course, after the carrier put up a much better quarter than expected, beating estimates. Importantly, they also raised their profit view. This comes after cost-cutting efforts, and they announced a $2.5 billion buyback. Investors really liking it, sending the shares right now to what could be the best day in 2 years. Also climbing, in fact, soaring, Rivian. Shares are up more than 30% on the announcement of a $5 billion EV pact with VW, where they will be jointly developing battery-powered vehicles and software. I was surprised to note that the bearish short interest on this stock is not as high as I thought. It's 16%, which is high, but with this kind of gain, I thought it was a much bigger squeeze, but there is clearly a bit of a squeeze going on there. Southwest Airlines, one of the stocks declining on the day, down 4.8%. They pre-announced to the downside. They cut one revenue view to RASM to down 4% to down 4.5% from the previous view of up 1.5 to 3.5%. That's pretty serious view, and the management saying complexities
and ECB's Lane says if the baseline holds up, there would be more interest rate cuts.
I guess a very fancy way of saying demand's not quite as strong. And then NVIDIA, you were mentioning that turn to the downside. Matt, this is really remarkable, as you know, or noteworthy, given the fact that not so long ago in the pre-market, it was up more than 2% after yesterday's nearly 7% gain after the 10% drop in 3 days. Now back down 0.6%. It's going to be very interesting to see how all
Japan's top currency diplomat Kanda says there's no mistake that the current Forex is moving in one direction.
And of course, yesterday was fascinating because only 113 stocks gained, and the market was up 0.4%. That's the worst breadth, Abigail, that we've seen in 24, 25 years.
It was really noteworthy. And from a sector standpoint, I believe at the end of the day, there were 2 or 3 sectors higher, the rest negative, speaking to that negative breadth that you're talking about. And what makes it really noteworthy or worth watching beyond the fact that it's just the worst breadth in such a long period of time is that we're having these mini sector rotations day by day. So on Monday, we had one into value. Yesterday, violently into growth. Today, it's going to be interesting to see how it plays out. Right now, it looks like it's perhaps more evenly dispersed, but with NVIDIA going back to the downside, maybe it will be.
Canada says that recent FX moves are rapid.
Very interesting markets indeed. Great that we have you with us, Abigail Doolittle. And we're going to talk, by the way, with one of Abigail's sources a little bit later about the commercial real estate market. Very excited for that. Coming up, with the EV market in flux, 2 automakers enter a $5 billion joint venture.
It is a lifeline for Rivian, and I think really it's really important not to get too carried away. This is a huge sigh of relief, really, rather than a cause for celebration.
We're going to take a look at the deal between Volkswagen and Rivian next. This is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Those macaroons?
Japan's top currency diplomat Kanda says that some may see the current one-sided movement shows that the market is not functioning properly.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business
that can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
The biggest ideas inspire new ones. What can you do with SPY?
To create a company that was like deeply rooted in the principles of inclusivity and diversity, I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is a huge sigh of relief, really, rather than a cause for celebration. Yes, it's good news. We know that the EV market, long-term wise anyway, is certainly something that's meant to be, it's going to be very prosperous. But it's, is $5 billion enough, really, for them to meaningfully rival what Tesla is doing, and particularly some of the players over in China as well?
One stock that we're watching this morning is Rivian, the EV maker surging after announcing a $5 billion joint venture with Volkswagen. The deal allows VW to get access to the startup's tech and really its huge brand equity for a much-needed cash infusion. Joining us with more is Bloomberg Technology co-anchor Ed Ludlow. So Ed, talk to us first about why this automaking behemoth, right? Volkswagen has like 12 brands, all of which everyone has heard of, needs this joint venture with a company that only makes 57,000 electric vehicles a year.
Because for Volkswagen, their efforts in software have been going very badly. The first phone call that I took last night from somebody close to Rivian and Rivian's board was like, look, this is a great deal for Rivian, but it speaks to Rivian's competence in software.
And so just noting, so Japan's currency chief, Masato Kanda's speech has ended in Tokyo.
That it's set up to basically develop a software suite for everything from OS through to autonomous driving capabilities to compete with Tesla. They just couldn't do it. Think about the types of people that work at Volkswagen. They just didn't have the talent. So Rivian was seen as like a really good quick fix because Rivian's good at software and they've got good talent there.
I was talking with Monica Raymond, who covers Volkswagen for us out of Berlin, and she noted that VW has penciled in 108 billion euros in investment in EVs and digitalization. The previous CEO, Herbert Diess, was pouring tens of billions into CARIAD, right? But it's lost billions already in its first years of existence. They just don't make much headway with a ton of cash.
Yeah, and so therefore, like $5 billion, up to $5 billion, because like the devil's in the detail of the structure of this deal, kind of seems like a drop in the ocean. I would focus on that, because on paper, Volkswagen has the potential to take quite a controlling interest in Rivian. And so Rivian's quite clearly had to cede something here, give something up. But initially, it's an equity stake through an unsecured convertible dated December 1st, with the promise to buy $1 billion of equity each year, 2025, 2026. But if the stock goes up for Rivian, think about the dilutory effect. VW might not end up with that big a percentage of the company, but it's a good hedge. They're forming this joint venture where, you know, Volkswagen gets access to Rivian. So if Rivian is as good at EV technology as the market believes, VW gets that. Rivian gets the brand recognition, I suppose, that you just flagged. One note of caution, though, I would say look at the final paragraph of the story and how many joint ventures Rivian's pulled out of
for
over
sure.
the last
They
5
have,
years.
obviously, Amazon owns a huge stake in Rivian. Ford had a huge stake in Rivian. They canceled a deal with Mercedes-Benz. But I really think the Rivian brand is going to be helpful to Volkswagen because people love these vehicles, right? They're expensive, yes. They lose. Rivian loses like 40 grand on each sale. But we're talking about 1,000 horsepower in the quad motor Rivian, right? Massive amounts of torque. It's a real status symbol, and they're supply constrained, aren't they? I mean, they could sell as many as they could make.
Yeah, and you know, really the story with Rivian is trying to work out the manufacturing side of what they're doing. A lot of emphasis on this story is the next generation Rivian, R2, R3, which is kind of their attempt to compete with Tesla's Model Y. They had shifted the launch of that vehicle to their existing plant in Illinois, but they remain contractually committed to building a new plant in Georgia by 2030 and investing $5 billion. So the cash injection from VW helps. The question is, what does this JV between the two actually do? A lot of folks were speculating about the Scout. I don't know how interested you are in the Scout project,
I have been speculating about it myself this morning. I mean, they could just rebody an R1S to make it a Scout.
But then look at the Scout's profile and look at the R2, R3, and I use this term not lightly, but frenemies. You know, Rivian's had to give something up here, and I'm still trying to work out what it is beyond the kind of positive headline, and I get the stock's up a lot, that Rivian's getting access to, because what Rivian needs is capital, and it's up to $5 billion, not a certain $5 billion, but they also need some manufacturing help as well.
I mean, that's the hope, right? That's why we see this 36% pop in the stock pre-market. Rivian gets the money to build the Georgia plant. Maybe they can go from 400-volt architecture to 800-volt. Maybe someday they can actually put Apple CarPlay in a $100,000 vehicle. That boggles the mind that they don't have that. The problem is, you know, Volkswagen made a partnership with XPeng. The stock soared in China and now has lost 2/3 of its value.
Yeah, and again, I look at Rivian's track record with JVs. I think the point is that for the legacy OEMs, they're still hedging their bets. You look at Ferrari now talking about doing a hybrid, for example. There's a recognition that this is one strategy. You acknowledge the competence of the pure play EV makers. Rivian does have a great product, good talent. It just needs help executing on it, and execution's kind of key. They've de-risked the balance sheet with Rivian with this partnership. And at the same time, VW can hedge its bets, continuing with many gas or combustion engine models, and continue to look at hybrids, as many of the legacy OEMs are, with the offset of the partnership with an EV maker that's focused on one thing and one drivetrain.
Right, Ferrari's SF90 Stradale already, a plug-in hybrid. I think you should take a spin in that, Ed, when you get a chance. Bloomberg Technology co-host Ed Ludlow, definitely want to tune in for their program at 11 a.m. for more on this, I think, massive story, and Ed is our EV expert. I also think you should pick up the new issue of Bloomberg Business Week. You get an exclusive interview with LVMH chief Bernard Arnault, often the richest man in the world when he moves up and Musk moves down. But it's a whole new format for the magazine as we relaunch Business Week. Coming up, morning calls, and then later Jay Hatfield joins us. He has an S&P target of 6,000. This is Bloomberg.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
The world needs ways to reduce carbon emissions.
ExxonMobil can help.
We're working on solutions for our business.
That can also help businesses like yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Noting here, US dollar hits a new 38 high of 160.48 yen, last up 0.5% at 160.455.
I'm Matt Miller. Just ahead of the stock market open, we get a whirlwind of activity in FX and rates. Here's the Bloomberg U.S. Bond Index hitting its highest level so far this year after, well, really some divergence shows its face. The Fed seems far away from cuts, the ECB seems much closer, and the yen falls against the greenback.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
I speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company, but I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the praise to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
This is the countdown to the open. I'm Matt Miller, moments away from the start of trading, and we have a lot of activity in currencies.
So we are looking now to the markets on open imbalance. S&P 500, 320 million to the sell side. Nasdaq 100, 20 million to the sell side. Dow 30, that's at 65 million to the sell side. Mag 7 stocks seeing 6 million to the sell side.
Let's focus in on stocks, at least for a moment, as you hear the opening bell on the NASDAQ and the New York Stock Exchange. We're down on S&P futures, and you'll see us drop in the cash trade as well. That's because NVIDIA has turned lower. NASDAQ also going to be down, as well as the small caps. But let's pan over to the other board right now. I usually dance right past this. Look at the euro, down with a 106 handle right now. Some real divergence forming, as it looks like the ECB is going to cut again, even with all the election volatility over there. The Fed, Michelle Bowman, saying it's going to be difficult to do that because the risks to inflation are to the upside. Right now, you can see a sell-off in Treasuries pushing the yield up to 4.30. We were at 4.25 this time yesterday. And NYMEX crude just hovering around $80 a barrel. We don't have the yen there, but we should probably pull it up right now. Their top currency, Japan's top currency official, talking in Paris, saying you've seen drops too far, too fast. That may indicate that we're headed for some intervention. That's what a lot of talk in the markets is about. Expectations possibly for Friday, but could it come sooner? I guess as we go over 160 yen for the US dollar, headed now towards 170. You can see right now we're trading there at 160.58. In terms of stocks, one that we want to watch at the open, one stock that isn't NVIDIA that we want to watch at the open is FedEx. It's up after forecasting profit better than Wall Street's expectations. For more, we're joined by Bloomberg's Abigail Doolittle. Abby, what do we see?
Yeah, it's up in a big way, Matt, up more than 10%, heading to its best day in 2 years. And this comes on a number of factors, including that raise of the profit outlook that you were mentioning. They've been cutting costs. They're saying that they will achieve $2.2 billion worth of cost cuts by the end of this year. They also did beat estimates for the quarter. That was a modest beat, but nonetheless, it does signal a slowdown in the decline for their parcel business. So that is really pretty important. The CEO also talked about the process of consolidating the Express, the Ground, and the service units. This could be a really big shift for their business. Apparently, Express has been having a bit of a stall given the inflationary environment, folks opting for the Ground. Also, they hinted at the possible divestiture of their freight business. JP Morgan in particular, some analysts surprised by this. But overall, Matt, what really amazes me about this stock is it's been stuck in a range between about $224 and $290. It is basically at the top of that range right now. So investors are either going to need enough good information to push it up and out of the range, or we could actually see FedEx go right back down in that range. More information is needed, but right now investors encouraged by these recent results.
All right, Abigail, thanks very much. Abigail Doolittle talking about FedEx. Meanwhile, General Mills is dropping at the open, and it's the biggest drop for the cereal king since May of 22 as shoppers pull back on spending. For more, we're joined by Bloomberg's Simone Foxman. I would think, when money is tight, cereal's the only thing I eat.
Yeah, but frankly, General Mills has been passing on a lot of its net sales increases in pricing. And finally, what we are seeing is this slowdown in actual volume coming home to roost. We're seeing declines over 5% in those stocks today. That's pushing this stock into negative territory on a year-to-date basis. And when we look at some of these results in the fourth quarter, we saw organic net sales decline 6%. That's roughly double what analysts on the street were anticipating. A lot of this weakness coming from North America, from the pet segment. Canada actually a standout here with sales increasing mid-single digits. For the fiscal year just ended, we were watching organic net sales down 1% year on year. And one of the troubling things for analysts as well is the guidance, expecting organic net sales to rise 0 or to be flat to up 1%. That is less than the street anticipated. Jefferies says this is just evidence that value-seeking behavior is persisting. And again, we look at food at home inflation up just 1%. There is no longer that ability to come and pass those price increases through. Instead, the CEO says we really got to focus on investment. Market doesn't love it, though.
All right, Simone, thanks very much. Simone Foxman there talking to us about the other GM. Now, NVIDIA shares actually higher right now. We're trading lower in the pre-market. Oh, nope, now the cash trade is lower. A little bit of volatility there, and the S&P is down again. I just wanted to point that out as we talk about Micron. It's been gaining ahead of its earnings report after the bell today, and of course, Micron could be a beneficiary of the NVIDIA AI craze. Natalia Knijevich joins us now to talk about Micron. And Natalia, what do we expect?
So Wall Street is expecting Micron to post about $6.7 billion of revenue in the past quarter, and that would be above company's guidance for both earnings and revenue. And this would be an 80% jump from a year ago. So these strong results could primarily be driven by pricing power. We know that Micron has been raising prices over the past 6 to 9 months, and analysts expect this to continue throughout 2024. So we know that supply chain remains constrained. Demand is improving for PCs, servers, smartphones, which is good for a company like Micron. And we know that revenue has been increasing, gross margin has been increasing, and analysts expect that Micron can post its first positive free cash flow. So we know that there are some concerns about production capacity around DRAM. This is a memory chip that is produced, about 60% of its capacity is located in Taiwan. There was an earthquake and it disrupted production capacity, but Bloomberg Intelligence is saying that price increases can potentially offset any production impacts for DRAM. Analysts will be watching for any commentary around CapEx for 2024 and 2025. Of course, any comments around demand for AI-related products as well, and any updates on DRAM production. The stock overall is up 65% year to date. Analysts are really positive. The stock has got a few updates ahead of earnings. We have 37 buy ratings, 2 hold, and only 1 sell rating for this stock.
All right, Natalia, thanks. Natalia Knijevich there talking about Micron and DRAM. And by the way, Ed Ludlow points out to me it's not just about DRAM, but also HBM, which is high bandwidth memory, a kind of chip I didn't even know about. So thanks to Ed. Tune into Tech at 11 for that. Joining us now is Jay Hatfield, founder and CEO of Infrastructure Capital Management. And Jay, you know, it's interesting to see the volatility in NVIDIA today, but yesterday we saw NVIDIA as one of the sole drivers. I mean, only 113 stocks were up on the S&P 500, and the index was up 0.4%. How important is this stock?
Well, it's really critical. It's the reason the market's up this year so far. But it's the reason that we are bullish on the stock market is it's broadening beyond NVIDIA. And most importantly,
but yesterday's breadth doesn't show that, right? I mean, right. It was the second worst breadth this century.
Well, this is a bull market pullback. So June's usually a terrible month for stocks, but that's how bullish this market really is this is a pullback where you get rotation. So every other day it's tech's up. Today, actually, most things are down, but tech's up. Value income stocks are down. That's what we invest in, so we're very focused on that. But other days, oh, NVIDIA's down. Well, guess what? All of our stocks are up. So that's what happens in a bull market during June, which usually the market would be way down. It's just up at all-time highs. So pretty normal behavior. We're bullish, though, when we get into earnings, we'll get a broader base rally.
So when you say all of our stocks, what are you talking about? What do you see as value? What do you like right now?
So we like large cap dividend stocks, small cap dividend stocks, preferred stocks, anything with yield, which is not in favor. Rates have traded off 45 basis points this year. So those are out of favor, super cheap, trading below 15 multiples, no hype whatsoever. And so we think that rotation will start, and we'll have a power rally in the summer where we'll have both major sectors going up.
Do you need rate cuts for your story to play out the way you want it to?
Rate cuts are lower tenure. I mean, if the tenure just magically went down, which almost never does, but we think that we're going to get weak data. The labor report will be indicative. It's very volatile, so it could be misleading. But we've seen claims weaken. So we think that there'll be an anticipation of a September cut. And in July, they probably won't cut, but they'll be more dovish and lay the groundwork for cutting, which should power a rally during the summer.
So payrolls, Neil Dutta this morning was saying only 2 data points matter, payrolls and inflation. I guess PCE, right? Because that's what the Fed says is their preferred measure.
Yes.
We're going to get that. How do you see inflation trending? Continuing the downward trend? Did we just see a pop that was out of place in the beginning of this year?
We absolutely believe that. Oil is a great short-term indicator. It was way up in the first quarter. It's way down in the second quarter. So, and PCE is going to be 2.6, so that's low enough for the Fed to cut. All they need now is a labor market to clearly soften, and even Mary Daly mentioned that a couple days ago. So there's early signs that the Fed will figure this out and at least indicate in July that they're going to cut in September.
One of the things I thought was interesting from Bowman's speech a couple of days ago when she first said, you know, the risk to inflation is higher, no need to cut right now. I know she's only one, you know, governor, member of the Federal Reserve Board of Governors, but she said that the amazing amount of immigration that we've been getting, the floods across the border, have really boosted the supply of labor, and that the new restrictive approach that the Biden administration is trying to take, the restrictive approach that you know President Trump is going to take, or if he's elected, will kind of goose the labor market a little bit. How important do you think the November election is?
We think that the election will be fine for the stock market. The most likely case, when you look at all the probabilities, is we have divided government. House may go to the Democrats, Senate to the Republicans. That's the way the math looks. And I really don't know on the presidential turnout is critical because nobody's going to change their mind. So if we have divided government, we'll have lower government spending, more stability. We'll have the opposite of Europe, where you have a parliamentary system and there's a huge change in policy. So we should have gridlock, which is good for stocks because rarely do federal government policies help corporations.
Lower spending, you mentioned. There's been a lot of talk about deficits recently. Bill Dudley is out with a column on the Bloomberg saying there is a reason to worry about it. Steve Weissman was on Surveillance yesterday saying he doesn't care. I've talked to Ed Hyman, who says the bond market doesn't care and the dollar doesn't care, and we just hit a fresh high for 2024. I don't care. Do you care?
Well, we care. Our estimate is that running these irresponsible deficits chops about 1% off of potential U.S. growth because savings equal investment, so higher government spending crowds out investment. But in terms of growing at a normal 3%, we don't think it's going to affect it. And the most important thing is not fiscal policy, but monetary policy, global monetary policy. If we get these rate cuts, we're estimating $2 trillion of injection in capital. And so that's way more important than our normal kind of 5-ish% budget deficit, which we've been running for 20 years since Clinton was president. So that's just normal, standard incompetence at the federal government.
Jay, thanks so much for coming on. Really appreciate your candid take there. Jay Hatfield of Infrastructure Capital Management. They recently raised their S&P target to 6,000, joining ISI, Julian Emanuel, on that bullish note. Coming up, betting big on commercial real estate.
So the good news for commercial real estate is, and this very good news, is valuations have stabilized. It's a big market, and there's lots of really attractive deals to do. That's the good news. The bad news is that there's about $1 trillion of this debt that's upside down, where there's no equity value left.
Yeah. That's not bad news if you're buying. We'll speak with Namdar Realty Group CEO Igal Namdar next on the firm's most recent big purchase. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
This is Bloomberg.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
So the good news for commercial real estate is, and it's very good news, is valuations have stabilized. It's a big market, and there's lots of really attractive deals to do. That's the good news. The bad news is that there's about $1 trillion of this debt that's upside down, where there's no equity value left, and the creditors have to work through this process of workouts.
That was Marathon Asset Management Chairman and CEO Bruce Richards. Another New York City office building was sold at a steep discount amid the deepening commercial real estate crisis. Empire Capital and Namdar Realty Group agreed to buy an office building owned by Related Fund Management for less than $50 million. That's roughly a 67% discount. Quite a deal. Joining us now is the man who made it, Namdar Realty CEO Yigal Namdar, along with Bloomberg's Abigail Doolittle. And Abigail and I, Yigal, have been fascinated by this pocket of investing and by what you and your company are doing here. I got to ask you first about Bruce's comments that valuations have stabilized. That seems fairly optimistic after you do a deal like that. What are you seeing?
I mean, I agree that this should be the bottom of the market. It should be towards the bottom, at least. You know, we're right in that level, and I think that the big issue is going to be all this debt. I said that I believe that most of the CMBS that was placed pre-COVID on assets that are not top tier, I would say A-plus buildings, anything outside of that, majority of that is on the water, you know, and lenders are working whether they want to take it back, whether they want to make a deal with the sponsor, and just there's a lot of problems right now in the office space.
So in this kind of environment where you can buy an office building at a 67% discount from a major player, I mean, a related affiliate, that's pretty incredible. It speaks certainly to your negotiating skills. But what is the process? Are they coming to you as a buyer of last resort, or are you scouting out buildings that are of interest to you where you know the debt is underwater, that there's some kind of problem?
So right now, the best way to purchase these assets is through arm's length transaction with brokers marketing it. This was a short sale, so the banks want to go through the process of vetting out all the buyers and see who's the best buyer, who's willing to pay the most, and the surety of close. And we've built a great reputation over the years of...
Surety of close is key, right?
Yes, yes. And us being able to do our due diligence up front and sign hard deposits and close immediately gives us an edge in this market, because we've been waiting for 20 years for this moment, when others were, we were fearful when others were greedy, and now we're greedy as others are fearful. That's a very smart man said that. And now it's our time to go out there. We're very liquid, and we want to be able to take advantage of this situation, correct?
Yeah, so that discipline is really paying off now. Talk to us about that liquidity. Is that really just from having built dry powder? And also talk to us about the connection with NAMDAR. Does that help you with financing?
Yes, so we've been doing our thing. When New York City prices were very high, we wouldn't be buying stuff. We would be buying our retail throughout 38 or 39 states. And we're well diversified in that area. We still have, that's our core business.
Your retail space, the mall business.
Malls and shopping centers. But now we've seen the prices of these office buildings have dropped so much.
It's been 10 minutes time now at the top of the hour. Do you see the release of the US May new home sales units? Forecast 0.633 million on the prior 0.634 million. The range is 0.675 to 0.607 million. And the change is forecast at minus 0.2% on the prior minus 4.7%.
We're able to buy these at a steep discount, which helps with making money. Secondly is we can
seeing a report that China and Germany sign a memorandum of understanding on cross-border data flows.
Improvement work, to do the base building work, to modernize the lobbies, modernize the elevators, all this stuff that needs to get done in order to sign up tenants. Not only we can help to keep our tenants by being able to pay and invest in the tenant improvement work.
Protect your trades
also being
from
able to buy new tenants from other buildings that are
only $99 a year. I know that's a big chunk of change, right? I'm looking at deals that you're doing for 100 million, 150 million, 170 million, but you still have to add, I'm guessing, $10 or $20 million to refit these offices so you can get new tenants in there.
Yeah.
How much are you looking at on average in terms of refitting?
So, it's a very capital intense business. And I think for that reason, our strategy is you have to buy the better buildings. You have to buy outside of New York, we're focused on A assets, the top 3 or top 5 buildings in that marketplace, because the tenant improvement work doesn't change whether you're in a C building or an A building. The sheetrock and it still costs around the same. So the payback is way better if you own the better assets, and it is intense, and that's why we have to buy these assets at a steep discount.
So I have to ask the question I think everybody wants to know. You're talking about the steep discount. Bruce Richards talking about the idea that we're at the bottom. What are we talking? On 3rd Avenue, can you buy a building 25 cents on the dollar of what it was for B and C, or what kind of discount is it? Where are values?
I would say it's relative. An occupied building on 3rd Avenue pre-COVID versus a vacant building today on 3rd Avenue could be more than a 75% discount.
More than 75 cents. So are we talking 15 cents? I mean, that's incredible.
There are assets that are vacant that may sell in a double-digit price range.
Wow.
Under $100 or right around that range.
Wow. It's still a lot of money, though, that you're spending, right? I mean, where are you getting the financing? Are you working with banks? Are you selling bonds? What markets? How's it look?
So in our situation, we've always believed in low debt. So we don't have a lot of debt on our balance sheet. We have a good cash flow. And banks would finance us because they know we don't over leverage it. And we're willing, in some cases, to give personal guarantee on some loans, while others want to do a non-recourse loan, which is almost impossible in office space today. We also have an Israeli company. We're public in Israel as well. So that also helps with them build up our trust over the last, I would say 7-8 years. And, so we're able to have access to Israel money as well.
Igal, thank you so much for coming in. It's so great to get your take on this market because it gives us an insider's view that otherwise we wouldn't normally have access to. And Abigail, great reporting on commercial real estate as well. Abigail Doolittle and Igal Namdar from Namdar Realty. Coming up, the market moving events that you need to be watching this hour. There's a lot going on. That's next in our trading diary. This is Bloomberg.
names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
Time now for the Trading Diary, what you need to be watching today and next week. We're going to get new home sales at the top of the hour, then a Treasury auction on $70 billion of 5-year notes this afternoon. Very interesting to see as we get the sell-off in 10 years today, pushing yields higher. Micron, as we've been telling you, reports after the bell. Very big deal in AI, so we'll see what they have to say. Tomorrow brings the first debate between President Joe Biden and former President Donald Trump. We're going to round out this week with the all-important inflation number, the Fed's preferred gauge of inflation. The PCE comes out on Friday, and then, of course, next week, we're going to get the non-farm payrolls number, the granddaddy of all economic statistics. This has been the Countdown to the Open. I'm Matt Miller. This is Bloomberg.
Just keep in mind at 10 a.m. Eastern Time, we see the release of the US new home sales units, forecast 0.633 million on the prior 0.634 million, with a range of 0.675 to 0.607 million expected. The new home sales change, forecast minus 0.2% on the prior minus 0.47%. Apologies, the prior minus 4.7%.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays
1 minute
strong
remaining.
and
I'll
that we are
lead with the US new home sales
there
units.
There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Ten seconds.
We are 30 minutes into the U.S.
trading day on this Wednesday, June 26th. Here are the top stories we're following. Rivian's Lifeline, Volkswagen commits
0.619 million, 0.619 million, lower than forecast, 0.633 million. The change at minus 11.3%, minus 11.3%, lower than forecast, minus 0.2%.
Dr. Pepper is now the second most popular soda brand in the U.S., overtaking Pepsi for the first time in at least 4 decades. Keurig Dr. Pepper CEO Tim Coffer joins in just a bit. And a new era for Business Week. Editor Brad Stone joins to discuss the magazine's new monthly format.
The US May median sale price was $417,000, which is down 0.9% from the May year over year, which was $421,200.
I'm Katie Greifeld in New York. Welcome to Bloomberg.
We have posted out the US new home sales May report on the feed for anyone interested.
Out there, the S&P 500 currently off by about 0.1% or so. You take a look at the NASDAQ 100. It's slightly higher if you're an optimist, but you could also call that unchanged. And meanwhile, it's the small caps, those little stocks that are the biggest loser today. The Russell 2000 currently off by about 0.4%. But let's talk about a big winner, at least for one day, because shares of Rivian getting turbocharged after announcing a $5 billion pact with Volkswagen. Now, this deal gives VW access to Rivian's technology, while Rivian gets a much-needed infusion of cash. While Wall Street clearly celebrating the deal, you have Sophie Lunge-Yates. She is head of equity analysts at Hargreaves Lansdowne. She says to pump the brakes.
This is a huge sigh of relief, really, rather than a cause for celebration. Yes, it's good news. We know that the EV market, long-term wise anyway, is certainly something that's meant to be.
So seeing the prior revisions for new home sales, prior was revised to 0.698 million from 0.634 million.
Tesla is doing, and particularly some of the players over in China as well.
That's the change, also revised up to 2% from minus 4.7%.
Ed Ludlow. And Ed, of course, a different sort of opinion on Rivian shares, which of course are skyrocketing at right now. But put this into context for us. I mean, how substantial is this for Rivian going forward?
Yeah, the overwhelming response from investors that I've spoken to, and actually a lot of staff of Rivian as well, is that it de-risks the balance sheet issue, right? A lot of people have focused quite singularly on Rivian's rate of cash burn. As recently as the first quarter of this year, they're still losing about $40,000 for each vehicle they build. And it's interesting because they have a lot of commitments in terms of spending capital. So they're going to launch the new product R2 from Illinois, but they had pivoted the launch of that vehicle away from Georgia. At the same time, they remain contractually committed to investing $5 billion in the Georgia plant by the end of the decade. So I guess that's all to say it's not that much money, but it is a huge vote of confidence, if not just from a brand and association perspective, by VW into Rivian's technology and competence.
And let's talk about the Volkswagen side of things, because Volkswagen, I mean, they've made some massive commitments over the next couple years, the coming decade, to the EV space.
So, like, Volkswagen's just not very good at software, frankly. They've had major issues with Cariad, which is the unit that they set up to work on software, and it's not gone very well. And they've spent a lot of money on it, so now they're going to spend some more money on Rivian, who are very good at software, by all accounts. I would focus on the structure of the deal. So in the first instance, it's a $1 billion equity investment in the form of an unstructured or unsecured convertible note due December 1st of this year. And then a promise to buy $1 billion of equity each year in 2025 and 2026, though the timing's not certain. So think about this. If Rivian's share price goes up and continues to go up, then it will have a less sort of dilutive effect. And therefore, the net, you kind of have to ask yourself, well, how much of this company is VW going to end up owning? And kind of what's ring fence? And that's before you get to the idea that they've set up a JV. And Rivian's not got a great track record in JVs, to be honest with you.
All right, Ed, really appreciate your reporting. I'm sure you're going to be all over this, of course, on Bloomberg Technology at 10 a.m. We'll see Ed then. But stick with us now. Let's turn to the broader markets, because we're joined now by Nancy Daoud. She is Ameriprise Financial Private Wealth Advisor. And Nancy, I want to start with a stat from yesterday's market that really surprised me. You take a look at yesterday's rally. It was supported by only 113 of the S&P 500 members rising. That is the second weakest breadth for a rally so far this century. How are you thinking about a stat like that and the fact that this rally is so narrow?
Well, this is the time of year, in the middle of the year, when we look at what's been happening in the first 6 months, and we think, is the glass half full or is it half empty? And we tend to lean towards the half full, with some optimism towards the inflation report coming up on Friday and potential upcoming monetary easing via rate cuts, and of course, big tech performance, as you just noted. It is a little concerning and unnerving that the broader S&P has lagged behind, but that presents an opportunity, and maybe that will change in the second half of the year.
But what would be the catalyst, Nancy? I mean, that's what it always comes down to, right? What is actually going to spark that broadening out? We've been waiting for it and waiting for it. We've seen glimpses of it now and again, but nothing's sustainable. I mean, what is finally going to be the spark?
Well, it's just optimism. Investor sentiment changes when they see, the market going up. However, that's really a kind of a word of caution, because markets don't continue to go up indefinitely. There's always going to be some kind of a blip or a correction along the way, and investors tend to forget about that. But I would say be very selective and really focus on quality and personal goals and objectives, as well as risk tolerance. That's always the biggie. Risk tolerance is very important, because we get all hyped up over what's happening with a handful of stocks, and we forget that things could turn very quickly.
And I appreciate that point, that it really depends on your personal goals. What are you trying to do? Are you trying to build wealth? Are you trying to day trade? It all comes down to your personal goals. But for that thought, though, on quality, that it's time to focus on quality, what does quality mean in this market?
Well, earnings, obviously, that's always the word for quality, but also, where is the market going in general? We have to look for opportunities, perhaps in sectors that have taken a big beating, things like small cap stocks, longer duration bonds, but both without further volatility before they really take off. But these are some of the areas where I would look for opportunity. And keep in mind, again, what the time frame is, because that's going to be very important to those sectors.
And I do want to talk a little bit about tech, because for so many people, quality just means tech. And of course, your focus on earnings there, it feels like tech is really the only sector that's delivered in a big way when it comes to the earnings front.
And that is true. It's dominated the market, and it is very exciting what's going on here. I mean, I happen to be in my Palo Alto, California office this week, and I'm right in the heart of all of this hype and excitement. And the best advice I've been giving our clients here is that you need to take some money off the table. Everybody associated with a big tech company has oodles of stocks. And it's become way too large a percentage of their net worth. And when that happens, it's time to take some money and run, as I call it. And I think that's a prudent way to do it, because you're still participating, but now you've got something in your hands. And as for the taxes, we all expect taxes to go up, not down. So if you're waiting, you're just going to wait to pay a higher tax later, probably. Of course, I can't predict that, but that is certainly a consideration as well.
Well, on the topic of taxes, of course, we are just months away from the 2024 presidential election. We have the first debate this week between Biden and Trump. And it's interesting, you take a look at your notes and you say to take politics out of your portfolio. And even with that in mind, I mean, how are you preparing for the potential volatility around that fact?
That's probably the biggest question I get in every single client meeting. Everybody's talking politics, of course, because it's the buzz right now. But it's exactly correct. Take politics out of the portfolio, because in the end, it doesn't mean that much. The sectors that have continued to do well under every administration, former President Obama, former President Trump, and the current Biden administration were, technology, financials, healthcare. They continue to do well. And the biggest differentiator really is the energy sector. and mainly because the energy sector tends to be tied more to geopolitical risk. And we certainly have a very, very big amount of geopolitical risk at this time, and that will probably affect the energy sector. But the sentiment will be, maybe the day after the election, a day or two of a lot of, feelings around it, and then it's going to be business as usual after that.
All right, so the business as usual with maybe some volatility and geopolitical risk in the meantime. Nancy, really enjoyed this conversation. Appreciate your time today. Our thanks to Nancy Daoud of Ameriprise Financial. And let's take a look underneath these markets right now and what's moving them. We're going to do that with Bloomberg's Jess Menton. And Jess, we were just talking about tech. Tell me about this chip maker AMD.
So actually, I was taking a look at Micron Technology specifically because they report after the closing bell today. But of course, AMD, if you're thinking about the Philadelphia Semiconductor Index, if you're looking at the stocks, obviously moving higher in Micron Technology, up about 1% ahead of those results. Of course, this is big because, as you know, Katie, earnings season really doesn't get started until the middle of next month, but then we don't actually hear from NVIDIA until August because it tends to report a couple weeks after a lot of the other big tech companies. But this matters because it's a memory chip maker. It does supply those to NVIDIA. So what does this mean? And especially if that gives us insight to the AI story after the bell.
That exposed my own bias. I think of NVIDIA and everyone else. Of course, we're talking about Micron. And of course, earnings season, it never truly ends or starts, but looking forward to those earnings. Tell me about Whirlpool, though, because we were talking about double-digit gains in Rivian. Whirlpool having a good day as well.
Right. So this stock up about 14% right now. So it's on pace for its best day since March of 2020. So conveniently enough, that was obviously during the height of the pandemic, and a lot of people were working on decking and trying to sort of revamp their homes when everyone was stuck there. But when you're looking at this, the reason it's higher, Robert Bosch, so this is a privately held industrial firm in Germany. They actually, and this is Reuters that reported this, they're considering weighing a potential bid for Whirlpool. If you are looking at that stock, obviously, like I mentioned, still higher here this morning by quite a bit, but still, to put this into context, still remaining under pressure because it's in a downtrend of right around below $100, so down 18% year to date despite this big move today, but nonetheless, another stock to keep a close eye on.
And bring it home, let's talk about General Mills because good reminder that it always comes down to the outlook.
That's right. So especially with consumer packaged good companies, because this can give you a lens into, and this is something that Tom Barkin from the Richmond Fed has talked a lot about when it comes to price to mix and volumes, because a lot of these companies, not just General Mills, but other consumer packaged good companies have had to deal, even with lower volumes the past couple of years, they were able to pass on those costs, but they're not able to do that quite as much because clearly it's pinching the consumer, and you can see this when their outlook for organic sales for this year is about flat to about 1% for the fiscal year. So Jen Portashis over at Bloomberg Intelligence is looking at how General Mills and then other consumer packaged good companies, if you want to look at, say, Mondelez, Conagra, companies like that may have to start having better deals, say like 2-for-1, things like that, Katie, to potentially pass that on. But again, if they don't, that's really something that has weighed on their margins and obviously their stock prices. So that's something that she in particular is looking toward in the second half of the year, Katie.
Yeah, and you can see all of that working its way through shares this morning. Bloomberg's Jess Menton, really appreciate it. And we're going to stick in the food and beverage industry next because Dr. Pepper prevails, the soft drink overtaking Pepsi as America's second favorite soda brand. We speak to the CEO of Keurig Dr. Pepper next. This is Bloomberg.
From our world headquarters in New York, I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg, Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Are you a pepper? It seems like a lot of folks are these days because Dr. Pepper is coming out on top of the cola wars as it beats out Pepsi to become America's second favorite soda brand. That is according to Beverage Digest. And I am thrilled to say that joining us now is Tim Kofer. He is Keurig Dr. Pepper's CEO. He is joining me right now. And you take a look at this growth that you've seen. It's been very, very steady over the past 20 years. That includes at least one recession, a pandemic as well. Tell me how Dr. Pepper engineered this steady growth that we've seen over 2 decades.
Yeah. Good morning, Katie. Thanks. I tell you, I'm so proud of what our team has
So
done here.
pollster IFOP sees the far-right national rally in France reaching 36% of the popular votes ahead of the first round of French parliamentary elections. So again, this is taking place on Sunday. There's also a televised debate happening in France tomorrow regarding
In
this.
the U.S. since 1885, developed right here in Texas, and over the generations has continued to be relevant year after year. It's a unique,
Do you want to
one-of-a-kind
stay up to
taste
date
that's
with the
like
latest and
nothing
be
else,
on the
right?
bleeding
Backed
edge
up
of
by
news
those
for non-farm
23
payrolls?
flavors.
Then sign up
And
today
our
and get our
marketing
special
team does an
offer of
amazing
Financial Juice
job
Pro
of really
for a year's worth of our
tapping
service
into
for the
current
price
culture
of
to
1
play
month.
off that
and save
uniqueness to
92%.
bring people together over at Dr. Pepper. And you see that in our marketing campaigns with college football, things like Fansville, our current campaign, It's a Pepper Thing. You see it in our innovation. I've got a few here in my office behind me. Last year, Dr. Pepper Strawberries and Cream, #1 carbonated soft drink innovation in the industry, $300 million in sales in the first year. And following it up this year with one of my favorites, Creamy Coconut, which plays into that whole dirty soda trend that you see out there. So just some amazing marketing, sales activation, and innovation that led to this exciting milestone.
Well, that's exactly where I want to go because, of course, we're familiar with Dr. Pepper's work when it comes to marketing in college football, but you're also having a viral moment when it comes to TikTok. Of course, people are putting pickle juice with Dr. Pepper. I haven't done that. There's also the Dirty Dr. Pepper out there. And I'm curious about how one sort of engineers a viral moment. Is that something that you sort of built to happen, or was that just a stroke of luck?
So we're looking now to the Fear and Greed Index, 42 out of 100, which indicates fear. Crypto Fear and Greed Index at 46 out of 100, also indicating fear. We're keeping an eye on the VIX as well. It's currently down just 0.8% at around 12.95 points.
Understanding kind of the trends, what's hot and what's moving, and then immediately tapping into that cultural moment with our brands. And a brand like Dr. Pepper is a perfect platform for it. Our consumers love this brand. They're so engaged in this brand. And so moments like that, Dr. Pepper with pickles, dirty soda, etc., we tap into it, we innovate against it, we market against it, and it just amplifies already that passion.
The Dirty Dr. Pepper, it does sound good. We're talking about lime juice, coconut creamer, some alcohol as well. Maybe that's on the menu for later. But I want to talk a little bit about the rankings here. Of course, you just edged past Pepsi when it comes to brand popularity. Coke, though, has a really healthy lead. I mean, 19-point-something%. But when you think about the future, I mean, is Coke in your sights? Is that the goal?
Yeah, look, I mean, we are today the third largest beverage company in the U.S., and Dr. Pepper, again, this milestone of becoming the #2 in soda is a huge moment for us. I feel great about this advantage platform that we built at Keurig Dr. Pepper, and it is around, you know, our brands. We have 125 own licensed and partner brands, but one of our keys is really an advantage route to market. We're one of only 3 national DSD or direct store delivery distribution systems in the U.S., and that gives us incredible power. We cover over 80% of the U.S. population through our own DSD, and then we cover the rest through partners. That gives us power right to that critical moment of truth at the point of buying, and I think that will continue the trajectory we've seen. Dr. Pepper has grown share for 7 consecutive years.
So in 10 minutes time now, at the bottom of the hour, see the release of the weekly EIA inventories numbers. Crude oil inventories forecast sees a draw of 2.82 million on the prior draw of 2.547 million. The range sees a draw of 1 million to a draw of 3.048 million expected. For the gasoline inventories, the forecast is a draw of 1.5 million on the prior draw of 2.28 million. Distillate inventories forecast is a draw of 1.05 million on the prior draw of 1.726 million. Inventories of crude in Cushing, prior was a build of 0.307 million.
$40 billion category here. Last year it grew at 9%. This year
it's just making note of the API private crude oil stock change, which came out last night after the close, which showed a build of 0.9 million on the expected draw of 3 million. So again, API crude yesterday did come out at a build on the expected draw. There is some correlation between the prints.
Choices. That includes zero sugar. You know, that's one of my favorite, Dr. Pepper Zero Sugar. And of course, we continue to look at the evolving marketplace. I think we've got a great reputation as a preferred partner. You'll see us innovate into these spaces, including into health and wellness subsegments. And you'll also see us partner and acquire in those spaces. So we're always on the lookout for great growth pockets here at KDP.
And I want to couch this conversation in the broader economy right now. As I said, of course, Dr. Pepper has been around through many, many cycles in its 140-year history. But right now, you have inflation still a problem for many Americans. And Dr. Pepper is one of those companies that has been pricing or passing along those costs increase. And I'm curious where you are right now when it comes to pricing power and how you're thinking about your pricing strategy.
Sure. Well, our brands definitely are strong, and I think that brings a level of pricing power in the marketplace. What you saw coming out of COVID and with all of the supply chain disruption, you did see some significant pricing really through last year, 23, where pricing was the primary component of our overall sales growth. You're seeing that beginning to rebalance in the first quarter. That we reported yet a vol mix number that was closer to the 0 line. And as we go into the back half of the year, I think you're going to see a recalibration around price and vol mix, where vol mix is going to play a bigger component in our overall sales algorithm. But, you know, regardless, we remain committed to a mid-single-digit top-line growth on the year and high single-digit EPS growth.
And we should also talk about coffee. Of course, that's about a third of your sales. And you think about some of the concerns out there. One of the concerns is weakening demand basically for home brewing. And when it comes to that particular segment, are you seeing stabilization there?
Yeah, you know, here at Keurig, we're the pioneer and the preeminent single-serve coffee system at home. Coffee, consumers are highly engaged with coffee right now. Aside from water, coffee is the single most consumed beverage in the U.S. And just last year, it hit a 50-year high. What we're seeing right now actually can play to our strengths. We're seeing a challenged consumer, particularly around the low and mid-income ranks. And the value proposition of a Keurig cup of coffee, particularly in the broader frame of away-from-home coffee shop behavior, is significant. And that's one we're playing into. We're doing that through, obviously, price and promotion strategy, price pack architecture to get a good price value for the consumer and right outlay. value marketing to be clear to consumer that you can have, for the price of one Monday cup of coffee away from home, you can have Monday through Friday with Keurig at home. And then we're really innovating in this space. Cold coffee, our biggest push into cold coffee, which is obviously a huge trend with a new brew and chill brewer, great pods that make cold coffee, premium coffee expressions. And then we announced an intention to launch a revolutionary new system that includes plastic-free, aluminum-free pods that'll even make a high-pressure espresso. So we're really innovating into this space, and that's why we remain bullish on our
Yen
coffee
sliding
business.
against the euro to the weakest level on record.
With you, but I want to talk about your career a little bit because you're new to the top job over at Keurig Dr. Pepper. You only took over in April. You joined the company in November as COO, but you have a long career when it comes to consumer packaged goods. We're talking Mondelez and Kraft, of course. I'm curious, from those other companies, that industry experience that you have, what lessons are you bringing to Keurig Dr. Pepper?
Yeah, thanks, Katie. Yeah, look, I only joined this company last year, but I do bring over 30 years of experience in CPG. And, a couple observations. I mean, one is this beverage industry is a great place to play. Within CPG, I think beverages are the most dynamic part of CPG, consistent pockets of growth. Within beverages, KDP is an advantage platform, and that's why I joined this great company. We've got incredible brands. We've got incredible route to market strength, and we have a winning culture. I like to call it a challenger culture. We're hungry. We like to play offense, not defense. We like to disrupt, and I think a great example of that is what you've seen with brand Dr. Pepper.
All right, Tim, hope to keep this conversation going soon. Really appreciate your time today. That, of course, is Tim Cofer. He is the CEO of Keurig Dr. Pepper. Meanwhile, we do want to bring you some breaking news in the currency space. You take a look at the yen right now sliding to its weakest level against the euro on record. We're going to continue to watch that one. This is Bloomberg.
You have to distill down what is the purpose of what you do, what is the purpose of your company, and make that very clear, and repeat it and repeat it and repeat it. And it's very clear what our purpose is to make money for the Norwegian population.
So why did you accept the job? You had a great life. I mean, you had a hedge fund that was doing very well. You were earning lots of money.
Well, I had a great life. I had a great life, but I still have a great life, and a really good life. No, I was very keen on that job because one, I think it's one of the most important positions in asset management, right? I love asset management. In terms of the opportunity to develop that organization further, there were great opportunities, and I love organizational development. And then to do something nice for the country. I mean, these three things came together in the same job.
Why do you love asset management? Because you can influence and change the future, or is it being cleverer than anyone else?
Asset management is the most interesting job in the world, perhaps after being a journalist. Why is that? Well, everything you eat, drink, drive, all these kind of things is made by a company. You need to understand psychology in terms of the companies. You need to understand the corporate culture of companies, and then these things change all the time, right? You have the macroeconomies changing.
1 minute remaining. I'll lead with the EIA crude oil inventories.
And the data points are just changing all the time. You just couldn't invent a more fascinating game, even if you tried.
Protect your trade from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
This is Bloomberg.
10 seconds.
Let's turn the spotlight now to a company that's helping to
A build of 3.591 million, a build of 3.591 million. That's larger than the expected draw of 2.82 million. Distillate inventory, the draw of 0.377 million, draw of 0.377 million. So that is larger than the expected draw of 1.05 million. Gasoline inventory, the build of 2.654 million, a build of 2.654 million, which is larger than the expected draw of 1.5 million. We're seeing a little bit of weakness in WTI crude prices following that larger than expected storage draw in crude inventories.
One of the biggest chunks is UAN, or urea ammonium nitrate. We can also see granular urea, a big piece, ammonia also about 27%. So here's a bit of a breakdown relative to the overall revenue. If we were to take a look at the revenue, let's take a look at this bar chart here, and the estimate for the second quarter here, $1.6 billion, very nice sequential growth, down just a little bit
crude
on a
Cushing inventory is a draw of 0.226 million, a draw of 0.226 million.
If we were to compare the clean energy space overall, let's take a look at what's going on here over the last year. You can see that CF Industries outperforming the clean energy index by to some degree, but both underperforming the S&P 500. So Katie, this gap here really creating a nice opportunity for CF Industries.
All right, Abigail, really appreciate that setup. Let's keep the conversation going now with Tony Will. He is the president and CEO of CF Industries, joining me in person. Great to see you.
Katie, thanks for having me. Pleasure to be here.
So like Abigail, I am not a scientist. So I'm hoping that you can just explain in layman's terms how exactly this works, this decarbonization.
Yeah, so I'm not a scientist either. Hopefully we can get through this together. Essentially, when you're making ammonia, you're using natural gas and air, and then the byproduct is CO2. So we just signed a record-breaking deal with ExxonMobil where we're going to capture that CO2 and begin sequestering 2 million tons of it a year beginning next year.
According to a Dallas Fed survey, they say regional oil and gas activity rises modestly in the second quarter, and oil and gas production was little changed for Q2.
Also in the process of eliminating N2O, which is a potent greenhouse gas that comes off of some of our processes on nitric acid plants, and a variety of other smaller initiatives. But we have a goal of 2050 to get to net zero, and 2030 to reduce our total emissions by 25%. And I'm really happy to say that we are well on our way to achieving that intermediate goal.
And so how do things such as the U.S. Inflation Reduction Act and, of course, subsidies for decarbonization, how meaningful are they to you?
Yeah, it's absolutely critical. So we operate in what's commonly referred to as a hard-to-abate sector. We're energy-intensive, trade-exposed, which means we generate quite a bit of greenhouse gas emissions. And having some support from government initiatives to help us go about making the necessary capital investments to decarbonize our production platform is absolutely critical. We wouldn't be able to compete on a somewhat unlevel playing field with some state-supported companies out there without legislation like the IRA.
Yeah, that makes a lot of sense. And of course, you mentioned that partnership with Exxon. What other upcoming partnerships, projects are you eyeing at this juncture?
Yeah, so we also have an existing partnership with BP. We're buying certified low-slip methane from them, which means we're reducing methane emissions. Methane is also a very potent greenhouse gas. And we've recently signed deals with both Mitsui and JERA Corporation. JERA is the largest Japanese utility company, and what JERA is focused on is displacing coal production or coal burn to produce electricity using clean ammonia instead. So they can reduce their greenhouse gas emissions by about 20%, possibly moving up to 50% over time.
So we're talking about, of course, natural gas to ammonia. That conversion, as I understand it, is really foundational to your business. You think about the U.S., it's among the lowest cost natural gas markets in the world. And I'm curious how you see that evolving, of course, as we continue down this path.
Yeah. we couldn't be happier where our production facilities are located. Not only do we have some of the best reserves of natural gas, cheapest cost of production, but a very supportive legislative environment around being able to capture and sequester carbon. So it really puts us in an unusual position of being able to produce in large quantities decarbonized ammonia that the entire world is going to need. Ammonia by itself is NH3, so there's no carbon embedded in the molecule. Makes it a very clean fuel. So it can either be used to transport and store hydrogen or as a fuel in its own right. And it really is going to be an enabling technology as the world goes through the energy transition.
I also do want to talk about fertilizer and the prices that we're seeing. Of course, they've fallen from that cycle peak that we saw back in 2022, but you compare that to pre-pandemic levels, we're well above where we were in 2019 and before. And I'm curious how you're seeing farmers respond to what really has been a price shock.
Yeah, you know, there has been obviously some consternation on the part of growers. I would also say coarse grain prices have responded as well. So those things tend to move a bit in concert with one another. And fertilizer really is a global commodity. It is the same chemical formulation whether you make it here or in Russia or in the Middle East. And it is the sort of the last ton of production that gets bid in that sets kind of the global pricing. So we're not establishing pricing. It sort of, the market moves as it goes. And in general, even today, there is ample opportunity for farmers to make a good return on the investment that they make in the field.
And before I let you go, I am curious, with that global perspective in mind, I mean, what does the supply-demand balance for fertilizer look like right now?
Yeah, right now there is ample supply. We expect as we go forward, it takes about 4 years to build a new fertilizer facility, so you can look around the world and get a good perspective of how much new capacity is coming on. There are other places in the world that are running short of gas, Trinidad and challenges in Europe. So netting off what is likely to close, the normal demand growth rate in the industry is going to be higher than the amount of new capacity being added. So we expect that supply-demand balance to tighten over the next couple of years. That sets up a really constructive dynamic for our business.
Well, Tony, I'm still not a scientist, but I did learn a lot, so I appreciate that. Great to see you in person.
Thanks so much for having me. Appreciate it.
That, of course, is Tony Will. He is the CEO of CF Industries. Let's get a check on these markets about an hour into the U.S. trading day. We're going to do that with Abigail Doolittle.
So we're looking at the possibility of a third down day out of the last 4 days. Yesterday, of course, we did have a gain before that. 2 declines. The S&P 500 right now down slightly, down about 0.1%. One question is, will it be a value or a growth day? Yesterday, of course, we had this big rotation into growth. After a mini rotation into value, lots of uncertainty. Yields kind of yawning around it. The 2-year yield really not doing anything. Crude oil down about 0.3%. And then take a look at the big story here. The yen dollar down up 0.6%. The yen down 0.6%. Basically at levels that we have not seen in a very, very long time. Let's take a look at a long-term perspective of the yen dollar. So, of course, years ago, all you would hear about was how strong the dollar was relative to the yen. I'm talking about the 1980s. So we are at a level last seen in that area. And then we had this period of strength for the yen against the dollar going back to, let's call it right around the GFC. The yen really seen as a haven currency. So money flocking into the yen, interestingly at that time, also into the dollar because of that risk-off period. But here we are hitting up against that resistance. Take a look at this monthly RSI or momentum indicator, Katie, going to the downside, maybe suggesting that that resistance will hold and we will start to see the yen strengthen. Of course, there is some thought that the BOJ, that there could be some tightening later this week. As for some of the movers beneath the surface, FedEx up nearly 15%, its best day in 2 years. They, of course, beat estimates on a slowdown in the decline of their parcel business. They're also talking about the possibility of a divestiture of their freight business. They're consolidating some of their other businesses, a $2.5 billion buyback. Investors liking it. Rivian soaring up 27.4% on the $5 billion deal with VW to create EV vehicles and software. And then the odd stock out, and this one flipping on the day, but it's an important one, Katie, is the third largest weighting to the S&P 500 and the NASDAQ. NVIDIA, after being in a correction over 3 days, yesterday up almost 7%, now down. Technically, it does look like we could continue to see NVIDIA take a little bit of a breather. Maybe some folks taking a second pause, or thought, I should say, around the AI craze.
Yeah, that volatility that we're seeing in NVIDIA really striking. Appreciate that update, Abigail Doolittle. And as we head to break, let's take a listen into Ares co-founder Michael Arrighetti, speaking now at the Bloomberg Invest Conference in New York City.
About rumors specifically, we've been quite acquisitive, as you know. So if you look at our growth, 20% of our growth over time has come from some kind of M&A. I have a very strong view that these markets will continue to consolidate. And the reason that they're going to consolidate is from the manager's perspective, there's huge benefit to scale. Right? The larger we get, the more people we can have, the more people we have, the more deals we can do. The more deals we do, the more information we get. The better information we get, the better our investment performance, and then we get more AUM. And so there's this virtuous circle and cycle that scale creates in private markets, and people are beginning to see that. Investors are putting more of their dollars with fewer managers because they see that opportunity for outperformance.
All right, that of course was Michael Arrighetti of Ares speaking with Sonali Basak at Bloomberg Invest, and you can continue to watch that conversation on your terminal at LiveGo. This is Bloomberg.
Maybe 20 managers to try to drive efficiency and deeper partnership. And the markets are global and globalizing. So a lot of the things that we learned, let's say,
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
Well, it's time now for our daily Wall Street Week conversation. And Evercore founder Roger Altman was among the executives who met with President Biden last month. Altman spoke with David Weston about the sentiments among Wall Street insiders regarding the government's role in the economy.
I served twice in the Treasury at length, and part of my responsibilities involved interacting a lot with business. And the business community always wants certain change. That's the nature of that interaction. There'll never be a period where business says, we give you a score of 100%, we like every single thing you're doing, it's all, you know, we're great. They'll never do that. So it's the nature of it for them to have some things they'd like to be changed. Now, I think you put your finger pretty well on it. The macro, from the business community's point of view, is very good. As you say, at this very moment, all the major stock indices are around all-time highs. The last few weeks have been a pretty major rally in fixed income markets. The yield on the 10-year Treasury is about 40 basis points lower than it was 3 or 4 weeks ago. That's a pretty big change. And we're still seeing consistent growth, as I mentioned. So the macro, from a business community's point of view, is good. Yes, there are a lot of people in the business community that think the Biden administration is doing too much from a regulation point of view. They don't like the stance of the FTC and the Justice Department, for example, on antitrust. And some, of course, in the energy industries don't like some of the regulation that the Biden administration has promulgated in that area. However, sitting CEOs, David, of major companies do not, as a rule, endorse presidential candidates. That's not new. They don't historically do it. And by the way, today, most boards of directors of major public companies wouldn't permit their CEO to make an endorsement of a presidential candidate. So they're not going to take a position publicly one way or the other. But when they look at the Trump agenda, I think a number of them don't like it. And let me be specific. The two, well, the New York Times published, I thought, quite a helpful and concise summary of their understanding of the Trump agenda about a week or 10 days ago on the front page of the Times. And the first two items were deportation and tariffs. So let's talk about those. And we'll start with tariffs. So President Trump is proposing a 10%, a new 10% tariff on all imported goods, with a 60% tariff specifically on goods imported from China. The impact of that, according to the Peterson Institute for International Economics, which is nonpartisan, would be $1,700 per average American family. Think about that a minute, $1,700 a year. Now, if you want to ask, and I haven't done this, but I'm pretty sure I know the answer, the CEOs of companies like Walmart or Procter & Gamble or Costco or Home Depot, whether they think that's a good idea, their answer is going to be, in private, absolutely not. Then, on deportation, President Trump is proposing to deport a little over 11 million individuals currently living in this country on an undocumented basis. Well, the problem is that most of the adults, I'm sure it's about 80% or 90% of the adults in that cohort are working. Now, we have a 4% unemployment rate today, and many corporations say publicly that they can't find enough workers. I recently heard from the CEOs, for example, of Marriott and Bechtel to that effect. So the idea of taking, let's say, 8 million workers out of the country when we have a labor shortage already is an economically destructive one. And if you were to ask in private CEOs what they think of that, most of them, I can't say all of them, would say, no, that's a terrible idea. So in terms of the Trump agenda, I don't think there's a lot of support. Although, of course, it's a big community, the business community. There are some very conservative elements. And I'm sure there are quite a few who like the overall ideology of President Trump. But in terms of the economic platform itself, I don't see much support for it.
And that was Evercore's Roger Altman speaking to Wall Street Week host David Weston. Now coming up, the House of Arnault. We'll explore how French billionaire Bernard Arnault built his luxury empire and why he's not done shopping yet. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
French billionaire and LVMH founder Bernard Arnault has built an empire of opulence with 75 brands ranging from Louis Vuitton to the iconic champagne brand Dom Perignon. But he's not done shopping yet. Brad Stone, he is the editor of Bloomberg Businessweek. He sat down with Arnault at LVMH headquarters in Paris, and I'm pleased to say he's in New York right now to join us. It's great to see you.
Thank you, likewise.
Let's talk about just how wealthy Arnault is, because you have a great chart in the article that shows that his wealth is on par with Elon Musk and Jeff Bezos, but it feels like we hear relatively a lot less about, of course, Arnault.
That's exactly right, and it's why we featured him on this month's Bloomberg Business Week. Arnault has actually been the wealthiest person in the world for most of the year, according to the Bloomberg Billionaires Index. It was only until the French elections and the decline in the French stock market that his wealth fell a little bit. I think it's around $208 billion. He will be just fine, but I think you're right. I mean, his story is relatively poorly understood, particularly compared to the tech titans.
Well, help us out here. Tell us about LVMH and how he actually built this empire. I have to say, I was surprised that it was 75 brands.
It is, and look, a lot of them are going to be very recognizable. People may not know the name LVMH, but they know Christian Dior, Louis Vuitton, Bulgari, Tiffany & Co. they bought during the pandemic, Tag Heuer. It is a massive conglomerate in all elements of luxury and high-end travel and watches, fashion. He has really taken, unlike the tech titans who have invented our future, he has taken elements of European tradition and the past and brought them all over the world.
He must have a gorgeous wardrobe, one has to imagine. But tell me a little bit about what's next, because, I mean, as I said, not done shopping yet.
Right. In fact, actually, just today they announced an acquisition of Suiza, this high-end Swiss, intricate clockmaker. We reported in the story that he has acquired a small personal stake in Richemont, which is the owner of Cartier. It's significant because this is how he's operated over the past few decades. He is not the founder of any of these companies. I mean, he's an incredible operator. He's got an amazing vision for luxury, but he has acquired all these brands and brought them together in this conglomerate. And it has often started with these small stakes that he has purchased in companies, mostly successfully, but in cases like Gucci and Hermes, he has failed. And so he has said, you know, with regards to Johann Rupert, the owner of Richemont, that he wants to help him remain independent. But clearly, this is a 75-year-old guy. Everybody talks succession, but he has not done empire building.
So we're going to get to succession, but I am curious. I mean, we talk about him acquiring, but does he ever sell off stakes?
He has. It has been few and far between. The retreats you could probably count on one hand, but the number of times he's acquired and added to the empire, I mean, that's the through line.
I only have a minute left with you, but this quote really stuck out to me. I have 5 members of the family working in the group. Let's see if one of them has the capacity to take over.
It sounds like a French version of Succession, but there are some differences. I mean, his kids are extraordinarily accomplished. They are all in the business. They run different parts of it. And he has thought a lot about succession, and not just how to preserve the company through generations, but how to enforce kind of civility amongst his kids. I mean, by all reports, they get along quite well, but certain things like they're all equal owners of one of the holding companies, and they have to agree for a period of 40 years about all major strategic decisions.
Well, it's going to be a fascinating story to follow. Of course, a fascinating story to read on print and online. Our thanks to Brad Stone of Bloomberg Businessweek. And be sure to pick up the latest copy of the magazine. Of course, that's out on newsstands right now. Let's take a quick check of these markets right now. Of course, on this Wednesday, the S&P 500, we're pretty much treading water. You can see pretty much unchanged, maybe down a little bit when it comes to the S&P 500. A little bit of a different story when it comes to the NASDAQ 100. Big tech stocks finding their footing here, up about 0.2%. Can't say the same for those small caps. Now coming up, much more from the Bloomberg Invest Conference that's in full swing in New York City, but that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the Quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you?
I had actually run tech banking and took Google public, so I had a little sneak preview.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's at Bloomberg Invest, but this is Bloomberg Technology. Coming up, full EV coverage ahead as Rivian and VW forge a $5 billion partnership. Plus, the Supreme Court clears the way for the White House communicating freely with social media companies to seek the removal of what officials see as misinformation. And we go live to our Bloomberg Invest Summit, where heavyweights across the financial industry break down the most pressing issues facing investors. Right here, right now, let's get right to our top story, and that is a deal between Rivian Automotive and Volkswagen. The shares really taking off. In after hours, they were even higher on Tuesday night. Rivian, as it stands, is trading at its highest level since February. If it closes at this level, it will be the biggest gain one day on record, although I'd caution following the IPO in November 2021. We did see swings in excess of 50%, and it did not close near those levels. This is a company that I've covered very closely for years. I have to be honest that I didn't see this one coming. Basically, in the first instance, Volkswagen will invest $1 billion into Rivian in the form of a convertible, unsecured or unstructured note due December 1st of this year, and then commits to investing $1 billion in 2025, $1 billion in 2026, but we don't know where the share price will be at that time of Rivian, right? In return, they form a JV, but Volkswagen gets access to Rivian's technology, both software and some elements of the drivetrain or powertrain. This is a big one for the EV industry. Let's get into detail with Stephanie Valdez-Streety. Stephanie is the Director of Industry Insights at Cox Automotive. A quick disclaimer, Cox Enterprise, which is the parent company of Cox Automotive, is an investor in Rivian, and Sandy Schwartz, CEO of the Cox Family Office, a member of the Rivian Board of Directors. But we have Stephanie here for her expertise on this company, these companies, and expertise on this industry. So let's start with the basics. Stephanie, your reaction to this deal.
Well, Ed, I think what you hit it when you said this was an unexpected announcement, and it's making waves through the industry. And I think it's huge. It's a breakthrough moment for Rivian. As you know, we've been following Rivian also, and although they've made some really good progress in the market with their products, with their customer experience, you know, becoming profitable has been a big issue. And so this investment is huge. It's going to help them really get on that road to profitability, especially as they're trying to launch the R2, which is a very critical vehicle for them in terms of affordability in the marketplace and kind of in that segment where there's more volume. So I think this is a huge moment. And I think for VW as well, right? Having access to that cutting edge technology. And I think the opportunities for global expansion for both companies is really going to be a positive for both.
When the news broke last night, I took a few phone calls, and what was so interesting is very quickly, a few folks close to Rivian and at Rivian and elsewhere in the industry would point out to me, Volkswagen's software strategy has not gone that well. They kind of formed Cariad, the unit and the Cariad platform. I'm told they faced some major issues. How much do you think this is sort of Volkswagen reacting to that versus actually pretty much an acknowledgement that Rivian is good at software?
Yeah, I think it's Volkswagen's, acknowledging that Rivian has this cutting edge technology and it's going to really help them to scale. And I even think about broader, like if you think about the Chinese automakers and just kind of what the penetration that they've had and the technology that they've had. So I think this is going to really help VW, not only in the North American market, but globally as well. So I think they really saw that this is something that's really going to help their brand and really help them scale faster and more efficiently.
I have to be honest with you, Stephanie. Rivian's track record in joint ventures is not good. You know, I've been covering this company since the moment that RJ was on stage at the LA Auto Show and revealed to the world that he had a pickup and SUV. And within, 3 or 4 years after that, the Ford JV had been and gone. Ford invested $500 million in Rivian, and then they planned to build a Lincoln together. They scrapped it. They planned to build a joint venture EV together. They scrapped it. The Mercedes relationship on commercial vans lasted 3 months. How much of a cautionary tale is that for Volkswagen?
No, I definitely think they need to be cautious, especially in these two distinct companies, right? And they need to constantly make sure that their strategic goals are aligned. So I think to your point, it's going to be, it's going to be a long, bumpy road, but I think they're going to have to be very focused on making sure they're aligned. And kind of what you just mentioned about some of the failures in the past. So I think it's definitely a risk, right, that they need to closely follow and make sure that they're aligned.
You and I spoke very recently about market share. So Rivian is going to come to market in 2026 with the R2, and that probably will be a competitor for existing models like the Model Y. But at the same time, Tesla is ceding some market share in North America and other markets as more models join the market. How are you tracking that, and how do you see that going?
Yeah, I definitely see, it's all about product, right? Customers like new product. And with Rivian having the R2, R3, adding more vehicles into the marketplace, I think that's going to really, in terms of Tesla not having anything other than recently the Cybertruck and no definitive timeline for the more affordable vehicle, I think Tesla definitely has more and more competition. And not only with Rivian, VW, but other makes as well. So I definitely think Tesla is really going to need to get some product into the market to maintain that share that they've had for many, many years.
I've got a stat for you. For the 12 months through May, Tesla sold 618,000 electric vehicles in the United States. All of the other manufacturers combined sold a BEV 597,000. So at some point, I think we expect that to cross right. But the question it raises is one that RJ Scaringe has argued with me about over many years. He says that this isn't an issue of interest rates or tepid consumer appetite towards EVs generally. He argues we need more models. The more models we have on the market, the better the market will be. Do you share that thesis?
Yeah, I think we need more models, but more affordable markets, right? If we want mass adoption, we need to have more affordable models. Price is the top barrier for consumer adoption. And so as we have more and more affordable markets or models in the marketplace, that's going to help with adoption. So I think I agree with that. More models, but more affordable models is going to be critical.
Cast your eye to the future. What happens with Rivian, Stephanie?
I'm betting on them. I think they have a lot of good brand equity in the marketplace. I think the VW partnership is really a lot of great potential. And I think their collaboration can really evolve this whole connected, software-defined vehicle technology. And so I think it's promising. But like we just mentioned, I think they just need to be careful that their strategic goals are aligned and they're in lockstep to ensure success.
Stephanie Valdez, Streety of Cox Automotive. I just appreciate your insight, not just to Rivian and VW, which I think caught us by surprise, but the industry at large as well. Thank you so much. Okay, let's turn to some breaking news that's come out in the last hour. The Supreme Court cleared the Biden administration to communicate freely with social media companies in an election year which rules that bolsters the government's ability to seek removal of what officials see as misinformation. I want to bring in Bloomberg's Kaylee Lyons out of Washington, D.C. Kaylee, I saw the headline cross, and I've just read the intro to you, and I'm trying to understand the mechanics and bigger picture of this story. Explain it to me.
Well, Ed, technically this is a win for the White House. You're exactly right in that it leaves the door open for them to communicate freely with social media companies about content that they see as misinformation that could potentially be harmful to the public. This case all started with questions around the administration's activity with social media companies and trying to control information related to the COVID-19 pandemic and the 2020 election. And the plaintiffs in this case essentially argued that they overstepped the constitutional bounds of the right to free speech. The thing is, in this ruling, which was 6-3, the majority opinion written by Justice Amy Coney Barrett doesn't actually talk about the merits of the case. It's about standing. They essentially argue that the plaintiffs, which included 2 states and a handful of residents within those states, did not have the standing to be bringing this case because they couldn't demonstrate that they were directly injured by the defendants, which, of course, in this case is the Biden administration. So this is kind of similar to the mifepristone ruling we got earlier this month, where they didn't actually decide necessarily definitively on access to that abortion pill. It was just that the individuals, people that brought the case did not have standing, which is why they ruled in favor of keeping access to it. So it leaves the door open, Ed, for this question to still be raised again in the future, technically, by plaintiffs who may have more firm ground to stand on.
There's an interesting case of what happens next, because per the ruling, you know, the administration could go out and engage with the companies and talk to them freely. That is the top line of the story. Whether they do or not remains to be seen, because in October there was a temporary halt per the court. And as we keep pointing out, it is an election year. What does Biden and co do?
It's an excellent question, Ed, and we're just going to have to wait and see because, of course, all of this is going to be viewed through a political lens. There is a huge conservative thought in which the 3 ultra-conservative justices who dissented in this decision, Thomas, Alito, and Neil Gorsuch, that do think the administration may be violating the rights of free speech, specifically restricting the speech of the right and of more conservatives. And this is something that we see trickling through all through American politics at this time, all the way up to the presumptive Republican nominee, Donald Trump. So these decisions for the administration to be engaging with social media companies on what content can be propagated and seen by the people is very much politically tinged. And I would just note, Ed, it isn't just about what the administration does, but what social media companies themselves do. And I would point you to the fact that we are still waiting a ruling this term from the Supreme Court, so it should come within the next several days, on laws in the states of Texas and Florida that restrict the ability of the social media companies themselves to police misinformation, and the court has yet to rule on that particular question.
Bloomberg's Kaylee Lyons, co-host of Balance of Power. I watch Balance of Power, and our Bloomberg Technology audience should as well. Thank you so much. Okay, coming up on this show, we're going to be joined by Jack Mallers, CEO of Strike, to discuss the launch of the global Bitcoin app in my home country, the United Kingdom. I'm also taking a look at shares of, guess what? NVIDIA, actually softer again, down 2.7%. Let's call it a roller coaster ride. We were down 3 days straight with a technical correction. We rebounded, and now we're down again 2.5%. There's the annual general meeting taking place straight after this program. Usually it's not a news event. Usually it's not that closely followed. But I wonder if this time it may well be. I'll be on hand, and so will Bloomberg's Ian King. Be right back. This is Bloomberg Technology.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Okay, time for talking tech. And first up, CME readies for trading via the cloud. Google will work with the exchange operator to build out a new network that would move futures and options trading to the cloud. The two firms will develop new facilities next to CME's existing data centers, with construction due to start later this year. Plus, SoftBank's AI ambitions start with healthcare. Founder Masayoshi Son is set to host a panel with doctors and medical professionals on ways to harness AI for the health sector. One company he's expected to bring up is Tempus AI, a US startup that's backed by SoftBank that analyzes medical data. And South Korean chip makers are about to get a financial boost. The country is going to inject $19 billion in support to build out the semiconductor industry. Starting in July, eligible firms could tap the program at the market's lowest rates. This comes as countries worldwide are moving to make chips locally due to global supply chain concerns. Those are some of the news stories we're following. I want to get to the world of crypto. The global Bitcoin app Strike has now launched in the United Kingdom. Delighted to say that Strike CEO Jack Mallers joins us now here on Bloomberg Technology. I found this so interesting. Without boring you with it, you know, I moved to America 6 years ago, but at that time when I was covering technology, London in particular, I would say, and the consumer base was much more focused on fintech and crypto than perhaps other areas of technology. 6 years on, you guys have made the move to that market. Why?
I think simply put, we view Bitcoin as a paradigm shift. I think Bitcoin is the first time humans have come across perfect money as we know it. And the world needs a global Bitcoin company that's going to help them and provide them the financial services to adopt it. And so I think we are the most accessible, global, and most performant Bitcoin business in the world. Like, compared to a Coinbase, we don't focus on 1,000 other cryptos and our own blockchains and stuff. We just make sure that people have an amazing experience adopting the best money of all time. So that's why the people in the UK need Bitcoin, brother. Come on.
Well, Jack, I find that interesting, though. So if you think about Strike as a platform or an app, call it what you will, you can do several things, right? You can buy and sell Bitcoin. You can make Lightning payments. There's other functionality. But is there a specific use case that you think people of the United Kingdom will use most? In other words, was there a clear demand for a specific function?
Yeah, well, I think Bitcoin's the best performant asset in the history of our species. And so people want the best experience. That's kind of our baseline, and we've become that. And that's why we've been on such a tear expanding globally, is everyone wants our product. I think that where we are in this market cycle, given the geopolitical backdrop and the macroeconomics and this upcoming election, is people need to buy it. There's going to be a lot of new capital that is going to come into this asset class. It's my prediction. I've told you, I think Bitcoin's going to land somewhere between $250,000 to $1 million per coin over the next 12 months or so. And so that is the highest volume product we have, is people that call us and say, I need this thing. Can you help?
One of the headwinds or challenges to what you've outlined, and yes, you've outlined it before on the kind of direction of travel of Bitcoin, is regulation and oversight. You know, we're focused on the UK. It's just one market in the 100 or so you operate in. But what was that experience like launching in the UK, having to work with post-Brexit regulators who, as we discussed a lot on this show, Jack, they have tried to be strong, right, particularly on newer areas of markets or nascent technology?
You know what, Ed? Listen, I think that everyone can agree, both regulators and us, there's a lot of work to do in education, and there's definitely efficiencies and progress we can all make. But the fact that we're Bitcoin only, I can say, was huge. No one is diligencing the fact that we're creating our own tokens. If something is a security, if I'm acting unethically, I build and sell the most honest, performant money in the history of our species. And it's a very simple business. It's a very honest business. It's a very moral and integral business. And so it's been rather simple. While other businesses are retracting from markets and getting sued by regulators, we're not. And I think it has a lot to do with the fact that we're built on principle. And I founded this business because I think Bitcoin's going to change the world and I want to help. And so with that context, it was fine. It was fine. And we're pleased with the launch.
Jack, really quickly, we never really talk about Strike as a company. Are you going to be employing people in the UK? Have you grown your staffing there? Have you got yourself a nice office? What does it look like?
Yes, we will. Strike's growing a lot. We, though, take this approach where we have two businesses. We have our operating company, and then we have our treasury business, and we buy as much Bitcoin as we possibly can. So Strike's a profitable, growing business, and we sweep those profits into Bitcoin. Over 90% of our treasury is actually in Bitcoin. So the cost of capital is against Bitcoin. So we only deploy capital into things that we think can outcompete Bitcoin, which is at an annualized average of 63% over the last 10 years. Right. So we're delicate with how we invest, but of course, I mean, Strike's a monster, and we're going to keep pouring capital into it as long as people keep needing Bitcoin and us.
Strike CEO Jack Mallers, appreciate your time as always. Thank you so much. All right,
Thanks,
coming up on Bloomberg Technology, we're going to be joined by Richard Robinson, CEO of Robin AI, to discuss the company's new product line and its role in the legal AI race. A quick look at shares of Apple as well, up more than 2%, an upgrade at Rosenblatt. Basically, simple argument as they upgrade to buy from neutral. They see Apple as having the potential to take market share in AI because of its privacy focus in Apple Intelligence. Be right back. This is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Time now for our weekly AI in Action segment. And today we're looking at the field of legal AI. Robin AI works to enhance efficiency by automating much of the due diligence process that's involved in M&A. The company also announced their new product line, Robin AI Reports, this month. Delighted to welcome back to the program CEO Richard Robinson. I think you and I have discussed this in the past. Like, I am a student of the law, went to law school, a family of attorneys, and thank goodness I didn't become one. but I get the point of Robin AI. Let's start with the new product line, the reports element. What is it, and why did you feel the need to bring it out?
Yeah, sure. When I was a lawyer, one of the most painful things I ever had to do is something most lawyers spend their time doing, is working through hundreds and hundreds of contracts, trying to summarize those agreements for our clients. People want to know what's inside all of these documents before they do a transaction. And unfortunately, in the past, we've just never had technology to help us. And so we employ armies of associates through the night, week in, week out, to basically go through these documents line by line, looking for risks that they can report. And so we said, why can't we build something that uses AI to do that for us? That's essentially what our reports product does.
The field of legal AI is widely discussed. We recognize a two-horse race, basically. You have an association with Anthropic. Yeah. There is another legal AI named Harvey we've had on this program, closely aligned to OpenAI. In fact, I think OpenAI made an equity investment in them. Yeah. You going to win that race?
Of course. I mean, we are legal AI for business, and Harvey and OpenAI are really focused on law firms, and we think that's interesting, but what motivates us is trying to help companies like Bloomberg, like General Electric, like PwC, helping them do their work faster, unleashing them to grow in ways that they can't today, because in the absence of the right technology, managing legal risks is just time-consuming, it's expensive. But if you use tools like ours, we have customers saving 90% of their time.
Could I have some data then? How many M&A transactions has Robin AI facilitated, for example?
Yeah, I mean, we've been involved, it's worth saying, we've been doing this for nearly 5 years now. I mean, we support M&A transactions. We support about 1,000 transactions a month already for some of the world's biggest companies, for 5 of the Fortune 500, for 7 of the top 100 funds in the world. We've been really working with business since 2019, long before LLMs, to help them use AI to accelerate deals. And working with Anthropic has just helped us expand our reach and focus.
Robin AI CEO Richard Robinson, it's great to have you back on the program and keeping us up to date. Thank you so much. Coming up, Micron's out with earnings later today, and we have all the details on what to expect next, plus getting a bit hands-on with some of the tech. We're also looking at shares of Paramount. A headline out this morning, discussion about Paramount looking at global options, global partnerships for streaming services. The saga continues about the future of Paramount, its assets, ownership, and what happens. But for now, the stock's down 1.3% in the session. It's a story I'm sure we'll continue to track in the next few weeks, because from an M&A perspective, or even just a streamer perspective, is something that I know our audience really cares about. Stay with us. A lot more to come on the show. This is Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
We got hands-on with NVIDIA's AI accelerator, the H100.
But this little one is pretty important too.
It's Micron's HBM3E, a high-bandwidth memory chip used to power AI workloads. The tech's revolutionary for the industry because it allows for high-speed data transfers and more capacity, both bottlenecks in developing AI. Producing the chips is complex, but the payoff is great for Micron, Samsung, and other players. The Micron chip's smaller and thinner than a penny. It's key to training LLMs for generative AI. Basically, the more data you can serve up more quickly, the better the model gets. There are 8 layers of DRAM or memory stacked on top of each other. Each layer is 3 gigabytes, so together you get 24 gigabytes.
The reason that Micron's HBM3E or high bandwidth memory is important is that in the AI context, it solves for a problem called the memory wall.
To train the LLMs behind ChatGPT, for example, you need to be able to process a large amount of data very quickly. As AI workloads increase and NVIDIA releases new higher performance AI chips like Blackwell, the memory demands also increase. This year, Micron also released a higher capacity chip that stacks 12 layers of DRAM, so 36 gigabytes of memory. The two look identical when placed side by side. Each layer is made thinner to provide more memory without taking up more physical space.
The next in our series of getting hands-on with semiconductors, a quick look at Micron shares, softer by 0.5 percentage point. Micron is scheduled to release its third quarter results after the market closes today, and a big focus on when's the AI story going to hit in top-line growth. Here with expectations is Bloomberg Intelligence analyst Jake Silverman. We focus on HBM3E or high bandwidth memory, but that's where the street's looking as well, right?
Yes. Certainly. Investors are definitely going to be looking at expectations for high bandwidth memory growth for Micron, both in fiscal 24, but also looking at calendar 2025. Micron's management has what we think is a pretty reasonable goal of reaching mid 20% bit share for HBM by 2025.
So historically, Jake, memory is a kind of highly cyclical and almost commoditized piece of technology. Does AI change that? Because in the context of AI accelerators or GPUs, we just talk about this addressable market in an exponential growth curve.
Yeah, so it's definitely different. You definitely don't have the same commodity-like cycles, or same commodity-like expectations for HBM that we would typically see with memory markets. This is definitely a secular trend that's really being driven by AI. And in terms of HBM capacity, they're actually supply constrained right now, memory suppliers. So they're getting margin advantages right now relative to standard DRAM. So as HBM continues to grow in terms of revenue, this should also lead to margin expansion for memory suppliers as well.
I'm really interested in how much Sanjay Mehrotra, the CEO, gives us a crystal ball into the future. Because in the first instance, HBM3E goes with H200 generation of NVIDIA's AI accelerator. But in the future, you have Blackwell. Like, maybe he'll tell us how much money they make. But I'm interested in the landscape. You know, Samsung is looking at high bandwidth memory. You have SK Hynix. You know, where does Micron sit in that competitive field?
Yeah. So SK Hynix has been the leader. They've really been sort of the sole supplier to NVIDIA's H100 chip. But as we look at H200, Micron seems to have gained a decent amount of share there, and we're expecting Micron to gain share into their Blackwell chip as well. But that's not the only opportunity for Micron as well. They can continue to gain share in other GPUs, accelerators. There's a lot of options. AMD as well is one example. Google's TPU is another opportunity. All of those chips require high bandwidth memory.
There is some other stuff that we should talk about. I mean, DRAM generally, NAND or flash memory. What are some of the other important areas of Micron's business? Yeah, so there's also, I mean, you know, staying on the topic of AI as well, aside from HBM, they actually still have products that are related to AI growth. High capacity memory modules for DRAM, enterprise SSDs, all of those are starting to see an inflection related to AI revenue. But generally speaking, the market just looks a lot healthier. As we think about supply constraints and limited capacity this year and potentially into next year as well, we're expecting pricing to continue to increase for non-AI related products for Micron. Okay, put you on the spot. What are we expecting then? Give me the top line growth numbers and where BI sees the print this evening. Yeah, so we think that Micron will report above the mid-range of guidance for both revenue and earnings. And as prices continue to increase throughout this year, that could lead to upward estimate revisions across the street for this year and into potentially next year as well. You are new to the show, Bloomberg Technology, but we're grateful to have you. What else are you working on in the field of memory right now? You know, it's a big coverage area. We talked about how historically it behaves like a commodity, and it's also a global industry as well.
Yeah, so we've already done an HBM sort of market forecast that goes out 5 years to 2028. So that's something that we're continuously tracking and looking at. But on top of that, we're also just looking at, for non-AI related products, what capacity is going to look like throughout this year and next year to try to understand what that supply-demand balance looks like. So that's just ongoing work that we're continuously looking at, how that impacts pricing and ultimately demand for the company's products.
Bloomberg Intelligence Analyst Jake Silverman, as you can tell, I could talk about the memory market all day long. Thank you. Now, Bloomberg Invest is underway in New York. Let's get to the live event. Our very own Caroline Hyde is sitting down with Canvas Ventures' Rebecca Lynch and Lycos Global Management's Nick Laster.
And general partner at Canvas Ventures with Bloomberg's Caroline Hyde.
Either end of the spectrum here when it comes to private investing, going into public investing. And I want to sort of launch straight in on what on earth it is like to be writing checks at either end at the moment. So with Lycos, of course, Nick, you are looking much more at the late stage rounds, IPOs, maybe just very recently gone public companies. And then Rebecca, with you, you're more in the Series A, the Series B. So Rebecca, kick us off.
Yeah.
Is it competitive?
You know, it is competitive. But for how we approach the market, we really have a lot of runway in front of us because we spend a lot of time on our core investment theses. And now with Gen AI, which who hasn't heard of that, right?
I've never heard of it.
Never heard of it. There's so many really interesting opportunities from founders that have done multiple exits in the past, multiple companies. And so we've done 3 this year, and the pricing is back down to pre-21 levels, all with the Gen AI focus. But you have to really know what you're looking for, and you have to know what to avoid.
Okay, so Nick, if we're looking at Lycos's approach right now, you've of course come out of Soros, raising your own fund, already in CoreWeave, for example, which is one of the pinups in AI. Was that a hustle to get into? How competitive is it?
It was. I think it's the onus is on investors to do something other than just write a check because capital is something of a commodity for us, and particularly with CoreWeave, Mike, Brandon, and Brian. it came down to our ability to help them tell their story in a way that was going to resonate as they transition to public market.
That's a PR's job, Nick.
But no, it's an exceptional asset. We were humbled to partner with them. But it requires investors to hone and clearly articulate their value prop.
So, we already have brought up Gen AI. So, Nick, if a company right now is at the upper ends of raising money, actually might even be eyeing the public markets, does generative AI have to be in their story? That's your key selling point. You can help companies tell a story. Does it have to be a Gen AI story?
It certainly doesn't hurt. I think companies that have AI exposure or credible AI story are certainly in a very different situation when it comes to IPO demand. If you look at deals this year, two come to mind, both successes, Reddit and Astera Labs, March IPOs. Astera was a pure play AI narrative, and Reddit was a complementary AI narrative. They're up 60 and 80%. But irrespective of whether or not you have a credible AI story, if you're a CEO, if you're a founder thinking about going public in the next 2 to 3 years, I think the things that really matter, identifying partners that you can see yourself growing with, building a robust finance function, and identifying the KPIs that are going to drive value not only today, but going forward. There's always going to be public market demand, AI or not, for businesses that have durable growth, strong unit economics, and a line of sight on free cash flow.
Does that also ring true in the Series A, Series B space at the moment, Rebecca? How much are you looking at the public valuations and having to either down round it, or actually are companies managing to grow into their valuations in that stage?
Oh, for our companies? So for us, we're early growth. So we're Series A and B when the companies have a product we can get our hands on. And then what we're really good at is helping them scale and develop their go-to-market. And that, like a strategic consultant, just like you said, companies now, really, especially the experienced CEOs more than ever, are looking for investors, whether it be my stage or yours, that can really be a partner with them and help them strategically go through the process, right? And so it's very important for us that, I always tell founders they need to know where they would land the plane if they had to, right? and how that would work. And so we work very early on like, what would it mean to be profitable? What people in our ecosystem do we need to actually partner with very early? And we encourage our founders to go out and do that years before the IPO word even comes into their board deck. To really think outside of their existing company and think very strategically.
Rebecca, on that note, how often are those partnerships becoming M&A opportunities rather than actually going public via IPO?
Well, an M&A opportunity almost always comes from a partnership. It almost never comes from a cold start and a sale process. And just last year, Casetext was bought by Thomson Reuters, right, for $650 million.
Big AI play.
Big AI, probably, I would say, still the most robust implementation of GPT-4 that exists. And they did that because of partnership opportunities, both with all of the AI LLM players. They've been in that space for a decade, right? So they had the sandbox of GPT-4 in July of 22. And that comes from these really strategic outreach motions that they did. And then Thomson Reuters knew them well just because of their outreach they had done and the partnerships they'd done in the ecosystem.
What's interesting is we're seeing some rather novel types of partnerships and novel types of M&A actually going on at the moment, Nick. I mean, you're in CoreWeave, as we mentioned, they're trying to acquire an asset at the moment. But more looking at the large language model plays. Yeah. OpenAI having relationships with Microsoft and others, but then you're also seeing Anthropic being funded by Google and Amazon and having partnerships. Then you get acqui-hires, like we've just seen with Inflection.
I think it's called AI money laundering is one of the posts that came out, right?
I love that term.
She said it, not me.
There were some articles out there about that were pretty interesting, actually.
What would you say of these partnerships and M&A opportunities at the later stage?
Yeah, I think, look, in aggregate, it speaks to how integral these smaller private players are to hyperscale AI platforms and to offering end-to-end solutions and capabilities to their customers. As it relates to Inflection and Microsoft, I think it also speaks to the regulatory climate. Right? That was positioned and structured as an investment to license their model. You're also seeing a pickup in deal terms, regulatory break fees and the like. It's going to be harder for big tech to do big M&A.
Because of regulatory?
Yeah.
Well, and we saw that too with Casetext. I mean, Thomson Reuters came out just months beforehand and said that AI would completely disrupt their entire business. And they acquired Casetext, and Casetext, by the way, already had 10,000 of their own users. But they needed that experience and that platform really for their business going forward. And I think we're going to see more and more tech M&A, or for that reason, from these very big players.
Interesting. Let's use Casetext as a case study, because you, wrote the check into that in 2016. So this isn't an overnight success.
No.
But we do feel that generative AI has sprung up out of nothing, and suddenly there's a fight to get into these companies and valuations that just feel so extreme. How are you rationalizing what is a good AI opportunity or not?
Yeah, no, it's a great question. So we've been in, let's say, not Gen AI, but AI, machine learning, since we did Siri, when we were the first investors there. And then we've had a number of outcomes, including Figure 8 and Luminar in AI. And, although it feels like it came out overnight, right? And really, the algorithms started like 2017. And so the companies that were best positioned to take advantage of GPT-4 were companies that were already in the space. I mean, Casetext, because they were taking the place of a legal counsel, had to be really the bleeding edge of LLMs because they were writing text, right? And so they had access into all of that. And it was an evolution over time. But I've got to tell you, GPT-4 was just like a light switch. And the best comp and explanation I have is that the Casetext team had tried to pass the California bar with GPT 3.5. And the best they could ever get it to do was roughly 30%, score. Pathetic. Although the California State Bar, the average is 68, so also not great.
Beats the ex-lawyer.
Exactly.
So
but when they put GPT-4 against it, it was 94%, which was better than the lawyers. And that was in a very, very short period of time. So I think we just saw the step change incredibly suddenly. And the companies best positioned to take advantage of it were companies like a ship. They already had steerage and momentum going into it, and they could pick up the technology and plug it into their existing systems and customer base rapidly.
Look, it was a light switch, and it was also a light switch for many a market valuation. And we talk about NVIDIA day in, day out. It's now more than 3 trillion. I mean, it was at 1 trillion when we started the year. I mean, this is a phenomenal rate of growth. Nick, have you seen equivalents of this? How do you explain this to the LPs coming into your fund as to what the opportunity is for market capitalization growth?
Yeah, I think if you zoom out and you put this into context, from 2012 to 2021, on the back of extraordinarily low rates, you had US VC investment grow 8-fold. It was $330 billion in 21. You had more unicorns created in 2021 than you had in the prior 5 years combined. So there are a number of companies that have been overcapitalized, if you will, at a different cost of capital, yesterday's cost of capital.
When it was zero.
About half of the unicorns last raised when rates were below 1%.
Wow.
So those valuations, while stale, can persist as long as cash burn and cash runways permit. There's some good data that's come out recently that would suggest that about half of the 740 unicorns in the US will need to raise by December. So I think it's a question of when, not if.
And are they, Rebecca, the right ones to be betting if they're running out of cash, but they have valuations that, need to be downgraded? Who are you looking at that is eyeing the public market but just can't at the last round that they raised at, I assume?
I'm sorry. So companies that are in this situation, right, are going to face just really one of two consequences, three, unfortunately. One, they take their medicine and they take a massive down round, and hopefully the investors are on board with a complete recapitalization, which restructures the entire company. That's one option. And that we're seeing 30% of company or fundraising right now in that later stage actually be down rounds and largely inside led.
Of the ones that are disclosed?
Of the ones that are disclosed, yes. Other things, other ways they're doing this, I would say it's much bigger than that. People are just doing, a note document, right? which is not disclosed. Good point.
So explain that, sort of a bridge finance.
Yeah, so it's bridge finance. So they do it, instead of doing like an equity financing and disclosing that, they do more of a safe note or a bridge of some sort, where it's really sort of, you know, debt capital going into it more or less, but it will take the form of equity. And then the other option is they sell the company to a public company. Now, the problem with that is these companies have incredibly high burn rates, typically. Not ours, because we try to manage that very well, because we've seen the show a couple times. But, you know, a company's not going to acquire a company for what has, you know, is burning $5 million a month, which some of these still are. And then the third option is sort of the least favorable, is they just close. They go out and kind of quietly go away, right?
But a big company can't quietly go away.
No, I mean, we saw Convoy, you know, not that long ago, you know, go to zero overnight. And so I think we'll see more of that.
What we might see, though, is actually companies taking their medicine, Nick, and deciding to go public at a slightly different valuation than was the previous. And we've actually seen that already. Instacart swallowed that bitter pill, came to the market, and, well, people might question as to how well they've traded since. But I'm interested as to how much you see the opportunity for companies to make that bold step, to decide to go public, to become a publicly traded company with all the scrutiny that goes with it.
Yeah, I think there's certainly pros and cons to it. Look, it's a long road. I don't think, you know, an IPO is the end in itself. It's a milestone on a multi-year journey, and ultimately, you know, their success will be proven out in public markets as they execute. There has been a very acute, if not myopic, focus on headline valuations, but I think slowly you're starting to see people reorient and valuation expectations recalibrate.
How long do you stay in a company once it's gone public?
Yeah, it's hard to generalize, but look, we like to think about businesses in terms of years, not quarters. And duration is a competitive advantage for us. It's a competitive advantage for CEOs as they try to build something enduring.
How painful is that? And I'm going to bring up a relatively interesting case study of yours. You made your name in many ways, some really incredible bets you made with Soros and the companies that then went public. One of them being Rivian. Now, today is a very good news day for Rivian. Shares are popping about 40% last time I looked, because they've done a deal with VW. But it's been pretty painful in the interim. How long did you understand that, look, you've got to stay with this company for the long term? RJ is going to get us there, but it's not an overnight success.
Yeah, I think, look, you're going to find out what type of investors you have when things are not going well. I think that the smart CEOs, the right founders, appreciate the value of staying power. There will be missteps, inevitably. There will be execution faults. But I think the onus is on those companies to communicate in a way where they're straightforward and they're clear and they're transparent. That's what being a public company CEO entails. CFO, too.
But part of your staying power probably is driven by really knowing the company well and the market and having a really informed thesis about how you're seeing it. And I think that's important for any investor. You know, for a CEO to really find an investor that understands that space, that does their own work, that actually goes out and talks to the consumers of that product, I think is so important. And so few investors actually do that. But that's really what builds conviction for us, either early stage or later stage. Because we can often sell really earlier, or we have to make the choice. You know, with Case Text, with Figure 8, with Gabby, with Future Advisor, you know, we had term sheets to finance it. And the question is, do we finance it and keep going, or do we sell? And is this price the right price? And that's a question that you can only answer if you do the work, just like when you're a public market investor. And it's interesting that, you know, we do see the bad behavior now of investors that were sort of, you know, tourist investors that came in and thought it was just, you know, throw in some money and cook, right? And it's not. It takes a lot of work, and you have to really enjoy the job.
Yeah.
Talking of, well, startups in actually the going public space, I just got a quick poll for you. We've only got a couple of minutes, but you've got a couple of minutes to have an audience participation moment. I want to ask you a question on what you thought about this Texas exchange, which, of course, I think Citadel's behind it, some other key players. Do you think the newly announced Texas Stock Exchange could potentially compete with the New York Stock Exchange and the NASDAQ? I want you to get voting. Use your phones. Use the QR code. I want to know if you think it's not a chance. We could see some market share move southwest. Companies should welcome the competition. And it's interesting. We've got a few companies, big, privately run companies, and publicly run companies moving to Texas. Elon Musk is behind a lot of them, and I'm sure he might well be a player of taking companies public over there. But Nick, is it good to have competition in the exchange space as well as competition in actually companies going public?
Look, I think innovation, markets, venues, structures, this is all good for markets. It's good for investors. It's healthy for companies. I think what's interesting about the Texas Stock Exchange is twofold. It's one, an attempt to provide public capital to private companies, but it also speaks to some of the onerous burdens of being a public company from a regulatory standpoint on the NYSE or NASDAQ.
Great. And sometimes you need that safety net there. Interestingly, I think we have a few New Yorkers in the room, because the 40%, the majority think there's not a chance that companies are going to move to Texas to go public. But as we wind up this conversation, I want you both to give a piece of advice to those who are looking at doing their due diligence, who are wanting to perhaps either get into the private space or into, indeed, companies that are about to IPO. What due diligence should they be doing? How to ensure that they're not tourists, as you labeled them, Rebecca?
I think you have to talk to the customers. You have to really understand why the customer, whether it's consumer or enterprise, why the customer is using that product and what their go-to-market motion truly is, and if it can scale.
Might be easier for a Rivian or an Instacart consumer than perhaps some of the more deep in the weeds AI trades. But Nick, as you're out there sort of crossing the T's, dotting the I's on LPs committing to your fund, what's your piece of advice that you're saying to them to commit capital to you? What would you say for the story you're about to tell?
Well, look, I think everything is downstream of competitive advantage. And that's true for investors. It's true for companies. Being aware of your circle of competence and kind of sticking to that is the onus is on investors to do so. If you don't have an edge, you shouldn't be participating.
I agree. Keep bringing your edges to Bloomberg. Keep coming on Bloomberg Technology and across all of our bandwidth and our platforms. It's been a joy to be with both of you in front of this wonderful audience today. Thank you for your participation as well. We love it. We want to thank Rebecca Lynn and Nick Lancaster. Thank you very much indeed.
Thank you, Caroline.
That was Canvas Ventures, Rebecca Lynn, and Lacoste Global Management, Nick Laster, along with our own Caroline Hyde. Let's get back very quickly and check on shares of Rivian. Actually, we paired much of the incredible gain we saw in Rivian shares after an up to $5 billion deal, JV formation with Volkswagen, giving Volkswagen access to Rivian software in tech. That's a two-day chart, but in the moment, we're up around 27%. Even so, shares trading at their highest level since February. Of course, this is a stock that's had a precipitous, plummetous decline since its November 2021 IPO. We'll continue to track it. That does it, though, for this edition of Bloomberg Technology. But this Friday, we have Vivek Ramaswamy joining me here on Bloomberg Technology following the presidential debates. This is interesting. I've reported that Vivek was an intermediary, a conduit between Elon Musk re-engaging with former President Donald Trump. I'm going to ask Vivek about that, and I'm going to ask him about his ambitions for a position in government should former President Trump gain re-election. This was a pretty big show that we had today. We went really big on the Rivian story. We had a fantastic guest in Cox Automotives, but we also can recap on the podcast. Find it on the terminal, online, Apple, Spotify, and also on iHeart and the Bloomberg platforms. Gosh, what a week it's been. Stay with us. This is Bloomberg Technology.
Reporting from our world headquarters in New York, I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Live from Bloomberg's world headquarters in New York, I'm Shonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
We are just one day away from the U.S. presidential debate between President Joe Biden and former President Donald Trump. Today, we're going to focus on crypto's increasing role in the presidential race.
And in just a moment, you'll hear from Kraken CEO Dave Ripley. This as the firm reportedly holds IPO ambitions. We'll speak about the U.S. stance on the industry.
And later, the former mayor of Atlanta and current Coinbase Global Advisory Council member Keisha Lance Bottoms joins us to discuss how crypto could potentially help underbanked households.
That's all ahead in the next half hour on Bloomberg Crypto. But first, here's a snapshot of the market, and it hasn't been pretty over the last week. We did see Bitcoin at one point on Monday fall more than 8%. It was the biggest intraday decline since April 13th. And as of last week, we've seen 2 weeks of outflows from Bitcoin ETFs. There are also still concerns about the Fed holding off on rate cuts. We saw a bit of a rebound yesterday when Bitcoin shares rose more than 4%, but still down over the last 7 days by more than 5%. And speaking of Bitcoin being lower, it's also down on the quarter. This is our last show of the quarter, so we thought we'd take a look at Bitcoin versus the S&P 500 quarter to date. Bitcoin down more than 11%, close to 12% so far this quarter, underperforming significantly the S&P 500, which is up more than 4% over that same period of time. But Shonali, one quarter does not a trend make, right?
It certainly does, because if you zoom out and look at Bitcoin over the year, it is outperforming the S&P 500. The S&P 500 being roughly 15% higher nearly. You still see Bitcoin on the year up about 45%. Things are starting to flatten since the March high of almost $74,000. We are certainly below that high, now at around $61,400. But listen, that is meaningfully lower than what we saw in that exuberance of that ETF-fueled rally, Tim.
Well, as we mentioned, politics a big part of our program. Former President Donald Trump is courting crypto proponents at his rallies and events. President Joe Biden may use Thursday's debate to reposition his own stance on crypto. Here's how some of our guests are anticipating the election's impact on digital assets.
President Trump announced himself as the so-called crypto president.
You saw Trump come out really strong over the weekend, making very pro-crypto statements. And now if one of them can grab that crypto brass ring, it's really going to help them in those swing states.
Both sides of the House presidential candidate
actually have a voice in a crypto conference.
White House trying to have some strategy with pro-crypto, but at the same time vetoing 121. So I think it's been a very mixed signals.
You see President Trump being more overtly and openly supportive of digital assets and crypto than President Biden. But I will also say that until the votes are counted, nothing is in, and there is time to change some of that.
These elections are going to swing back and forth for a while. And so crypto shouldn't be partisan.
We are in the next great wave of innovation with crypto and blockchain. And if America doesn't embrace it, we're going to be left behind.
This idea that we're going to protect somebody from this new technology that cuts out the middleman, that allows people to transact directly instead of paying a fee, is just wrong thought of.
Unfortunately, I don't see all these things will play out until after the presidential election.
For more, we're joined by Balance of Power co-host Kaylee Lyons. She's in Washington, D.C. She's kept a very close eye on everything happening in D.C. when it comes to crypto. One thing that got my attention, Kaylee, was this Bernstein note that said that crypto may become the new Trump trade. Is that it? About going back to 2016, crypto the new Trump trade?
Well, it'll remain to be seen, Tim, but the whole idea behind that analysis is that Trump has been much more vocally advocating for Bitcoin, certainly, and for the crypto industry overall than we saw in his prior administration, where he was sometimes quite skeptical of the digital asset industry. But lately, we have seen him at rallies repeatedly expressing his support for the idea of Bitcoin, saying that he wants all Bitcoin mined in the U.S. and that really he just wants the U.S. to be out front and leading in this industry rather than in, say, second place, which is a bit of a difference than what we're seeing Joe Biden talk about, which is frankly not really addressing crypto much at all. But much of the Biden administration has been defined in terms of crypto policy by the action of the regulators appointed under it, including, of course, the SEC chair, Gary Gensler, who the industry often says is taking a regulation by enforcement approach. So it really is the kind of regulators that speak more for Joe Biden in this instance. But of course, on Thursday night, tomorrow night, Joe Biden will have the chance to speak for himself if he so chooses on his stance when it comes to crypto, as will Donald Trump, and we'll see if any specific policy is outlined. On specific policy, it's worth keeping in mind that Trump has been aligning himself with many who are more pro-crypto, including Vivek Ramaswamy, a former Republican presidential candidate himself, who has very much advocated for the industry and now is one of the most powerful surrogates for Donald Trump. And we have to keep in mind there is money at stake here as well. Trump has gotten the maximum donation possible in Bitcoin from the Winklevoss twins. And of course, there's also tens of millions of dollars in crypto supportive PACs, including Fairshake, which are mobilized maybe not necessarily to spend money in the presidential race, though surely they can, but also focusing down the ballot, considering while the president does have the power to appoint regulators that could help shape the picture for the industry, it is also Congress who has the power to write legislation, and they've had some difficulty in getting that through both chambers, as we have seen borne out this year when it comes to crypto.
Bloomberg's Kaylee Lyons, thank you so much for your analysis. And remember, Kaylee will be part of our debate coverage tomorrow night. Do not miss that. And for more on the political landscape in crypto and the digital asset outlook overall, we are joined by Kraken CEO Dave Ripley, and we are going to want to get your updates on Kraken, absolutely. But just to follow on what Kaylee was talking about here, the uncertainty around crypto policy over the next 6 months, let alone the next couple of years, how are you thinking about the moves that may or may not be made depending on a potential change in administration? Is there anything the crypto industry is doing that you might as well hold off on until you know what the top might look like of this country?
Yeah, well, thanks for having me here. A lot of exciting things going on in the crypto industry. Never a dull day. I mean, honestly, if we just look back to where we were a year ago or a year plus ago, the market is completely different. Bitcoin is, frankly, in a really strong position right now, and we see a lot of movement going forward. The regulatory side, I think, of late over the past regulatory policy side, probably over the past couple months, has become really active. We went from a place a year ago, particularly in the U.S., which was very challenged from a regulatory and policy standpoint, with a U.S. government that was frankly quite hostile towards Bitcoin and cryptocurrency, to a place right now where we see a huge amount of positive momentum across the space, which is good to see, because frankly, if we look in our other markets, Europe, UK, Canada, Australia, we see positive momentum We see, governments taking some steps in the right direction to, to take a reasonable approach to cryptocurrency. And that just hasn't been the case in the U.S. for quite some time with the aggressive approach that we've seen.
Well, Dave, I'm curious if you've been discussing crypto policy with former President Trump and current Republican frontrunner Donald Trump or any members of his team. Have you been doing that?
So on the policy side, I mean, we've had a number of different discussions across both sides, from a partisan standpoint. For what it's worth, we're extremely encouraged by what we've seen from, the Donald Trump and his campaign over the past couple of months. He's, embraced cryptocurrency. Frankly, he's met with many people in the industry and, had several events where he's, building that knowledge and come out, very positively towards cryptocurrency, which we absolutely embrace. And we think, he's an intelligent person. And, typically when, someone who is willing to kind of go up the learning curve and they can do it quickly, we see positive results because crypto is a fantastic innovation.
I'm curious what specifically you would advocate for most in a Trump term when it comes to crypto policy. If he does win in November, what's one thing you'd advocate for?
Well, look, the history, it's almost, it's difficult to, really almost put your finger on it. I mean, we're just coming from a place where it's been almost the worst possible environment you can imagine, where you have, this policy of, regulation by enforcement. You have a complete unwillingness to understand and come to the table and discuss the technology from what we see in the current SEC and a number of the regulatory bodies in the U.S. So it's, there's only one way to go that's up. Again, though, fast forward to the past couple of months, we've started to see like really positive momentum. There's this bill, FIT 21, which is a market structure bill for cryptocurrency, which just passed the House with a much more positive vote than we expected. And, frankly, I think that's, a testament to cryptocurrency. It's also a testament to a lot of the people in Congress that have been working on this for a while,
Dave,
partnering with the industry. And then also, yes, it becoming a presidential campaign issue and the Trump campaign coming out positively has been really a fantastic
Dave,
event.
Want to get a little bit more around the regulatory environment, not here, but abroad. When you think about MICA, for example, yet to be finalized or soon to be finalized by the European Banking Authority, what does this mean about your decisions around Tether?
Yeah.
Have you made a decision?
Well, like with all of our products and offerings and technologies, as the regulatory environment evolves, as new licenses come in place, as new regulations come in place, we have, of course, look to adhere to those in all instances. And so I think it's still TBD where we're going to see, the Tether as a foundation organization, where they're going to net out with regard to regulation in any particular geography. But yes, there is a stablecoin legislation or regulation rather now as part of MiCA for stablecoins. And so that will indeed come to the fore as we see kind of where Tether and USDC and so forth come out with regard to regulation on that front.
Hey, Dave, before we let you go, our colleague Olga Karif reporting earlier this month that Kraken is said to be in talks for pre-IPO fundraising round, seeking more than $100 million. What can you tell us about a target for a potential IPO? What's the date that you're looking at?
Yeah, so just generally on the fundraising front and with regard to some of those, articles that hit about, a currently active fundraise, the reality is we're right now, frankly, we are, having informal discussions with existing investors and, other parts of the investor community, as we have done in the past, and we kind of continue to do so. So there isn't anything formal in progress right now on that front. IPO, as you know, I can't really get specific on anything, frankly, timing or anything else from that nature. But from a financial profile standpoint, and it's not a surprising question. From a financial profile standpoint and success standpoint, Kraken is frankly a bigger and more profitable company than many public companies out there. So it's frankly not surprising that the question's being asked.
Well, Dave, certainly appreciate you joining us and taking the time. That's Kraken CEO Dave Ripley joining us from the Bay Area. Well, coming up, Anchorage Digital's Diogo Monica joining us on crypto banking regulation and the state of VC.
And former Atlanta Mayor Keisha Lance Bottoms discusses her work with Coinbase and the campaign messaging on crypto in the presidential election.
And yesterday, SEC Chair Gary Gensler addressed the Ether ETF applications his team is reviewing.
It's really about the asset managers making the full disclosure so that those registration statements can go effective and those lawyers know what that is. It's something our Division of Corporation Finance handles hundreds or if not thousands of times over anybody's career. It's smoothly functioning. It's really up to the asset managers to make the proper disclosures.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Let's discuss the political and venture capital landscape in regards to crypto with Diogo Monica. He's the co-founder and now chairman of Anchorage Digital, the first federally chartered crypto native bank in the U.S., as well as a general partner for Han Ventures. Diogo, good to have you with us this afternoon. Appreciate you taking the time. I just want to cut right to the chase here. I mentioned our show all about politics ahead of tomorrow night's debate. I'm curious how you see things shaking out in Washington over the next few months ahead of the presidential election. Do you see another Trump term or another Biden term as more friendly to what you're trying to do over at Anchorage Digital?
So right now, in general, I think we've all seen Trump's notes on crypto and how he's been positioning himself. But the reality is that everything is still open. I think the biggest conversation to be had right now in success is really that our industry is finally getting organized and engaging in the political process. That really is the most important part, other than Republicans and Democrats. It's this sign that we're a maturing and growing industry that is absolutely here to stay. And of course, to a certain extent, it's the obvious conclusion of 10 years of regulation by enforcement. You have fantastic founders that are trying to build legitimate businesses in crypto. You get in their way for long enough, and you're going to get single issue voters with large checkbooks. And so right now, I'm pretty excited about the crypto industry getting its act together.
Diego, one question I have is, if you have all these other very large issues in the world, from geopolitics to inflation, why do single issue crypto voters believe that that is something that could really move the vote?
So look, I think in general, crypto will always be political, but doesn't have to be partisan. What we're seeing right now is the potentially first presidential debate where crypto comes up as a question. That would be amazing. And we're also seeing the current administration being completely hostile towards the industry at large. And as you all know, SEC in particular has been making it very difficult for founders to understand what the rules of the road are. And so when it comes to single issue voters and what they're looking for, they're just looking for clarity. And I think you've heard this over and over and over again for the past 10 plus years.
What kind of clarity are they looking for? What kind of clarity are you looking for? What's a specific policy recommendation that you'd give?
It is not that hard. We want clear rules of the road across, say, 3 areas. Number one, we've been talking about this, but we want stablecoin legislation. Stablecoins have been issued over $160 billion of them. You've heard these stats, how stablecoins alone actually hold more treasuries, US treasuries, than the country of Germany. Number two, we want to know who the regulator is. Is it the SEC? Is it the CFTC? And then finally, and very near and dear to my heart, we want an end to unelected bureaucrats debanking crypto businesses.
So what does this mean for how you all are targeting politicians? I mean, there's a presidential election certainly around the corner, but a lot of what you're talking about needs to be done in Congress. What does that look like on the ground as you're talking to lawmakers?
So it's really my job is to spend time with founders. And as an investor, what I do is I work every day with the most brilliant technologies. And they are around the world trying to use these crypto technologies to create the next generation of American companies. And so they are paying attention. They are talking to the regulators. They are talking to the folks in the Senate. And they are the ones actually engaging the most. We do our own engagement, but really the majority of my time is spent not just on regulation, but really on the technology piece, which candidly is a lot more important.
Who, in your view, is the most important person in Washington to what you're doing?
Right now would definitely be the next president of the United States. I think it's pretty clear. If you think about it, in a way, presidential elections are about the future. Crypto and some other of these frontier technologies are the future. So right now what you have is an election where you have voters on both sides of the aisle consistently saying that what they want is the United States to lead the way globally on innovation. And so these debates are going to offer Trump, specifically the one tomorrow, Trump and Biden an opportunity to finally tell the country how they'll accomplish that. And crypto should absolutely be a part of both of their answers.
Who do you think crypto advocates should support in November?
I think it's going to depend on tomorrow. It's going to depend on how this shakes out.
So still up in the air?
I think so. Trump has been absolutely pro-crypto, as we've seen. It's undeniable and unambiguous. And the Democrats have been very hostile to crypto. But we've also seen somehow a little bit of a change and a little bit of a notice that crypto is actually important, that there are 50 plus Americans that hold cryptocurrencies and care deeply about how they're seen and how the companies that either they're building or the companies that they're using to participate in this ecosystem are actually being treated by the regulators and by the politicians. And so they matter deeply. And so it is still in the air. And I do think that there could be still time for the Democrats to be more concrete about what they're going to do and change their tune.
Diogo Monica, co-founder and chairman of Anchorage Digital, as well as general partner for Hahn Ventures. We're going to now bring in former Atlanta Mayor Keisha Lance Bottoms, who now serves as a member of Coinbase's Global Advisory Council. And having served in politics yourself, very curious about why now you do want to work with crypto companies here.
Well, thank you for having me. And I do want to stress that I am here in my personal capacity. And I'll just say, like so many Americans, my introduction to crypto was not a great introduction during my time as mayor of Atlanta. We were on the receiving end of a very big cyber attack that took down our systems at that time. And I still believe it stands the biggest in American history against the municipality. And the ransom was asked for in Bitcoins. And so I was very skittish about crypto and Bitcoins. And I think that's what's happening with a lot of elected officials across the country. It's just not always a great introduction. But that being said, when I was approached by Coinbase to join the Global Advisory Board, it really did pique my curiosity. And having the benefit of having young children in my house, they were very excited that I was talking about crypto and strongly encouraged me to be a part of it. And just as I'm getting more educated, I don't present as any expert by any means, but realizing how it's helping to bridge the gap in communities of color was really important to me. And we have so many communities that are underbanked and unbanked. And the crypto and the blockchain economy is giving an opportunity for people to have access to the financial systems in a very different way.
That's exactly what I want to talk about, Keisha, so I'm glad you brought that up. Crypto doesn't have FDIC protections. You mentioned when you were mayor it being used as ransomware and holding hostage the city of Atlanta's computer system. Owning crypto doesn't give you a better credit score. It doesn't give you easier access to a mortgage. These are all things within the traditional financial system that, to my understanding, crypto does not help bridge. It's also volatile. So what's the use case here for the unbanked, for people who've been traditionally left out of the financial system? Why is it good for them?
Well, I had an opportunity yesterday to sit in the room with some very strong thought leaders during one of our global advisory meetings for Coinbase. And we heard from small business owners who've talked about how they are able to pay vendors, et cetera, and how it's able to reduce what they're paying in credit card fees. And I look at this is just the beginning. The financial institutions that we see today were not the financial institutions that we saw 100 years ago. We're still having discussions on how people can improve credit scores through paying their utilities on time. So I see it as an opportunity for an evolution. And it's not often, and we heard this repeatedly during our time together yesterday, it's not often that an industry is asking for regulation. Coinbase is being a leader in asking for more regulation so that we can deliver to consumers those things that are needed most. So again, for communities of color, quite often it is about building up a strong credit score. It is about bridging the wealth gap. And
I have a really specific question for you here. We only have a minute left here, and I really want to hear your opinion on this. Given that Trump has come out so vocally in favor of crypto, do you think that there are Democratic voters who are switching over because of crypto alone?
And again, my personal opinion, I know that there have been a lot of statements where at one time he was not in favor of crypto. I think that their leaders are being cautious, and understandably so. But I think when you're working hand in hand with the industry and everyone is coming from a place of getting to success, then I think that's a bipartisan issue that all elected officials and those seeking to hold office can rally around.
Keisha Lance Bottoms, former mayor of Atlanta, also worked in the Biden White House, member of the President's Export Council, on the Coinbase Advisory Council. Thanks for joining us. Good to see you again. That is going to do it for Bloomberg Crypto this afternoon. Join us again, though, next week on Tuesday at noon, New York time. This is Bloomberg.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, to dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
Welcome to Bloomberg Markets. I'm Shonali Basak. Let's get a check on these markets. Looking at the S&P 500 today, just still in the green, but only less than 0.1%. So you have the NASDAQ 100 up a little more than that, about 0.2%, and the 2-year yield today hanging out around 4.74, and the 10-year yield around 4.30, back higher on the day. Let's look at the yen, falling to the weakest levels against the euro on record, and the weakest against the dollar since the 80s. Authorities may soon be forced to support the currency again in a bid to stem off the worst sell-off in the developed world, of course, all year. Traders keeping an eye on the yen, and a lot of ramifications across asset classes. Looking at some midday movers here on the equity side here, FedEx surging today after a forecast profit that topped Wall Street estimates here. Of course, FedEx up now more than 14% on the day. Investors hoping that the metric is a sign that its sweeping plan to reorganize and cut costs is taking hold. Whirlpool moving on a Reuters report that German industrial giant Bosch is considering an offer for the appliance maker. The company is now valued at around $5.4 billion. Whirlpool stock was down nearly 30% this year at the close yesterday, and the takeover talks now spurring an 8% rise in shares. And a look at Rivian shares after Volkswagen and Rivian announced a $5 billion partnership to develop electric cars and software. The deal is a financial lifeline for Rivian as it grapples with the slowing electric vehicle market, and VW will make an initial $1 billion investment and as much as $4 billion more over time. And Amazon just crossed $2 trillion in market value in the last few minutes here, taking a look at, of course, the big tech stock in a day that you are seeing love in the broader market for that industry. But turning now to today's big take, our reporters have deconstructed the 3 days that led to the downfall of Bill Huang and Archegos. Today, the prosecution is expected to rest in its case in Wall Street's trial of the decade. Bloomberg's Sridhar Natarajan wrote this story. He co-wrote it. Joins me now, and of course, our team, Ava Benny Morrison, has been all over it, not just through the trial, but through the scandal itself. What can you say about this time frame?
Look, ever since this happened 3 years ago now, everyone on Wall Street has been fascinated by how it happened. How did someone so secretively build a $36 billion fortune and then so publicly lose it in a matter of days? In the last 5 weeks, in a downtown New York courtroom, there has been a trial where the Justice Department has been going after Bill Huang for what it believes to be market manipulation and lying to lenders. But in the process, we've got such vivid glimpses of what actually happened in those chaotic last 3 days when that firm collapsed. And it doesn't look pretty for Wall Street. You have descriptions of one of the Archegos senior executives in a TSA security line in Texas, dialing into a call with anxious banks on a Thursday night of the week, worried if they're going to lose money. There's a description by a Credit Suisse trader talking about how he's walking into the CS office on the Friday of that week, for the first time hearing about Archegos in distress after taking his city bike into the office to try and begin the unloading process of that portfolio. And of course, in the middle of it all, Goldman got a near $500 million gift because of a Stafford screw-up. It's not really that image of calculated risk-taking that Wall Street tries to project. Everything that we've seen shows that there were a lot of faults and a lot of cringeworthy incidents across different camps on Wall Street.
Let's talk a little more about that, because I think there's so many remaining questions. You have on the Bloomberg Terminal headline that the chats reveal ineptitude. Who was most inept here?
I mean, the fact that you had a handful of banks that lost more than $10 billion, clearly, they don't come out looking good. Credit Suisse lost $5.5 billion. Credit Suisse doesn't exist today. And even look at some of the communications here. This was a firm that was giving these banks vague, evasive answers, essentially pinky promises about their portfolio. And yet banks were loading them up with so much in firepower for their bets.
Shocked about still is back when you look at that time, why did the bankers try to work this out on their own? Why didn't they call the Federal Reserve or another banking regulator when something went wrong?
It's all happening live. They had multiple conversations about, can we sign an NDA? Can we all have a look at the full portfolio? Can we all agree not to sell down? There were some banks that said, no, I'm ready to shoot first and ask questions later. Those were the banks that escaped reasonably unhurt. One of them, Goldman Sachs. The others who chose to wait, who tried to play it cautiously and carefully, did not end up looking good.
How does that look at the other end? On one hand, Goldman saved a ton of money. On the other hand, they got out first, maybe to the expense of others. What is the reputational risk or fallout after? Are they better or worse off for it?
Do you think if you go to a senior Goldman trading executive today, are they worried about a reputation of being hard-edged, about being hard-nosed about the process, or are they bragging about the fact that they did not lose any money? And does Credit Suisse get any credit for saying, let's do this slowly, let's do this in a calculated manner and not spook the markets? They're not around to tell you that tale. So that tells you how Goldman will do it again.
Why wasn't a regulator called at the beginning?
Again, the fact that this was all happening on the spot, live. I mean, you have a situation where
72 hours, shouldn't a regulator been called?
You have a situation where they're going to some of their biggest banks and saying, hey, we're trying to meet margin calls elsewhere. Can you give me some of your excess cash? And the UBS officers, we will have a margin call tomorrow. Are you sure you want this money? Are you good for it tomorrow? Fine, here, have $300 million. Did they get their money back the next day? No. The problem is, on Wednesday, people are saying there's nothing much to worry about here. They had great performance in the last 6 months and they're just giving some of it back. There was no recognition until Thursday night, until the final day of the week, that this was a real catastrophe.
Just incredible. Do not miss Bloomberg's Big Take by Bloomberg's Sridhar Natarajan and Ava Benny Morrison. Of course, it is quite the tale. Now, Apollo's John Zito says his firm is working to simplify the credit strategy. Traders price in higher for longer rates. We are going to bring you some of the information here from the Bloomberg Invest Conference. This was from yesterday.
The higher rates is really for longer has catalyzed a lot of things in fixed income. It's actually created this whole new asset class, whole new area that we can innovate and change the way that you actually access fixed income. That is where I'm spending most of my time. Clearly, private credit has gotten really popular. We weren't used to that. I was at Apollo for 10 years when no one wanted to take a meeting with the credit guy, really, right? In the last 2 years, our team has gotten a lot of attention. I think now it's, okay, rates may be up for longer than people expected. What does that mean for asset allocation? What does that mean for our investment businesses? Are we set up the right way to take advantage of what I think is going to be a completely different investment environment? And you look at things historically. In 1995, 94%, Callan Associates, 94% allocation to fixed income. 2022, the recommended allocation for a retiree, 3% to fixed income. Now they're going back to 51%. And it's all about, for us, it's all about educating on what private credit is. How do you access these mega trends that are happening in a really safe way? And how do you reverse what's gone on for the last 15 years, which is take an asset category and to get 8 or 9 or 10%, what'd you have to do? You had to go into all these complex strategies. You had to use leverage to get an 8, 9, 10% return. Now you can do it with a pretty simple loan. And so getting back to the basics of trying to solve what we have as a big retirement crisis and getting back to the basics of doing it in the simplest way possible, I think that's pretty exciting, but usually fixed income and excitement isn't in the same sentence.
Now coming up, we're watching bank stocks as they face the annual stress test this week. More on the state of the banking system next. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more. Voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
This is Bloomberg Markets, and I'm Shonali Bassick. It's time now for the stock of the hour. We are watching the big U.S. banks. The big four are lower in this session. Later today, we expect results from the Federal Reserve's stress tests, and we have a preview here with Bloomberg's Todd Gillespie. When you look at what we expect today around after the market closes, how do we expect the Federal to be treating the banks in these stress tests?
Absolutely, Sonali. I mean, today at 4:30, we're probably going to expect the Fed to release their stress test results. Most people are generally, have kind of got to the point now where these big banks, they know what to expect, they know how to play the game. They all seem pretty optimistic. They've signaled to the market so far throughout the early stages of this year by increased buybacks that they're probably, expecting all to pretty much pass this test so far. But it really plays into the broader debate that we have now about capital requirements in the US.
We also have this days away from what we heard from regulators about living wills as well. When you take both together, how do you assess the strength of the banking system from where we sit?
Yeah, there's a lot going on right now. I mean, some big weights hanging over some of these banks, some key uncertainties. I mean, the big thing that really, everyone's looking towards is, how much more of a capital buffer are banks going to be required to hold under these Basel III endgame rules? I mean, earlier this week, our colleagues reported that, the Fed looks to be, significantly reducing the expected extra buffer that they're going to be imposing on these banks, which does give a bit more leeway, a bit more optimism in the system. But at the same time, on Friday, when these banks are allowed to release what kind of dividends, what kind of buyback increases they're going to give to their investors, they probably don't, they don't want to take the mickey just yet. They want to be cautious while we've still got a lot of regulatory uncertainty about exactly what they're signaling to the market and exactly, how liberal they're going to be on this.
Todd, we thank you so very much. We'll keep an eye on all of that after the market. Now, I want to also bring you some breaking news. Bloomberg reporting that the U.S. Supreme Court is poised to allow emergency abortions in Idaho. And of course, the Supreme Court abortion decision appeared briefly on the website as well. Balance of Power co-host Kaylee Lines joins us from D.C. to discuss. What do we know, Kaylee?
Well, Shonali, it's important to note that this is not necessarily a final opinion from the court. As you noted, Bloomberg and Bloomberg Law, specifically our colleagues there, did see this get posted on the website when the court issued
the Fed bids for 5-year notes total $2.4 billion.
But in what was seen, which appears to be an opinion draft, the court is poised to allow emergency abortions in Idaho. Just to provide some background on this case, Idaho was one of the states which, after the Dobbs decision in which Roe v. Wade was overturned, had a trigger law that automatically had a near total abortion ban go into effect with very few exceptions. The federal government then sued Idaho.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of
in
1
emergencies,
month,
which of course could be
92%.
inclusive of abortion. And what Bloomberg has seen on the website suggests is that the court has indeed ruled more in favor of that federal government in question, poised to allow emergency abortions in the state of Idaho. And this potentially could be very consequential if we do get a firm court opinion on this. Again, we have not gotten the final reading yet, but this could have a major significant impact in the events of tomorrow, in which we are to see the first presidential debate between Joe Biden and Donald Trump, in which we understand Joe Biden is expected to talk about abortion rights extensively and push Donald Trump on that issue, as he had appointed the justices that enabled the overturning of Roe versus Wade. Nonetheless, if this does indeed show up as the final opinion from the court, this would be a win for abortion rights, and the first time that the court has weighed in on a state's abortion ban since that Dobbs decision, which of course was 2 years ago this past Monday.
Kaylee, we thank you for all your reporting today. That is Bloomberg's Kaylee Lines. Now coming up, we're going to switch gears, get some insight on the state of mergers and acquisitions. A lot of questions with antitrust, a lot of questions before the election. We're going to speak to Daniel Wolf, partner specializing in M&A and private equity at Kirkland & Ellis. That's up next. This is Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
This is Bloomberg.
Past this regulatory cloud, and if we can get the direction of interest rates with greater clarity, then I think you're going to see a reasonably stuck M&A marketplace become unstuck.
That was Paul Taubman, who's the founder, chairman, and CEO of PJT Partners, one of the preeminent investment banks in this country, speaking with me at the Bloomberg Invest Conference. We're going to continue now the conversation in our Wall Street Beat segment. Joining us now is Daniel Wolf, partner specializing in M&A deals and private equity at Kirkland & Ellis. Also joining us is Bloomberg's star deals reporter, Michelle Davis. Daniel, you heard what Paul had to say here. Do you agree that there could be a cloud over the M&A market, given all the uncertainty we have ahead?
Yeah, I think, the famous thing that a lot of deal makers say when they talk about it, everyone says they're cautiously optimistic. I think I would probably say I'm cautiously pessimistic about what the rest of the year is going to bring. I think that the things that have been damping down M&A activity look like they're going to continue through the rest of the year. You're talking about higher interest rates. You're talking about uncertainty about the election. You're looking at the regulatory environment continuing to be, a cloud over deal making. So I think looking ahead for the rest of the year, I think we may be facing a lot of the same and have that
So in 10 minutes time now, at the top of the hour, the US is due to sell $70 billion in a 5-year note sale. So the prior bids cover was 2.3. The prior high yield was 4.553%.
What happened between then and now? Is it just those rate cuts didn't come, or?
I think the rate cuts not coming as quickly as people expected certainly has affected the market. There's no scientific formula for saying, hey, here's what's going to drive activity. But I think if you look at the current market, right now, the biggest
Just making note of the latest CFTC positioning data ahead of this auction shows that speculators were net short 1.45 million 5-year note futures. That's short 1.45 million note futures prices. A possible source of covering demand at auction.
And I think that
JP Morgan strategists say that despite the recent decline in yields, they see valuations as supportive and that the auction should be digested smoothly.
The market to take account of the higher interest rates, higher for longer continuing, and I think sellers are still looking back and saying, whoa, I like those valuations 2 years ago. And I think until we're able to bridge that gap, and whether it's because interest rates come down or sellers get more realistic about valuations, I think we're going to continue seeing a choppy market.
So another topic that obviously comes
Scarcity of assets, right? The IPO market for biotechs has been largely shut over the last couple of years, and that we always count on the IPO market to replenish the supply of companies to be acquired, and that has not happened. And the same with the private capital markets are not available for them. So we've seen less growth among the biotechs, less investment in that, and that it creates a scarcity of assets. Scarcity creates overvaluation, and pharmas are looking at the available targets and not necessarily being able to pencil it out and make it work from a valuation standpoint. Look, there are quite a few pharmas that have upcoming patent cliffs and certainly are going to be in the market looking to replenish their pipelines. I think it's going to take some time for valuations to set up so that the deals actually work. Just because you need to replenish your pipeline doesn't mean you're going to pay any price to acquire the available assets.
We have less than a minute left here, but curious, you know, this idea of where are the large-scale deals in pharma, to your point on whether you're in a Democratic or Republican administration, is 20 the new 50? You know, is 10 the new 20? Are large-scale deals going to be able to get done at all?
Right. Well, look, you put the regulatory overlay, you put the valuation questions, and yeah, I think what we've seen, if you look at the activity level across different deal sizes, the middle, that 2 billion to 10 billion or even 20 billion, that has actually normalized at historical levels. What's been missing is those mega deals at one end and the whole lower end of the market. The engine of the market, the middle market, the 500 or below, is well below historical levels of activity. I think, you know, there's different drivers of each of those, but until we get recovery on both of those, I don't think we're going to be able to say that M&A is back with the exuberance that we want to.
Certainly a very interesting year. Thanks to Daniel Wolf, partner specializing in mergers and acquisitions and private equity at Kirkland & Ellis, and our own Michelle Davis. I'm Shonali Bassick. That does it for Bloomberg Markets today. Of course, we are watching a market here that has been trying to stick into the green, but certainly flipping a little bit into the red territory. Stick with us through the close. We'll have much more markets for you ahead, as well as balance of power ahead of a big presidential debate tomorrow. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. From the world of politics to the world of business, this is Balance of Power. D.C.
It's the opinion we were not supposed to see today. Welcome to the fastest show in politics. As Bloomberg News learns, the Supreme Court is poised to allow abortions in medical emergencies in Idaho. This is based on an opinion that was briefly posted on the court's own website. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, we didn't think we'd be talking about this. We thought the court was done for the day.
Formally issuing two opinions this morning
the $70
billion
and inadvertently
auction.
posting what appears to be a copy of this opinion in this case, which would be the first time that the court has ruled on a state's abortion ban since the overturning of Roe v. Wade with the Dobbs decision. That was 2 years ago, just this Monday. Of course, what Bloomberg and Bloomberg Law specifically has seen here is a suggestion that the court is poised to allow abortions in medical emergencies in Idaho. Of course, the federal government had sued Idaho after its trigger law near total abortion ban went into effect immediately after Dobbs, essentially arguing if a hospital receives Medicare funding, it has to perform abortions if necessary in emergency scenarios.
We all remember when the Dobbs opinion leaked via Politico. This is not a leak. This, as Kaylee said, looks to have been an inadvertent posting. The question that we all have is, will the court follow on with a formal ruling at this point, Kaylee, which would be very unusual?
Yeah, so far Bloomberg has not received an immediate comment from the Supreme Court, but of course we're going to continue to follow this breaking news story for you. First, though, let's get a check on the markets with Charlie Pellet at the New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. We have got stocks trading mixed right now, little change. Key takeaway at this hour on the S&P, down by 1 point. Stocks are struggling in the final stretch of a very strong quarter that has seen a small group of high-flying tech names lead the way. NVIDIA, not today. NVIDIA down, dropping by 2.1%. S&P lower by 2 points, down less than 1/10%. The Dow up 36 now, up 1/10%. NASDAQ up 32, a gain of 0.2%. 10-year yield 4.30% with the 2-year 4.74%. Spot gold down 0.8%, down $19 the ounce right now. Gold at $2,300 even, while West Texas Intermediate crude $80.96 a barrel, a gain of 0.2%. FedEx shares surging 14.6% after forecasting profit above Wall Street expectations. Rival UPS also higher, up now by 3.3%. And then after the close of trading today, we'll be hearing from Micron Technology, up now by about 0.5%. So again, recapping, we're looking at a mixed day for the U.S. equity market. S&P right now down 1 point. NASDAQ and the Dow both moving higher. Balance of power continues now. Back we go to Washington. Once again, your hosts, Kaylee Lines and Joe Matthew.
All right, Charlie Pellet in New York, thank you so much. Meanwhile, here in Washington, we are all focused on the news that Bloomberg just exclusively broke. The Supreme Court inadvertently today posting a copy of an opinion on its website that would suggest the court is poised to allow emergency abortions in the state of Idaho. Joe, this is a big deal, not final yet, as this is not a formal issuing of an opinion, but still suggests that the court in this case may be delivering a win for abortion rights.
That's right. And for Joe Biden, the day before the first presidential debate, the timing here is remarkable. Kaylee, we're in the midst of a 3-day tour here when it comes to opinions. We did expect and still do to get more tomorrow, but we thought the court was done for the day. We got 2 this morning, and this dropped a short time ago thanks to our team at Bloomberg News and at Bloomberg Law bringing this to us now. The question remains once again, will the court do anything formal? And we want to turn to June Grasso from Bloomberg Law, the host of Bloomberg Law here on Bloomberg Radio and TV. And June, it's great to see you here. I suspect you didn't think we'd be talking about this either after this morning's opinions were released. This is going to lead to a whole investigation. We have no idea how this was posted, right?
Right. You know, it could have just been some administrative assistant by mistake posted it and then took it back. I mean, I'm sure there'll be an investigation into this, and hopefully you'll get more information than you did on the Politico leak of the Dobbs decision. But if, you know, what we see is true, it's a huge decision, and it means, and it also affects other states like Texas that have similar laws. I mean, this case was so important that the trial judge had issued a ruling putting this law on hold and saying that, you know, the emergency procedures could go forward. And the Supreme Court said no, they put a stop to that, and then they decided to take the case without it going to an appellate court. So that's how important this this is. And, it could show whether or not the federal law is going to take the place or supersede the state law, which is what the Biden administration argued in this case. They said, if you're taking, as Kaylee said, you're taking Medicare funds, you have to follow the EMTALA law, and that provides for emergency room procedures of abortion if a woman's life is seriously at risk. And during the oral arguments, Justice Kagan was really sort of, I want to say she was emphatic about saying that, you don't have to wait until the woman's life is in jeopardy, is in threat, in order to have this procedure. And it was the oral argument, you couldn't tell which way the court was going to go. I mean, you knew that the three liberals were going one way and the three very conservatives were going the other way. But then the three in the middle, Chief Justice Roberts, Justice Amy Coney Barrett, and Justice Brett Kavanaugh, where were they? They were all over the place.
Well, of course, we'll await finding out for sure who the drafter of the final opinion is. But in what was briefly posted online, they indicated that the majority is going to dismiss this case as improvidently granted, which probably relates to what you were just speaking to, June, whether the court should have taken this up in the first place. But this is a kind of a pattern I've noticed emerge with recent opinions where the court doesn't seem to necessarily be deciding the merits of the case, but rather standing, as was the case in the social media Biden administration relationship ruling they made earlier this morning, and in the other abortion-related case, access to mifepristone, which they did rule in favor of. They did so on the grounds of standing. It doesn't seem that they're necessarily deciding the merits around these abortion rights, June.
You're right. Throwing this out as improvidently granted is another way to dispose of it. And it's because they're trying to get, they're trying to get 5 votes in order to decide the case. And in a lot of these cases, the easiest way is to say there was no standing. Now, the mifepristone case, there was no standing there. Everyone who saw that initially said, why do these doctors have the right to sue? And it's still going to go forward. States are still trying to sue over that. So in the mifepristone case, that was definitely no standing. But in the case today, they found no standing. And that, they could have gone either way. So it's an easier way for them to deal with it. But what happens is the lower courts don't get guidance, and we don't get information as far as the public to know where they stand on these issues. How far can the Biden administration go in correcting misinformation online now? We don't know that because the decision is off on a procedural ground. And I had a professor I talked to recently say that, lawyers can find a procedural reason for anything, which is true. You can find a procedural reason if you're looking for it, and they're looking for it, it seems. Yeah.
All right, June Grosso, host of Bloomberg Law, thank you so much for your instant analysis on this breaking news story exclusive to Bloomberg, the Supreme Court poised to allow emergency abortions in Idaho. We want to get more reaction now with a special guest, I'm pleased to say, who is joining us here in our Washington, D.C. studio. Dana Nessel, the Attorney General of the state of Michigan, is now joining us. Welcome to Balance of Power. Thank you so much for being here while you're here in Washington. Could I just ask you first about your reaction to the news Bloomberg has broken today, this opinion that seems inadvertently to have been posted on the website, but is a court ruling in favor of abortion rights, it seems, or poised to at least?
Well, fortunately in Michigan, in the wake of Dobbs, we had very restrictive laws that were on the books that were unenforceable. But in 2022, we passed the Reproductive Freedom for All ballot proposal, which enshrined reproductive freedoms into our state constitution. So we haven't been worried about this particular situation in my state, but I've met with women in states with very restrictive bans all over the country, and I can tell you that women of reproductive age and the people who love them all around the United States are probably collectively sighing a breath of relief right now because of how incredibly scary it is to think that you could be in this situation where you need emergency medical care, you're facing the loss of an organ, your fertility is at stake, and you're literally looking at potentially dying and having physicians have to violate their Hippocratic oath and say, I can't treat you because I'm afraid of going to jail for it. So I think for women all across America, this is a victory if that is, in fact, an accurate assessment, what was on the website. It does give me some pause that now this is the second time in a few years that we're seeing something accidentally posted or distributed, and it makes me wonder what's going on at the United States Supreme Court right now. But, we've seen this exponential rise in both maternal mortality as well as infant mortality ever since the Dobbs decision came out. And hopefully, if this is a real ruling from the court, it will do something to curtail the number of deaths we've seen.
So are you encouraged then to see what is apparently forthcoming from the court, and I wonder if you think they should just come out with it today, following the ruling on mifepristone, maintaining access to the abortion pill, or are you discouraged that both, to Kaylee's point earlier, have been essentially rulings on standing?
Yeah, I have a theory about that.
Yeah?
I think that these are not cases that the High Court wanted to hear. I think they were sort of forced upon them by incredibly conservative circuit courts of appeal that really have forced the hand now of the United States Supreme Court. And I've seen decision after decision where I don't think that the justices wanted to rule on this particular case at this particular time. I don't think that the majority of justices, and by that I mean 6 of them on the Supreme Court, have an interest in restricting Second Amendment related rights. They don't like, in general, the gun safety laws. They don't like the use of mifepristone, but these are poor vehicles that have come to them to allow them to further restrict abortion rights or gun safety measures or things of that nature. So what we're seeing is they are finding other ways to dispose of these cases without having to rule on the merits, and that allows them the freedom in the future to say, well, we're not contradicting a prior decision. We're not overturning any sort of precedent. We got rid of that case on standing, and that's what they're continuing to do.
But should the court not have expected these kind of challenges to ultimately reach them after they ruled in Dobbs to essentially overturn the constitutional right to an abortion? It was only inevitable that certain state laws or access to certain procedures or medications were going to have to be called into question just because of the uncertainty that ruling created, no?
You would think so, and you would think that that would be their thought as well. But I think some of these cases are just so controversial and so antithetical to public opinion. And you already have the Supreme Court in a place where, we've never had such low confidence or respect for this court. They've been mired in ethical scandals. And every time they issue a ruling that is deeply unpopular with the public, they risk having their integrity impugned more and more. And so I think that might be part of the calculus with some of these rulings as well. And again, because these are cases that are being, essentially tossed on standing or improvidently granted or something of that nature, it does still leave room for future rulings where they can still continue to chip away at reproductive rights or the rights of people to have, gun safety laws or other things that are, frankly, very popular in America.
Let's talk about some more future rulings, because the next couple of days are going to be awfully important as we spend time with Michigan's Attorney General Dana Nessel. This year, you charged 16 people for falsely claiming to be electors for Donald Trump in the 2020 election. We're expecting a ruling on some of the charges leveled against January 6 rioters, if we can call them that. The idea of obstruction, which brings us back to the Enron case, whether this is the same thing as hiding paperwork when we talk about obstructing, in this case, an official proceeding. What's the court going to say about this?
Well, it's hard to know what they're going to say, but it's clear what the January 6 rioters were trying to do. And it's clear, I think, as well, what the former president of the United States was trying to encourage them to do. We have seen, obviously, through the January 6 committee testimony and, of course, the discovery in cases all over the United States, well, I should say swing states, especially including my own, that there was a concerted effort to undermine the election, and to do so by making sure that Congress could not meet and could not properly convene to vote.
Is this law broad enough to apply, though, in this case?
You know, I guess we're going to have to see what the court says, but I think that it has to be, and it should be, and we certainly have to make certain that we have laws in place that specifically indicate, right, that it is improper and it is illegal to disrupt that type of a proceeding, because if so, I mean, if we're not going to say that what they did was illegal in this set of circumstances, how are we going to continue to administer elections? Because this is part of the election process.
Well, and of course, we're still relitigating what happened during the election process of 2020, both in the immediate aftermath, what was happening at polling centers with fake electors, for example, or even on January 6th of 2021. How concerned are you, specifically in the state of Michigan, which, as you say, is going to be a critical swing state that could be one of the deciding factors in the outcome about election security in this cycle in 2024?
Yeah, one of my biggest concerns, and I think this involves all of the many Trump cases that have been pending, many of them, of course, put on hold because of the Trump immunity case. You know, and this goes to many of the cases that were charged in Michigan as well. And there are a lot. It's not just the false slate of electors case. We have a variety of cases that are relevant to efforts to try to overturn the election in Michigan in 2020. Those cases have moved forward at just a snail's pace. And as a result, here we are. 4 years later, we're going into yet another presidential election, and we've not seen the cases from 2020 disposed yet.
Take $490.156 billion at the Fed reverse repo operation.
I mean, there's adjournment after adjournment on these cases. It's taking a very long time for courts to issue rulings. And I'm worried about the impact it's going to have, because one of the things about enforcing the law is ensuring deterrence against people continuing to, engage in that kind of illegal activity, which, again, is so detrimental to our democracy as a whole. So I am worried with the Trump cases not moving forward before the election, with a lot of our state cases not going to be completely disposed of before the election, that it'd be sending the wrong message to people, that the people weren't held accountable when they did this 4 years ago, so maybe you won't be held accountable if you engage in the same activity now in 2024. We just can't have that.
Madam Attorney General, our listeners and viewers should know that you're the first openly LGBTQ statewide elected official in the state of Michigan. Might be even more remarkable to learn that you're only the second nationwide, which is remarkable in 2024. Another remarkable statistic is the thousands of military veterans who were kicked out of the service, pardoned now apparently from Joe Biden for being kicked out on the former military ban on gay sex. Is your reaction, good job, Mr. President, or what took so long?
Well, look, I think that President Biden is doing everything in his power to ensure that LGBTQ people are protected in this country. And he's done that for many years. I think people forget that when Barack Obama took office, he was not in support of same-sex marriage. And really why that changed in large part was because of the urging of his vice president, Joe Biden. He was the first one to say it out loud and really apply pressure to President Obama in that regard. So I think just as this is continued theme of, you have one candidate for president, our incumbent, who supports the LGBTQ community, and Donald Trump, who wants to set us back 30, 40, even 50 years.
Come back and see us next time you're in Washington. It's great to have you at the desk today on Bloomberg TV and radio. Michigan's Attorney General Dana Nessel, we thank you for being with us on the fastest show in politics. A lot more ahead, live from Washington. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index struggling as NVIDIA sells off again. NVIDIA right now down 1.7%. With the S&P lower by 4, down less than 0.1%. Little change there. Has been swinging between gains and losses. Dow Industrials, though, up 20 right now, a gain of just about 0.1%. NASDAQ up 27, a gain of 0.1%. 10-year 4.30% with a 2-year 4.73%. Gold down $17 the ounce, 23.02, a drop of 0.7%. And West Texas Intermediate crude oil up 0.7%, 81.41 right now for a barrel of WTI. Rivian shares are soaring as Volkswagen plows $5 billion into a tie-up with Rivian, which is the closest would-be rival to Tesla. Right now, Rivian is up 21.7%. Volkswagen ADRs down 1.6%. Tesla, meanwhile, higher by 3.7%. And among other EV makers, Lucid Motors trading higher by 4.4%. So again, recapping, we are looking at a mixed market right now with the Dow, NASDAQ, they are both higher. S&P trading lower in the red by just about 0.1%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the day's trading in New York. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we are dissecting an accident, it seems, related to the Supreme Court's website today. The Supreme Court just out saying that the opinion on abortion, the emergency Idaho abortion case, was inadvertently posted earlier today. Bloomberg Law, of course, saw it when that happened and found that, according to the copy opinion that was on the website for a brief period of time, the court is poised to allow for emergency abortions in the state of Idaho.
Yeah, we'll see if we actually get a ruling that follows this. We thought the Supreme Court was done today. There were 2 official rulings this morning. Kaylee, we could get more tomorrow. Maybe something drops in our lap, of course, if that happens. happens on this day. You'll hear about it on Bloomberg TV and radio. The question is, did somebody do this on purpose? Was it an accident? Inadvertent would suggest as much. Will there be an internal investigation that leads to nowhere, like the leak of Dobbs? All these things have yet to be answered, but it sure looks like good news for abortion activists and for Democrats. And we're joined at the table right now by the senior spokesperson for the DNC, Hannah Moldavan. Didn't think we'd be talking about this today, but welcome to the table. It's great to see you. What does this mean for Democratic messaging the day before what could be the most important presidential debate of the cycle?
Well, thank you for having me. And I want to make it very clear why we're even talking about this right now. And that's because the state of abortion rights in our country is because of Donald Trump. When he was elected, he bragged about electing 3 conservative justices and overturning Roe v. Wade. And because of that, we see a dire state in our country for women of reproductive age. 21 states and counting where women don't have access to reproductive freedom that they've enjoyed for 50 years. 1 in 3 women of reproductive age can't receive that care that they need. And if Donald Trump wins in November, it's only going to be more of that. And so the fact that we're even talking about this today and that women's rights have been stripped away is because of Donald Trump.
And yet this court opinion would suggest, or the copy that was briefly posted would suggest, as their mifepristone ruling did, that they aren't further taking away rights potentially with these decisions. They allowed mifepristone access to maintain. They are allowing in emergency situations in which the stability of the mother would be risked without having an abortion to go forward. Is this, in some sense at least, taking away a talking point as we get farther and farther from Dobbs?
I think when we look to what's at stake in November and access to abortion, those stats I just mentioned show how many women are already being impacted, right? They go to the emergency rooms for this access, and some of them are turned away. What we're seeing is that women are fighting back. Americans are fighting back. 9 out of 10 support what we saw today, if that ruling ends up being what the Supreme Court puts out. But it takes away nothing. What we see is Donald Trump, who has a plan to continue to threaten abortion rights. And then in contrast, you see a president and Joe Biden and a vice president and Kamala Harris who feel the exact opposite. They want women and Americans to have freedom of reproductive rights, to have freedom in our democracy. And Joe Biden himself said he wants to restore Roe v. Wade. So I think when we look at what abortion means and abortion rights mean for women this cycle, it couldn't be clearer who stands with them and who stands against taking away their access to this and their freedoms.
You're bringing us some very carefully crafted messaging right now, and I don't doubt that you believe everything you're saying, but you're a professional. Joe Biden's got to go into the lion's den to deliver this message tomorrow night. Is he up for this job? He's up at Camp David tomorrow. Do you have a line to the president? What do you expect him to say?
I wouldn't imagine to speak for the president, but what I can say is that it's been 4 years since Americans have seen Joe Biden and Donald Trump on a debate stage. Yeah. A lot has happened in those 4 years. We just mentioned women's rights being taken away. Donald Trump has been impeached twice and is now a convicted felon on 34 counts. What Joe Biden needs to do is speak directly to the American people about what he's done. So really fought for the working class, the economy, the fallback from COVID was really softened and actually done really well under President Biden, right? More than 15 million jobs created. Joe Biden actually took on big pharma for the American people to lower costs of prescription drug prices. So I think that Joe Biden is prepared. He won 2 debates against Donald Trump before, and he can run on his record in what he wants to do, which is make sure that every American has a fair shot.
Well, as we talk about running on the record or touting policy that he has been able to undertake during his administration, is it not problematic for messaging purposes and for the party at large that has the potential to get lost in the analysis of just his performance and the kind of energy he showed as an 81-year-old president? Can the policy actually get through to the voter who is only concerned with whether or not he is showing his age and appearing mentally acute?
There's going to be a clear contrast that Americans will see on Thursday on the debate stage. And it'll be against a president who cares for them, who has passed policies that will lower prices for them, who's continuing to fight inflation, right? The Democrats in Congress and Joe Biden passed the Inflation Reduction Act. No Republican voted for that, right? So this is a party and a president who is where he needs to be on the issues. And they'll then see Donald Trump, who's all about himself, revenge and retribution. I think it will be very clear on that debate stage what the two future visions of the country will look like. And I think Americans will see a president in Joe Biden who is fighting for them and one in Trump who is fighting for himself.
When's the DNC going to start calling out Donald Trump for his mental acuity?
I think that, I don't speak, I think that when you look at Donald Trump's rallies and you see what he is saying, he doesn't make sense. He is saying things that aren't true, right? We even saw this on January 6th with the big lie. He is pushing forward things that are not factually accurate, and Americans are going to be able to see that maybe for one of the first times as we're waking up to the fact that there's an election in November. They're going to see that on the debate stage, and they're going to see the opposite in Joe Biden, we believe.
So is Joe Biden's job tomorrow night to be a live fact checker of Donald Trump? Can he do that?
Joe Biden's job is to show what he's been doing for the American people, which is the contrast to what President Trump will be doing. President Trump is going to do what he does. I know there are specific rules about this debate that have been agreed upon by both parties. But what Joe Biden needs to do is make sure he knows what he's done, talk about what he's delivered.
As we do so, we want to get a Republican
My God, this is like watching paint dry.
Context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average up now by 46 points, up 0.1%. S&P, though, in the red. Stocks are struggling in the final stretch of a strong quarter that has seen a small high-flying tech group lead the way. Today, however, we got NVIDIA among those names, moving lower. NVIDIA down 2.1%. NASDAQ, though, up 37, a gain of 0.2%. Micron, by the way, after the close of trading. 10-year yield 4.31%, 2-year 4.74%. Gold now down $19 the ounce, holding just above 2,300, down 0.8%. And West Texas Intermediate crude up 0.3%, 81.07 right now for a barrel of WTI. New home sales slumped in May as elevated prices and mortgage rates continue to challenge the housing market. Among some of the housing names that we are following for you today, we do have shares of those companies trading a little changed. Case in point right now, we have got shares of Lennar among the home builders today down just 16 cents. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Carnival out with earnings before the market opened yesterday. Stock was up about 9% on that news. It's up about, well, it's up 20% since June 14th. It's up 8 days in a row. The most recent optimism, though, coming as Carnival raised its full-year earnings outlook after strong demand for cruises helped it post a surprise profit last quarter. So let's get to it, and let's get to our interview on this Wednesday. For more on the outlook of the company and the industry overall, great to have back with us Josh Weinstein. He is President, CEO, and Chief Climate Officer over at Carnival, joining us from their headquarters in Miami. Josh, great to have you back with us. How are you?
Yeah, I'm doing well. Thanks for having me.
Well, it's good to have you here. It feels like you guys are firing on all cylinders. Your booking position, you're booked for next year already ahead of 2024 levels on occupancy and ticket prices. Give us more color around that. Like, as I said, it feels like you're firing on all cylinders.
Yeah, I think that we are, and it's really gratifying to see for the whole team. You know, we just wrapped up our second quarter, and we were able to report record revenues, record yield, record per diems, record EBITDA, and record operating income. So that was a really big quarter for us. And the best news about it is that was the actual results. But from a bookings momentum standpoint, as you were saying, the bookings that we took in just in the second quarter actually set another record. And it was the record for the most bookings we ever took for the forward year out. So in this case, 2025. So as stellar as 2024 is looking when it comes to the demand profile and the booking trends, 2025 is already shaping up to be even better.
So you can, like, pack up your bags, go home for a year. No, I'm just kidding. Hey, talk to us about...
Maybe go on a year-long cruise.
Go on a year-long cruise. Hey, how broad-based is it? Like, break it down for us. You guys have several brands, and I know about a year ago you did a restructuring when it comes to those brands, but how broad-based is it in terms of customer segment and geography?
Yeah, the great thing is it is exactly that. It is broad-based. So we're seeing strength on both our North American brands and our European brands. You know, to put that into perspective, the past quarter, the second quarter, because we're a portfolio of world-class brands, you know, brands are coming in and out of different economic cycles, different geopolitical issues. And whereas a couple of years ago, we were talking about our European brands just taking a little while longer to catch up than our North American brands coming out of our pause. In the second quarter of this year, their yields were up over 20% year over year. And so we're getting this momentum across the Atlantic and from all segments, be it contemporary, be it premium, be it luxury. We're really seeing strength in what we have to offer, which candidly, it isn't surprising to us because, first of all, as we've talked about before, we are an incredible value. So even though we've been successful in really pushing on that demand and getting our pricing up, we are still an incredible value versus alternatives. And not only are we an incredible value when you look at our alternatives, the service levels that we provide are unmatched. And they're just as good as they were from before the pandemic, which is not something that a lot of hospitality outfits can say.
I'm wondering about the trends that you're seeing when it comes to onboard spending, excursions. Are there any signs of lower spending once consumers are on board, or are there any signs of weakness that you're seeing anywhere, Josh?
Excuse me, no, not particularly. You know, in the second quarter, our onboards were up about 4% per diems year over year, and as you know, last year was up incredibly over the pre-pandemic period. So, you know, the trends that we look at to understand the strength of our consumer, we've got the results, we've got the onboard spending in real time, we got the bookings, and all of those metrics for us are telling us that our consumers are incredibly strong. We've got incredibly strong brands that really resonate with the segments that we're going after. And people are absolutely still willing to spend on experiences. And that is exactly what we offer. Great experiences, we create memories and happiness for a lifetime.
Hey, Josh, one of the numbers that struck me too is your total customer deposits reached an all-time high of $8.3 billion. That surpassed the previous record by over $1 billion, $1.1 billion to be exact. Does all of that turn into revenue that shows up ultimately on the balance sheet? In other words, are there cancellations that can happen? What do you see around that?
Yeah, there are cancellations that can happen, but the vast majority of that is going to come through ultimately in revenues. So that's a bit of a forward indicator of how we're doing. And that increase is really a combination of increased pricing, us elongating the booking curve, so taking bookings even farther out than we had even just a year ago. And, you know, we're doing a better job of bundling our offerings so that people can spend in advance of the cruise, not just for the ticket price, but certain onboard experiences. So it's a combination of those things that we've been very focused on that are attributing to that increase in customer.
Well, that's something we've talked about, right? All of the bundling that happens before they even step on a ship, and that ultimately can lead to more spending. Because that thinking of, I've already paid for everything, right? You get on ship and you're like, wait, I can still spend. Like, that really works.
It does really work. It does really work. I mean, it's a good amount of time that goes between the initial purchase impulse and then getting on board. So having what we refer to as a second wallet available is real. And actually, folks who buy something of onboard spending before they get on the ship, they spend more on board than those who don't do anything in advance. So it's a very strong opportunity for us.
Okay, Josh, I'm wondering about pricing pressures that you may be facing at the company. You're talking about consumers who are out there spending. That's certainly strong. What about where you have pressure? Food prices, labor costs, fuel costs. What are you seeing on that front?
Yeah, you know, I mean, the good news is there's been the deceleration of inflation. We don't see disinflation, but we certainly see a deceleration, which is encouraging. I think if you look at our P&L, you'll see on the crew and labor side, our teams are doing a real good job of trying to be mindful of the P&L and certainly pay a good living to people, but doing so efficiently. The biggest things that we see as a change from pre-pandemic times to now is probably, you know, that combination of two of the things that you said, food and fuel. Those are inherently more expensive, and we're doing our best because those are always going to be inputs into our business. We are laser focused on reducing consumption, because no matter what the price is, if we use less, we will be better off. And so I'll give you two examples. On the food side, we are looking every which way we can to cut the amount of food we put on board, cut consumption, to be more mindful of the fact that we've got a lot of food waste in any given year. We've actually, because we put this focus onto it, we've been able to cut our food waste by over 40% per person per day versus where we were before the pandemic. And that is because we are giving so much thought to reducing the whole consumption cycle while still giving guests everything they want, but just being more thoughtful about how we do that. And on the fuel side, not only is it good for the environment, it's good for the bottom line. And even though we are over 30% bigger today than we were in 2011,
NYMEX diesel July futures settle at $2.53 a gallon. NYMEX gasoline July futures settle at $2.54 a gallon. NYMEX natural gas July futures settle at $2.62.
So by being laser focused on that, not only
NYMEX WTI crude August futures settle at $80.90 a barrel. That's up 7
speaking
cents
of being
or
laser
0.09%.
focused, you guys still have, I think, roughly, I was looking at the Bloomberg, maybe around $30 billion of debt still on your balance sheet. I think $4.1 billion maturing by year end. How might the bookings and the outperformance there maybe power help with debt reduction? Like, what's your plans on that?
Yeah, absolutely. That
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial News Pro for a year's worth of our service for the price of 1 month. That's a 92%.
As we get through the remainder of this year, that should get us to leverage metrics heading towards about 4.5 turns, which is a big inroads versus where we were just a couple of years ago. Now, what we see as a plan going forward is, in addition to the fact that our increased EBITDA and better business is going to help our metrics and help the shape of our balance sheet, we have intentionally reduced our supply growth, our pipeline of new builds in the medium term. And so we're looking at a profile with only one new build coming in 2025, none in 26, and then one in each of 27 and 28. What that does is it will allow us to take billions of dollars of free cash flow each year for the next several years to pay down debt. And that's exactly where we're focused. I was a treasurer for 10 years, and we were an A- company. I know the power of having a fortress balance sheet.
Hey, Josh, I don't want to belabor the point here, but we're hearing over and over again from people not like you that they're starting to see some cracks form in the consumer. We're seeing some price wars happening in fast food right now. For example, are you seeing weakness anywhere in your business or anywhere in the consumers that you deal with?
At a general level, no, we're not. We see the demand profile is incredibly high, and I attribute that not just to the value gap, not just that we're getting better at what we're doing, but if you think about it, you just put yourself in the minds of a consumer. If they are stretched, if they are looking to figure out, how do I make my vacation dollar go further? That is playing into what we have to offer because we are bottom line, we're a cheaper alternative than lots of other things that they could choose to do, and they're seeing the value of that. They have friends, they have family who have taken holidays with us, and they can champion us on our behalf.
Josh, so appreciate it. Have a great summer. Josh Weidenstein, he's president and CEO of Carnival Corporation, joining us there from their headquarters in Miami.
Hey, let's go to Washington, D.C. now for a check of the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hi, Tim. The U.S. Supreme Court is poised to allow abortions in medical emergencies in Idaho. That's according to a copy of the opinion that was briefly posted on the court's website. Michigan Attorney General Dana Nessel was talking about that ruling that was obtained by Bloomberg Law.
We've seen this exponential rise in both maternal mortality as well as infant mortality ever since the Dobbs decision came out. And hopefully, if this is a real ruling from the court, it will do something to curtail the number of deaths we've seen.
Dana Nessel was speaking with Bloomberg's Joe Matthew and Kaylee Lines. Now, the decision would reinstate a lower court order that ensured hospitals in the state could perform emergency abortions to protect the health of the mother. The Supreme Court's press office says the opinion in the case had not been officially released. The Supreme Court has also rejected a challenge to the Biden administration's efforts to push social media companies to remove content believed to be disinformation. They didn't rule on the merits. Rather, the justices said the plaintiffs didn't have standing in the case. The court also pared back a public corruption law, saying that state and local officials who accept gratuities are not covered by a federal bribery statute. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba works here?
Yeah, he's super nice.
Sam Adams Summer Ale, perfect for summer.
Oh, yeah.
It's Sam season!
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's SIBO, the exchange for the world stage.
This is the Ergo Smart Base from Tempur-Pedic, and it responds to snoring so you don't have to. So no more nudging your partner or sleeping on the other side of the house, because the Tempur Ergo Smart Base actually detects snoring, then automatically adjusts to help reduce it. All night, every night. Tempur-Pedic, ranked #1 in customer satisfaction with mattresses purchased online by J.D. Power, 3 years in a row. Learn more at TempurPedic.com.
Hello, I'm Ethereum.
And I'm Big Finance.
You look really tired.
Just calling it a day.
But it's 4 p.m.
Yeah, and I've been working nonstop since 9:30 this morning, so.
9:30? You don't say.
Yep. You'd want a little shut-eye too if you've been moving billions around the world.
Well, actually I do. You know, stablecoins, NFTs, loans. People can access me 24/7.
What?
But look, everyone's different. You should get your rest. You'll get after it tomorrow.
Tomorrow's Saturday.
Monday. You'll get after it again on Monday.
Surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big, American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are churning in the final stretch of a strong quarter that has seen a small group of high-flying shares lead the way. S&P now down 3, drop there of 0.1%. NASDAQ 100 index just turning negative, down 1 point, little change there, while NASDAQ is up 35, a gain right now of 0.2%. The Dow up 0.1%, higher right now by 33 points. 10-year 4.31%, the 2-year 4.74%. Gold down $19 the ounce, 2,300 even on spot gold. Drop now of 0.8%. The West Texas Intermediate crude up 7 cents a barrel, 80.90 right now, a gain of 0.1%. Rivian Automotive shares up 21% as Volkswagen plows $5 billion into a tie-up with Rivian, which is the closest would-be rival to Tesla. We've got Tesla shares trading a little, actually up 4.5% right now, 195.90 on Tesla. Lucid moving higher by 5.2%. Volkswagen, the ADRs down 1.7%. Again, recapping, S&P down 4, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, he is the wealthiest person in the world, depending on the day, but I mean, come on. He has spent some 4 decades building up the House of Arnault and the clothes and accessories that signify status among the global elite. You know brands that include, of course, Louis Vuitton, Christian Dior, Bulgari. I'm going to hope I'm saying it right.
You wrote it, you read it.
Celine, Fendi, Tiffany, and more. He's not done. Let's get to the new monthly issue of Bloomberg Business Week. We welcome in the editor, Brad Stone, author of Amazon Unbound and the Everything Store. He, too, along with Bloomberg's Angelina Rasquette, wrote the cover story that is now available on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. Brad, we have talked about, been looking forward to this new redesign of Bloomberg Business Week. But for those who maybe aren't in the know yet, remind us about the redesign from the ground up.
Yeah, sure, Carol. So Business Week is now a monthly magazine, right? That's perhaps unusual, but it's a 100-year-old brand that stands for examining the biggest companies and names in business. And we continue the tradition every day on Bloomberg.com and now in the monthly magazine. This is a magazine that I think will surprise a lot of people. It looks different. It feels different. It's thicker. And our mission is to put a critical, significant force in business or tech or politics or economics on the cover every single month. And as you say, this month it's Bernard Arnault. I did not know a lot about him before starting this journey, but as you say, one of the wealthiest people in the world, $210 billion, has fallen a bit since the French parliamentary elections. Right. I think he'll be just fine. But he's now the 3rd wealthiest person in the world, and I think not very well understood.
Well, it's interesting that you mention elections because politics actually plays a big part in his origin story. So just sort of get into that a little bit.
It's interesting. He grew up in the north of France. His father ran their family's manufacturing business, had a small real estate component. He, highly accomplished, went to the best engineering school in France, joined the family business, got his father to reorient towards real estate, moved to the U.S. after the left won the French elections in I think the late 70s or early 80s. You're testing my knowledge here of French history, and really didn't do so well in the U.S., but woke up to the possibility of these small little luxury houses, often family-owned, Christian Dior, Louis Vuitton, that weren't really being run as businesses, but were being more run as kind of cultural artifacts. And he was very opportunistic. He bought the company that owned Christian Dior out of bankruptcy in the early 80s and has been on an acquisition tear ever since, buying companies sometimes through sort of leveraged buyout means and assembling this huge empire.
Great story, though. I mean, Tim and I have been talking about this offline, about Christian Dior and a New York cab driver. Can you tell us a little bit about like that helped him kind of think about,
well,
right?
He tells the story, and it has moved into mythology or legend.
Lore,
but
right?
Apparently when he was a college student in the U.S., he asked a cab driver at JFK, do you know the name of the French president? And the cab driver did not know, but knew the name Christian Dior. And that, he says, sort of awakened him to the cultural resonance of these brands. And when we think about names like Louis Vuitton, Bulgari, Hennessy, Tiffany, which they recently acquired, it is interesting. I mean, these are brands that have done extraordinarily well in China. In a way that the Chinese luxury brands have never been able to do. And he's tapped into something that I think is true about this lifestyle and European tradition.
Well, I want to go to China now, because when he went to China in the early 90s, he tells a story of what he saw there. It's a far cry from anyone who's been to one of the mega cities in China in this day and age and seen one of the businesses that the company owns, perhaps on the famous street in Shanghai where all the luxury brands are. What did he see in China in the early 90s that gave him an indication that this is going to be a killer market?
Right. Well, we asked him about that, and in fact, I think the answer to that precise question was there was nothing. He was very skeptical. He said that one of his memories was that everybody was wearing Mao suits. And if you've got a luxury business and a fashion business, you're probably like, is this the right place for me? And also at the time, the Western brands were confined to hotels, tourist hotels. So they were operating a Louis Vuitton store at the bottom of like the Palace, in the basement of the Palace Hotel. But obviously, he has ridden and been aggressive in exploiting the rise of China and China joining and not just China, but lots of countries in the Middle East and in Asia joining the global economy, the concurrent rise of an affluent class, and then the psychological need, it's so interesting, of people who are newly rich to feel like they're a part of, that they're distinct from their fellow countrymen, they're part of the global affluent class, that they feel special.
Right.
And he's just tapped into that need and sold a lot of handbags.
I thought that was interesting too, that you got into, like, he understood the power of luxury logos in particular, right? And really understood that, kind of gave a marking to somebody who maybe was successful, but by having that logo kind of just cemented that position.
I think there was one point in the company's history where they were arguing that the Louis Vuitton monogram had ceased to be relevant. And you fast forward today, I visited Paris for the story, and next to the Louis Vuitton flagship on the Champs-Élysées is a new structure that they're renovating. We don't know what it's going to be yet, and they've covered it in a sort of monogrammed facade, so it looks like a big Louis Vuitton trunk. And the number of tourists who flock to basically a building under construction to take pictures talks to the global resonance of these marks. And you couple that with the way in which he has exploited celebrity, Pharrell Williams at Louis Vuitton, Jay-Z and Beyonce at Tiffany, go down the list. Rihanna started her own brand inside LVMH, and the way, celebrities flock to their shows. There's a reciprocal relationship. The celebrities posting on their Instagram, bathing in this aura of opulence that Arnault has created. It is about, yes, it's about the marks and the monograms. It's also about celebrity and a lifestyle that people aspire to.
He understands that. He understands social media. He's not on social media, though, right?
It's funny, all the kids are. And
he's got, what,
except
5?
for Delphine, the oldest daughter's not. The 4 other kids are. And Antoine, the oldest son, said, he's on it. And he monitors, but he's not posting. And they tried to get him on Twitter at one point before it was X, and he was apparently reluctant.
So you met him. Tell us about the meeting and meeting him for the first time.
Well, this might surprise you, but he was better dressed than I was. It's exquisite, right? I mean, the way he holds himself, the way he dresses, to me, he was very French. I was probably very American, but he was generous enough to do the interview in French. My colleague Angelina Rasquet and I interviewed him, and just extraordinarily patient. I got the sense that he enjoys talking about, we were not there to press him on succession, on what the next company he's going to buy. I mean, we break some interesting news about that in the story, but we really wanted to know, tell us, share your stories. Tell us how you built this business, how you think about operating 75 disparate houses together. What are the synergies? What was it like, visiting China recently, where in contrast to the first visit, throngs of people are out to see him and asking him to bless their babies. And so, I feel like he got into it and had a good time with us. And then just sat for this extraordinary photo shoot with Reuven Affendor.
It's gorgeous.
And which, makes for a really beautiful inaugural issue of the monthly Business Week.
Okay, we'll talk about the succession element to this in a few minutes, but before we get there, I just want to learn a little more about his empire, the real estate portion of this, because yes, he's known for these luxury brands, these luxury houses, but it's also a real estate company.
That's right. And another one of our colleagues, Natalie Wong, on the real estate desk here at Bloomberg News, really helped us with this. I would say it probably started more modestly a decade or two ago, buying real estate in Midtown Manhattan, on Rodeo Drive in LA. LVMH has a separate arm, sort of an investment arm, L. Catherton. They did a lot of deals through that. And over the time, it's gotten more and more aggressive, where they're now designing whole new shopping districts in cities like Miami, in Montreal, where a whole new luxury district is underway with LVMH as the primary backer, in Asia. And it just gives, well, first of all, a number of ways to win, not just on the sales, not just on the rent to rival companies who take store space, but on the underlying appreciation of the asset. Right. It's an extraordinary amount of power, because, we talk to rivals who say, if you're in the prime spot and LVMH wants it, maybe they're the landlord and you say goodbye because they're going to take the space from you, or the landlord is so intimidated by LVMH and its power that they force you to leave. And then we asked Arnaud, do you have too much power? And, his response is hilarious. It's along the lines of, well, if they're complaining, they're not very well managed. So he's got no sympathy. But this is a company, we talk about the advantages of the tech platforms and the power that they have to cast winners and losers. And I thought, with this story, I was writing about the opposite, a figure in a company that has amassed business power in another way. But I think it's sort of the same. I think the real estate is the platform, and they own the platform, and they pick winners and losers and can anoint themselves by giving themselves the primary location, perhaps, discounts on rent, or it's just like the muscle to go and say, the corner of Fifth Avenue and 57th is the luxury capital of the world. They own 3 of the 4 corners now.
It's pretty amazing. It's pretty well. So you talk about that power, right, in terms of this, boutique of brands, if you will. And I just wonder if regulators, though, think, okay, is there too much power? Is that a risk at all as he continues to buy more and more brands?
I don't. I don't think so. There's, we highlight some deals that are now being looked at in the U.S. They're not LVMH deals, right, but different sectors of luxury. But, it's a different set of regulators. There might soon be a different government in France. I probably don't know enough. I mean, I would sort of speculate that they would face more problems from a leftist government than a rightist. Right. And that does seem the direction that France is drifting in now. But, one of the nice tantalizing tidbits at the end of our story is that he has acquired a personal stake in Richemont, which is the owner of Cartier and some other brands. And, he says he wants to maintain its independence, but this is how it starts with him, how he went after Hermes and Gucci, famously, that, he is not, even though he's 75 years old, done with his empire building.
The wolf in cashmere is how some inside luxury circles have referred to him. You write about him laying off thousands of people after acquisitions. What's his reputation within the industry?
Yeah, I would say, well, first of all, the layoffs, that was early on when, he was acquiring some of these brands as part of, like Dior, larger companies with a lot of inefficiencies, and paring down to just the luxury assets. The wolf in cashmere was a phrase started by, I think, folks at Gucci and then later at Hermes, and the way in which he uses leverage buyout techniques to go acquire assets. I think he's viewed as as a intimidating figure who brings some pretty ruthless takeover tactics and business tactics to the world of luxury. But I think there's also a lot of admiration and respect for what he has achieved. I think at one point maybe there was a colder view of him, but how can you not admire right now, and particularly now that he's been a major philanthropic force in France and he's sponsoring the Olympics. There's probably more of a halo now than there ever has been.
Just last question: what do you think people might be surprised about him in your coverage of him in the reporting that might be surprised to find out? I know we covered a lot of ground.
Look, I mean, if you're a follower of this world, there's some stuff in here that will surprise you. If you're not a follower, if you're even a sort of quasi business informed person, you might think that Bernard Arnault is married to Selma Hayek. He is not.
Exactly.
That is one of his rivals, right? And so I think, but a surprising number of people have some of those, impressions. And so, and his wife is a concert pianist, extraordinarily impressive. So to understand who he is, his 5 children who all work in the business are also accomplished, and to understand how he has built this empire and the ways in which he now leverages his power, I think is going to surprise a lot of people.
Brad, we lied. One more question, because you mentioned the children. I promised we'd talk about succession. 5 kids. Very briefly, who should we be watching?
Yeah, I mean all of them, right? Because they're all remarkable. Delphine, who runs Dior, is the only daughter, the oldest daughter. She is the sole descendant on the executive operating committee of LVMH. So I think you'd have to say, like, she's got, she's probably, if we're going to talk about it in a race, and I don't know that they do, she would be the natural. But the way in which his youngest, Jean and Frederic, are getting increasing authority. Alexander, who now co-runs Tiffany & Co., and then Antoine, who is a non-executive chairman of Laura Piana and runs all the image and communication for the company. They all have their pieces, and my impression, by the way, in closing, is that like people we know well, even though Mr. Arnault is of advanced age, he has no intention of stepping back. He is in it for the long haul.
And if you're playing tennis with him, do mention that rival, because it might give you a little bit of an advantage. Anyway, read the story.
Just don't wear Nikes in the store.
Do not wear Nikes in the store. Incredible. Brad Stone, congratulations. The new launch of Bloomberg Business Week, now a monthly. Brad, of course, the editor of Bloomberg Business Week. Bloomberg Business Week now on newsstands, online, and of course, always on the Bloomberg terminal.
Hey, let's get a check on what's going on when it comes to the trade and business news. Here's Charlie Pellet.
Hi, thank you very much indeed. We are looking at a mixed market right now. ADRs, by the way, of Louis Vuitton, Moet Hennessy, LVMH. Right now, they are trading down 1.8%. We got the S&P, little change, down 1 point right now, less than 1/10%. Dow Industrials up 59, a gain right now of 1/10%. NASDAQ up 31, an advance there of 0.2%. 10-year yield 4.31%, the 2-year 4.74%. Gold down 0.9%, $22.99 the ounce, and West Texas Intermediate crude flat on the day, 80.84 right now. After the bell, we will be hearing from Micron Technology. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. And like we said, check out that new issue of Bloomberg Business Week. Great deep dive and getting a real feel of what's going on, certainly when it comes to Bernard Arnault. And you can catch it on our podcast feed in case you missed it. Having said that,
what's going on in the world of fast food?
One thing you might not find at LVMH.
There it is.
I don't even know. What a crazy segue. Apparently, the McPlant is not coming to McDonald's anytime soon.
All right, this is a most read story on the Bloomberg terminal, and it's about a test from McDonald's of its plant-based burger that they did in San Francisco and Dallas. Was not successful in either market. Those are the words of Joe Erlinger, the U.S. chief of the chain. He said this earlier today at a Wall Street Journal Global Food Forum in Chicago.
Yeah, I love this, right? Consumers just not looking for any kind of plant-based proteins from McDonald's. You might remember, and Erlinger was referring to a previous test in the markets that ended in 2022. The company has said plant-based food has fared better in European markets, but again, the McPlant, not happening, at least anytime soon. I personally love the fries. I mean, what's not to love? All right, for those of you on TV, the close is coming your way in just a moment. On Business Week,
we got a great program. Non-alcoholic wine coming up at the end of the show. Before that, the CEO of the Brooklyn Navy Yard. All that and more on Bloomberg Business Week.
Join TastyFX for award-winning service from a broker who gets why you trade.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Even with NVIDIA down, the AI trade never sleeps. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. You know what's also not sleeping?
What's that?
Amazon.
That's right.
Market
$2 trillion.
value, $2 trillion. And you can see that reflected in the S&P. Yes, it's flat, but it's that consumer discretionary that Amazon's such a large chunk of that's outperforming in the S&P. Now, aside from that story, guys, I gotta say, it is all about King Dollar. The stocks index is down as we made for Micron. That's more of that AI chip story that Romaine's talking about. But you have yields a bit higher here, and the Bloomberg Dollar Index right around the highs for the year, obviously putting significant pressure on the yen. The question I have is, like, when do markets actually care about King Dollar? But we're definitely not quite there yet, as chips are still in focus.
Yeah, chips are in focus today. AI still remains the story, particularly with those earnings tonight. Earnings this time out of Micron. Remember, its memory chips have been a big beneficiary of the AI build-out. Wall Street anticipating an 80% jump in revenue quarter over quarter and a more than doubling in adjusted profits. Options contracts out there signaling that the stock could move 12% up or down, depending on which way that report goes. Also, keep an eye on bank stocks as the Fed is set to release results of its latest stress tests, which for investors primarily just serves as a prelude to fresh dividend payouts and share buybacks. The big six U.S. lenders repurchased $14 billion of stock in the first quarter, and that puts them on pace for $58 billion in buybacks this year. And don't lose sight of what's going on in the FX space. The Japanese yen right now at its weakest since 1986, fanning speculation the government will have to step in to support the currency again. Will it work this time? Here's Adam Posen at the Peterson Institute.
It's now just a question of managing the downward descent of the yen rather than changing policy. They're not going to be able, with intervention alone, to stem this.
All right, the biggest obstacle is that vast gap, though, between interest rates in Japan and in the U.S., which just keeps getting wider and just keeps keeping the pressure on the yen. But let's circle back to where we started here, kicking off the show with a closer look at AI and, more importantly, a closer look at Micron coming up after the bell.
Right, so there's earnings coming out. The stock has clearly had a monster run. We've had some upgrades recently, price targets around record highs, top picks when it comes to financial. Susquehanna and Citi calling Micron Technology a top pick. My words got mumbled there. And here is the why. I mean, it is legit. This is what we think the Micron revenue ramp up is going to look like over the next few quarters. And this is the estimates from analysts and what we're going to be looking like. So the yellow is first quarter, the white is second quarter, the blue is third quarter, and the pink is fourth quarter. And literally all you have to know is this. It just keeps climbing and climbing and climbing. Now, clearly the AI story is still going to be cyclical, but we don't know what that cyclicality actually looks like. Many analysts are expecting Romaine a beat and raise yet again from Micron, but the options market is saying a 12% move in either direction. So if Micron disappoints, you could see a big sell-off tomorrow.
Yeah, this becomes one of those binary types of trades as we kick you off to the close here on this Wednesday afternoon. Kim Forrest stopping by the program right now, founder and CIO over at Boca Capital Partners. And Kim, let's start off here with the AI trade and with Micron. And really the idea, as everyone's looking for market breadth, let's talk about the breadth or potential breadth specifically in the AI space. Does Micron deliver that?
It does, and not in a straightforward way, though. What I think people really have to understand is the models that they are training and the models that I think are going to win over time, and it's a long time. It's not going to be tomorrow. It's not going to be the next day. We're talking years, if not a decade, to really let this AI thing become what it can be. What does it need most? Data. And what do you store that data on? Memory. And who makes it? Well, just a handful of people, but Micron makes it, and that's why they're in the focus.
Just to be clear, do you have a stake at all in Micron?
I do. I do not own NVIDIA currently, but I do own Micron, and it's because of the inexhaustible, like, let's even forget AI. We all make more data, and we all store it forever. I mean, it makes those storage bins that you drive by or those storage places look small and not very important because of all the data each one of us creates every day, and then businesses only create more data. So we are going to be, we just have a lot of data that gets created and stored.
Yeah, but Kim, too far, too fast. We can make that argument for NVIDIA, but also for Micron.
Yep. Yeah, I think, well, they have a weird little hiccup that happened the last couple of years. What the problem is there's only maybe 6 makers of NAND devices, and that's the storage stuff. So they all decided to create new fabricating plants, and then there was a surplus of this kind of product. And it is kind of, but not really, a commodity. So you had too much supply and not enough demand, so prices fell. And now we're kind of leading into the other way, where we have adequate supply, but we're back at a more normal kind of pricing environment where prices go up, not down. And I guess people are looking into the future and thinking, oops, they might have more demand and, no way to supply it. So that is probably driving those kind of aggressive projections.
Yeah, I mean, recovering from the cycle low is something, and then you layer on the AI story from that. All right, Kim, let's broaden out for a second. Bank of America had a report out that said it was kind of crazy. It was like the majority of hedge funds own like 4 of the top 5 stocks. Like it's a crazy number. Like they're really concentrated. Breadth is really limited. What do we think about that in a market? How do you manage that?
Well, you don't. You just, you know that this is fast money, right? They're going to move in, they're going to move out. They try to make money in very short time increments. I'm playing a completely different game where I'm looking out 3 to 5 years and saying, things will go up, things will go down, but these are the companies I want to own. So decide what game you're playing and play it. I think the hedge fund game is kind of crazy, especially like whenever all of them are owning the same stocks. What's the differentiator? Yeah. None that I can see. So, be careful of what game you get involved in and know that other people are doing different things, and it may affect your stocks, but it shouldn't affect your outlook.
Do you feel, though, like there's enough price transparency right now in this market, given the narrowness of the rally that we've seen, Kim?
Not really. I mean, I'd like more people to buy other stocks, right? And if you miss, man, do you get punished? Look at General Mills today, right? Mm-hmm. So, even kind of sleepy stocks, if they are not performing, you're going to get punished. And I think that's just everybody trying to overcome the NVIDIA spike that is in your portfolio, that it's just driving the returns and, kind of inescapable.
All right, Kim, rebalancing, end of quarter, half year already done in. What do you expect to be the next couple days?
Oh, it's going to be crazy, and the other thing, which we're not talking about, is that can also drive prices is pre-announcements. There was one in a weird little company called Pool, and they make pool supplies, and it kind of is an interesting thing where you're seeing maybe the money and the pool demand that was huge in COVID is probably met. And so they had a miss on their expectations, and they're lowering expectations. And we're going to be really on the watch out over the next couple of days for other pre-announcements. And that might tell us what companies are going to be like in earnings season, which is really around the corner.
All right, Kim, great point. Great to talk to you. Kim Forrest, founder and CIO over at Boca Capital Partners, kicking us off to the close. She talked about Pool Corp. We've gotten a lot of pre-announcements showing potential weakness in the economy, but is that showing up in the economic data? A conversation up ahead with Michael Ferroli, chief U.S. economist over at J.P. Morgan.
All right, plus new home sales in the U.S. slumping to the lowest pace since November. We're going to break down the real estate market with Robert Refkin, CEO of Compass, the largest residential real estate brokerage in the U.S. by sales volume.
And oscillations in the crypto space continue. A conversation up ahead with Fred Thiel, the CEO of the crypto mining company Marathon Digital, his holdings on the outlook for Bitcoin, as well as the elections up ahead here in the U.S. Stick with us. This is The Close on Bloomberg.
Time is luxury. And time spent in a Polestar is the best time of your day. You deserve. Build and order now at polestar.com.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Is your elbow worsen?
Yeah, he's super nice.
What's inside your ETF? With PAPI, you know. Inside, you'll find a novel income strategy from a leader in innovative solutions. PAPI, the symbol of alternative income.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Sam Adams Summer Ale, perfect for summer.
Oh, yeah.
It's Sam season!
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's SIBO, the exchange for the world stage.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
A big week for economic data up ahead. Tomorrow, the third estimate of first quarter GDP, but you also got durable goods along with initial jobless claims. And on Friday, that's the big day, personal spending and income, along with that all-important core PCE inflation, the Fed's inflation metric. Joining us now, Michael Feroli, chief U.S. economist at JP Morgan. All right, Michael, come Friday by 8:35, what will we have learned over the last 48 hours?
Well, I think we'll most importantly learn that core PCE number that you mentioned. We, and I believe consensus, are looking for a 1/10 increase on the month, which would bring the year-ago gain down to 2.6%. So getting closer, but not close enough probably to the Fed's target. I think the other thing I'll probably be pretty interested in watching tomorrow at 8:30. We'll get jobless claims, which, over the past couple of weeks have been kind of drifting a little bit higher, in particular the continuing claims numbers. So far, nothing, concerning or worrisome, but it is some hints there of slowing. So we want to keep an eye on that too.
I'm glad you brought both of those up because it feels like the Fed themselves, whether it's Mary Daly or Michelle Bowman, it's an inflation versus growth thing, right? Yeah. Where they're worried inflation is going to stay too hot or growth is going to fall off too soon. What are you more focused on?
Probably growth. I think we kind of know a lot of the plot line for inflation over the next couple of months, with goods pricing looking soft, shelter inflation probably running firm. But as I said, the jobs numbers, there are some hints there. Again, they're obviously very strong in the payroll number through May, but we'll want to see if that holds up, particularly with some signs of a little bit softer consumer spending in the retail numbers at least.
So what's the House view over there right now, Mike? Are we looking at a situation here that when she comes out and starts talking about the potential of keeping rates where they are and even raising them, is that so out of the realm of possibility in your forecast?
I don't think it's the most likely scenario. And Michelle Bowman is one of the more hawkish persons on the Federal Reserve Board. But it's certainly not something we would rule out. I think it may be like a 10% probability. We think it's more likely that the Fed cuts this year in line with the median FOMC participants' most recent dot plot. So we think that's more likely given the improvement we've been seeing in inflation, as well as some hints here that GDP growth is moderating, that the job market is getting into better balance. We think that sets a stage for some cuts later this year.
I want to get your thoughts, though, on what's been going on overseas, because even if we do start talking about rate cuts, there's still a big issue right now that Japan is dealing with when you talk about interest rate differentials, the pressure that's been putting on the yen. The yen right now trading around 160 here. I know it's we still have a few more weeks until the next big meeting over there here, but at some point they've got to address this, and I'm wondering, is an intervention, if they do choose to do so, is that really going to have an impact? Is this more just about that interest rate differential and that closing the gap?
Yeah, I think most of the evidence would suggest that intervention is at best a very transitory solution to the problem, and that ultimately the BOJ will have to raise interest rates, and we think that does occur later this year.
Michael, when do we start worrying about the stronger dollar, though? Like, no one's going to want to stand in front of the dollar coming into all the data coming out on Friday, right?
Yeah.
When do we start freaking out about it?
Look, I mean, a strong dollar in this juncture is probably a welcome thing from a domestic perspective. It takes pressure off of import prices. It probably reduces a little bit of the aggregate demand for U.S. products. So right now, it's serving the Fed's goal. And, a lot of people said, looked at Fed policy and said, oh, it's so ineffectual. Well, the strong dollar is one of the channels through which monetary policy should act to restrain inflation, and we do think that's playing out. And as I mentioned, the goods price story looks like that's going to be pretty benign, in part because I would expect that import prices should continue to look, or should look soft as we go forward with this dollar strength.
As you look around the other parts of the world, Mike, and you look at sort of the economic conditions there, whether it's in Asia or in Europe, and how that feeds back into the U.S. economy, there's been a lot of talk about those correlations not being as strong as they were in the past. Are they?
Yeah, I think that's probably right. I mean, certainly we're seeing some softness, continued softness in China. Last week we had a bit of a setback in the European PMIs, so the growth backdrop isn't looking all that supportive right now for domestic developments. That being said, I think what you see driving the economy over the past year has been sectors that are really kind of insensitive to global development. So in particular, state and local government spending has been strong. Domestic spending on services has been strong. So those areas are going to be pretty immune to small perturbations in global ex-US growth developments.
Yeah, and definitely like going on cruises, but not putting in another pool. Like that, we can definitely see that through some of their earnings. Before I let you go, we have a viewer question we wanted to get to, and that goes back to the growth in the labor part. Which employment survey do you weigh the most? Is it household or establishment? You're already laughing.
Can I say both?
Maybe.
I think in the household, we definitely think the ratios are informative. So employment to population, unemployment. I would think if I had to choose one as a measure of overall employment growth, I would put more weight on the establishment survey, even recognizing that it'll probably be revised down. But I do think it's probably closer to the truth in terms of overall job growth in the household survey right now.
All right, great stuff, Michael. Always appreciate you taking the time for us. Michael Feroli, Chief U.S. Economist over at J.P. Morgan, as we await some additional economic data here in the U.S. I don't know if you saw that new homes data that we got this morning. Not necessarily good, and there was kind of a separate report out there that also showed those inventories, at least for newly constructed homes, some of the highest that we've seen kind of this whole cycle, I think, right?
Yeah, and then KKR betting on rentals because they say there's just not going to be enough supply, and rents are going to have to wind up going up. That's going to be really tricky for the equivalent owner's rent input into the PCE.
I hate the equivalent owner's rent input into PCE.
I mean,
can you talk to the Fed about that?
No, they don't listen to me. No one listens to me.
On a more upbeat note, did you know we're getting 2 more pandas here in the U.S.?
I did know this.
But they're going to San Diego. The San Diego's.
It was such a bummer. I missed them in D.C. with my daughter. We were like a week late. It was super sad.
Yeah. Anyway, glad they're coming back. Maybe that's a normalization of relations between the U.S. and China. All right, we are going to stick on what's been going on in the housing sector because there has been a lot. Coming up, we're going to take a closer look at Home Depot getting an upgrade today over at D.A. Davidson. We're going to talk to the analyst behind the call and the 5 reasons why he actually says there's a bull case for this stock. This is The Close on Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture. That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's SIBO, the exchange for the world stage.
All right, let's get a view from the sell side with our top calls. These are some of the big movers on the back of analyst recommendations. And we're going to start off today with Apple, a shiny new upgrade to buy over at Rosenblatt. The firm encouraged by their recent survey, which revealed strong privacy to be the most desired feature for consumers in the AI tech space, which the analyst says actually aligns with Apple's focus. The price target jumping to $260. That's the second highest on the street. The shares up 2% on the day. Next in line, Campbell Soup. And I'm going to do this just for my senior producer, Queenette. JP Morgan calling it good.
There we go.
An upgrade to overweight from neutral, a rating that they haven't had on the stock going back to 2009. The analyst says that the recent acquisition of Sovos Brands, which makes Rao's pasta sauce, is paying off, and it offers proof that the packaged goods company can grow its bottom line. The share is growing today, up by about 3%. And finally, let's take a look at Home Depot, an upgrade over at D.A. Davidson to buy a new price target of $395. The analyst, Michael Baker, says that between a more favorable interest rate environment inching near and higher existing home sales, growth in the home improvement sector should be on the way. Those shares higher by about 1% on the day, and those are some of our top calls. We want to stick with that last call on Home Depot. The shares having a pretty decent day on the back of that upgrade by Michael Baker over at D.A. Davidson. Pleased to say that Mike joins us right now. You laid out 5 reasons for your upgrade on Home Depot, and I want to start off first with one of the big ones there, and that involves the interest rate environment. You think we could see some support there in lower interest rates?
Yeah, that is part of the call, and we don't know if it's going to be next meeting. We don't know if it'll be later in 2024 or early 2025, but we certainly think we're closer to the end of the Fed hiking cycle and nearer to the beginning of an easing cycle. And typically Home Depot stock outperforms in an environment when rates are going down. We've seen that historically. In fact, over the last 2.5 years, Home Depot has underperformed the market. That is part of our call, that we're getting the stock a lot cheaper than other retailers relative to their 52-week highs. And a lot of that underperformance is coincident with the Fed starting to raise rates. Home Depot outperformed in 2020 and 2021. Then the Fed started raising rates, and it's underperformed. So in a lot of ways, don't fight the Fed. And we do think, again, it's hard to know exactly which meeting they're going to cut rates, but we do think the next move is to cut rates.
What about the state of the housing market? Obviously, a lot of Home Depot's fortunes are tied to the nature of housing, what we're buying, what we're renovating, et cetera. I know things have been a little bit distorted over the last couple of years coming out of the pandemic, but what is sort of the outlook on the housing side and how that feeds into earnings?
Yeah, we would say mixed there. A lot of different housing data points in any given week that comes out. We tend to look at existing home sales more than new home sales. Existing home sales have sort of been bouncing along that bottom of 4 million or so annualized homes trading. That's been over the last 4 or 5 months have been right in that range. More importantly, though, than turnover is home prices. And what we've seen is in the last 6 months, home price appreciation has been up year over year and up year over year at an accelerating pace. So the chart is really going like this. And on an absolute basis, existing home prices were at an all-time high as of last Friday. And that's really one of the most important drivers of underlying demand for the home centers. So that really does play into our call as well, this idea that we're seeing really strong home price appreciation for existing homes, and again, back at a record high.
Hey, Mike, does the demand at Home Depot come from either what you just said, like renovations for existing homes that may get cheaper as rates come down because you can maybe take out a home loan? Does it come from people actually moving, or does it come from new home sales and you need to kind of furnish and paint and do all that stuff?
Yeah, all I would say, but what we've seen historically and what we show in the report, and we have lots of data to support this, is more of the spend comes from people who are staying in their home, but they feel like their home is worth more because of rising prices rather than on the turnover. Now, the turnover, of course, each of the people involved in either buying or selling a new home are going to spend more than the people who are staying in their home. but we're talking 4 or 5 million homes a year that turn over. If you look at it on a year-over-year change basis, it's a couple 100,000 more or less this year versus last year. The other 80 million that are sort of staying put in their homes more than dwarfs the amount of spend for the people who are actually changing homes.
Is this also equally good for Lowe's?
From a macro standpoint, it is. No, we've been long-time Lowe's bulls. We've been recommending that for the last really 6.5 years and not recommending Home Depot. We did downgrade Lowe's earlier this year, and now we're sort of switching to Home Depot. And the reason for that is what we noticed about Lowe's, if you go back 6 years ago, is that the margins were about 650 basis points different than Home Depot, lower that is. Over the last 6.5 years, Lowe's has really closed that margin gap. That's been really good for Lowe's. It's really worked well. What we've seen, though, is that sort of played out, and we don't see Lowe's closing the margin gap anymore. In fact, one of the points that we made in the notes this morning is that the gap is now widening back in Home Depot's favor. So that plays in well, more so for Home Depot than Lowe's. Lowe's margins are actually going down. So listen, we think Lowe's, the new management team who came on a bunch of years ago, have done a great job. But we think that story is sort of playing out a little bit more now.
All right, Mike, thanks a lot. Mike Baker of D.A. Davidson. Appreciate that joining us there. But it all depends on what that rate is, Romain, right? Like, is a 30-year going to come down to 6, and then if you have good credit, you're kind of getting 5 and change? Like, is that the magic number? We don't know that yet.
Yeah, I don't think anyone knows that number here. But, I mean, look, at some point, I mean, they're going to have to start selling homes. I mean, people need homes. And, I mean, there's obviously you have people who buy homes for opportunistic reasons, and some people buy it for necessity. And there's been a lot of talk about how there's such a backlog on the necessity side of it that at some point that's going to show its head. I don't know how much that benefits Home Depot, but maybe that provides some life for the housing market.
But or you can make the argument too, the people like me who have that 2.75% 30-year fix, right? Like, I'm never moving, I'm dying in that home. But if things look a little better, I might go spend some money in Home Depot and do some stuff in the home. Yeah. So that, I mean, that could be that upside as that Mike was talking about. Put in a pool in my 1,400 square foot apartment. Totally. Yeah. All right, coming up, we're going to continue with the real estate market. New home sales falling in the U.S. down over 11%. Our next guest is Robert Refkin, CEO of the real estate brokerage Compass. We're going to break it down with him. This is The Close on Bloomberg.
AI can help your employees deal with onboarding, benefits, and other busy work so they can actually do the work they love. Dan's loving it. He's in the zone right now.
Kind of hard to be in the zone
when Idris Elba walks into your office. I know. It's a lot.
Exactly.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
Sam Adams Summer Ale, perfect for summer.
Oh, yeah.
It's Sam season!
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products right at your fingertips. That's SIBO, the exchange for the world stage.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
This is the all-new Tempur-Pedic Adapt mattress, and we designed it to help make aches and pains a thing of the past, because our most advanced, infinitely adaptable Tempur material eases your pressure points, inch by inch and molecule by molecule, in a way that no other mattress can. All night, every night. Tempur-Pedic, ranked #1 in customer satisfaction with mattresses purchased online by J.D. Power, 3 years in a row. Learn more at TempurPedic.com.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Are changing, and the data points are just changing all the time. You just couldn't invent a more fascinating game even if you tried.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rain World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. We did get some eco data out today. We're going to get eco data over the next couple days as well. So we got some stuff coming.
Yeah, and we got the new home sales, which I think everybody knew wasn't necessarily going to be good necessarily. I mean, it wasn't awful, but you did see that drop there. But I was more interested in the data on inventories, and that now you're seeing a much higher inventory level than what we had in the past, right?
Yes, but you have to wonder kind of what their 30-year fix has to be to change the whole equation. Like, what is that?
Well, it's not going back down to 2 point whatever.
2.75? To be fair, the 30-year fix was never that. You just eventually you get there.
Yeah, absolutely. Yeah, that's refinancing. All right, well, that latest eco data that she's talking about includes those housing numbers, those new home sales numbers, a slump here in the U.S. of 11.3% in May. That's the lowest annual pace going back to November. Let's get a read on the ground from the CEO of Compass, Robert Refkin, joining us right now. Compass is the largest residential real estate brokerage in the U.S. by sales volume. Let's talk about those volumes, Robert. Well, I mean, where do we stand right now in terms of like transactions? I mean, relative to what it was in the past, are we doing worse, better, what?
So over the last 30 years, it's ranged from 4 million homes sold on an annual basis to 7.2 million homes. The mid-cycle is around 5.5. Last year was 4.09, the lowest since 1995. And the population is more than 20% bigger than it was in 1995. So last year was a really bad year. Last month, to share what the current market is, was 4.1 million homes on a seasonally adjusted annual rate basis, which is still very low. We started the year, we thought there were going to be 6 rate cuts. The spring turned into a market where there's an outlook of only 0 to 1 rate cuts. And so it is not a great market, but it is moving, and last year does seem to be the bottom.
I am curious, when we talk about rates, I mean, that really changed the complexion of affordability, you know, going from basically near zero Fed funds rate to 5+% right now. If we do get a drop in rates at some point, in theory we would, I mean, how much do we really need to see that would have an impact, A, on the mortgage rate, but to the point that it would spur maybe greater transaction activity?
And so I think 6.5%, right now we're at around 7%, 6.5% would feel good. There'd be nice movement. I think we'd be at 4.5 million, 4.6, 4.7. But if you get below 6, 5.999, that'd be marketing magic. And it would tell, you know, every agent would go out there, share with their buyers that this is a great time to buy, particularly after a 2-year period that reached 8+% mortgage rates.
Does that spur people to actually put their homes on the market to help that affordability issue?
Yes, so we already have more homes on the market, and yes, that would bring more. But if you look at the data, over the last 31 weeks, each week we saw more inventory than we did in the prior week. And that's one of the reasons why, and you saw the new homes data, where year over year, new home sales are down. That's because they're not the only game in town right now. The existing homes brought new inventory to the market this spring.
What is have the prices come down enough to compensate for the higher rates? Like, I feel like the gap has been super wide and it's slowly been coming in. Are we there yet?
So prices right now, I'm sorry to say, are at an all-time high.
Yeah, we're not there yet.
We're not.
How much more do we have to re-rate to get there?
Well, the one silver lining on a price side is that right now in the market, 37% of all the homes that are on the market have had a price drop, which seems like buyers are finally starting to push back on the upper bounds of affordability. And that's more homes with a price drop in the month of June than any time in the last 10 years.
I'm curious about the geography of all this. Are you seeing differences depending on what part of the country you're in?
Yes. So I think the markets that saw some of the biggest improvements are starting to pull back the most now. So that's Florida. That's Texas.
Texas, yeah.
And some of the markets that saw some of the recent drawbacks, like San Francisco, are all starting to move forward. Now, they're helped with, they have NVIDIA, right?
Yeah.
And NVIDIA, there are a lot of people that work in tech.
They've got a lot of new millionaires.
They have a lot
of
new millionaires.
Yeah, they're going to be looking for a home sometime soon. But it gets to the idea, too. I mean, we talked a lot about some of the demographic changes, people finding new places to live during the pandemic, like Florida, Texas, lower cost areas. Are those shifts permanent, or do you think that's going to somehow, these people all cycle back to wherever they originally came from?
I think the majority will cycle back. I think it accelerated some people that were going to move to Florida anyway in 1, 2, 3, 4, 5, 6, 7, 8, 9 years. Maybe they moved a little earlier. But we are seeing people come back. I mean, we're here in New York City. You can see this. The offices are really starting to come to life. And people are asking people to come back to work.
So I was interested in KKR. There was a Wall Street Journal article out that KKR actually put a lot of money into rentals because they just don't see the kind of supply coming online, and that we will always be short homes, and that the rents are going to start to appreciate really fast. Would you agree with something like that?
Yeah, I would agree.
Okay.
KKR, a very smart company, wouldn't disagree with them on that. But there's not enough inventory on either side, on rentals or in sales. We are seeing the rent inflation starting to plateau on a year-over-year basis, which is positive, and that should come into the data and the CPI numbers in the months ahead.
So why are rents plateauing? Is it just we've just reached the amount that people are willing to pay, or what's your read on that?
Well, I think it's reached the amount that people are willing to pay, one, but also there's more inventory that's coming on the market. People have been building, they have been converting from office into rental. There's more supply of rentals and sale units, as well as new developments that have come online.
With regards to the new developments, so I mean, I know builders, particularly for these gigantic developments, they're looking 10 years out in the future. They're not as concerned about whether the Fed cuts 25 basis points over the next couple of meetings here. But as they sort of do this long-term planning, are you seeing a big difference in what they're planning? I mean, meaning like I feel like before the pandemic was all about these big multi-use buildings. You had to have, a mixture of office, a mixture of residents, and of course retail on the bottom. Is that still kind of the playbook?
I think what I'm seeing more from developers is more pure play.
Pure play.
Less office, more pure play with a wonderful restaurant to bring the traffic and to make it feel high end.
All right, Robert, great talking to you. Always great insights out of Robert Refkin. He is the CEO of Compass, one of the largest real estate firms out there by sales volume. And Alex, I know you're not in the market for a home, but I am curious to see whether we do start to see a rebound in activity. I mean, you're kind of getting the sense, at least here in New York City, that, prices have moderated a bit. You're seeing a little bit more activity, but nowhere near where we were, back in 2019 or before.
And it's going to be interesting to see the refi activity, too. Like, I know some people who have a mortgage rate in the 6s, right? They're just looking for 100 basis points lower, and then they'll refi. So, like, that's going to bring in a lot of activity as well in terms of the brokerage guys.
Yeah, and to this point, too, I mean, as you know, I've been talking with a lot of folks, and one thing that our realtor has kind of pitched to us is this idea that it doesn't really matter. You can lock in this rate right now at, 5.8 or 5.9, and you'll probably end up being able to refinance in, a couple years when Jay Powell gets his act together.
I know, but you don't want to buy knowing you're going to refi. Like, it feels like it's money throwing away. They just want to make the sale. Come on.
No, really?
Yeah, come on.
They wouldn't do that to me, would they? All right, nice conversation there about the housing market. When we come back, we're going to focus a little bit on what's been going on in the crypto space, Alex. In fact, we're going to move to our stock of the hour right now. No breaks here. We just keep it going. We're taking a closer look right now of shares of Marathon Digital in the green, as many crypto miners stage a comeback after Bitcoin saw its worst intraday drop in more than 2 months to start the week. Pleased to say joining us right now is the chairman and CEO of Marathon Digital, Fred Thiel, joining us right now live here on the program. Fred, thanks for being here. Give us a sense here. I mean, I know there was a lot of discussion coming out of that halving in April that, we would see new highs. I know that didn't quite transpire here, but we're still looking at Bitcoin, at least if you want to use that as the proxy, the barometer here, is still kind of holding the line here. So we're not talking about a drop as much as we're just talking about a plateau.
Yeah, I think Bitcoin is trading sideways. There's no real macro news that's going to drive Bitcoin price up at the moment. Everybody is waiting for Jay Powell to essentially, announce the first interest rate decrease. People are hoping that that'll hopefully happen after the Wyoming event. We'll have to see. Other than that, we're seeing some noise in the market regarding the Mt. Gox distribution. Mt. Gox was a crypto exchange that was hacked, and many years ago in Japan, actually, it was one of the leading exchanges at the time. It was sort of the Binance of its day. And that bankruptcy and the Bitcoin that was held are about to be distributed now after many years. That's about $9 billion worth of Bitcoin. So there's been a bit of a supply shock rumor. We saw Bitcoin price drop down to its support level, which is around 57,000 the other day, and then bounce quickly right back up. There's still a lot of buyers out there, there's no real movement in the market.
Well, I'm glad you point that out, because I am curious as to what you think sort of the next potential catalyst could be that could move it, whether it's up or down here. There's been a lot of discussion here about economic conditions, obviously a lot of concerns about the fiscal deficit, and now you have at least one of the major presidential candidates making this a campaign issue.
Yeah, clearly Bitcoin has become an issue in the political campaigns. I interviewed Ted Cruz yesterday at the Mining Disrupt conference here in Miami. It's clearly on the Republican agenda. The presidential candidate on the Republican side, former President Trump, is obviously, taking donations, contributions in Bitcoin, and also very pro-Bitcoin. There's a stance about Bitcoin being important for national security, that all Bitcoin mining should be done in the U.S. And so I think what we're seeing in the marketplace is generally a more positive wind from both sides regarding Bitcoin. I think the Biden administration, which essentially had been at war with crypto and Bitcoin after the FTX debacle, has started to kind of soften their stance a little bit, because there are 55 million voters out there who believe in crypto and Bitcoin, and that's a very big voting bloc. Outside of the election, the economy, really, you have a correlation with Bitcoin and risk-on assets. And as we're starting to see in the market now, things are cooling down a little bit. We're starting to see some slowdown in growth. Risk-on assets are sort of becoming a little bit less popular outside of some of the key trendsetters, on the tech side. But I think what we'll see is Bitcoin will trade sideways for a while here, waiting for a catalyst. The next catalyst is likely going to be an interest rate drop. If you look at historical cycles, you would expect Bitcoin to start moving up here towards the end of this year, have kind of a double top, as it's traditionally called, go down in the early part of next year, and then run up through the end of next year to kind of a 2x where it is today. We'll have to see. History isn't always a predictor of the future. But what we are seeing is a lot of interest from institutional investors. The ETFs really are predominantly a retail product today, but we're seeing a lot of institutions evaluating it. You're seeing pension funds evaluating, insurance companies, and sovereigns are beginning to accumulate it. So I think there's only upside.
To that point, how much do you think the pension funds, et cetera, are going to be accumulating? Are we talking like 10% of portfolio, 5%, 2%? Because we don't know that answer yet. And that's sort of the catalyst that everyone's pointing to, particularly when the ETF was finally approved by the SEC.
So I've had conversations with some state pension funds, as well as very large groups of wealth advisors. And the general belief, where I thought it was going to be around 1% or, maybe somewhere 50 basis points, I'm being told 2 to 3%, which is a pretty large number when you put it into the context of the amount of capital that's on the wealth side, wealth management side, and on the pension side. So, the risk-adjusted return of Bitcoin over a historical period is very attractive for these funds and investors. And I think now that it's been legitimized, we're going to start seeing slowly but surely more and more. One other bit of news that I think it's important to note is most of the big wirehouses still have not approved marketing of the ETF to their clients. When that happens, and it is in the process of being done, I've been told somewhere between 2 to 6 months from now, that will start a flood of large kind of retail investors. Again, the wealth management clients coming in.
When you mentioned the difficulties of the Biden administration, I mean, we did have the Bitcoin ETF approved then. It looks like the Ether ETF will also be approved. What's your pitch to the Biden administration? What's your pitch to Trump's side?
Well, I think, for Trump's side, it's a voting bloc, right? Both sides want these voters, these 55 million voters who are believers in crypto. Both sides want them. You've seen bipartisan work in Congress related to the repeal of SAB 121. You see a lot of effort in Congress that's bipartisan trying to get regulation done. The ETH ETF, I think, was potentially an attempt by the administration to kind of say, hey, we are crypto friendly, as opposed to, an enemy of crypto. The war on crypto, as Elizabeth Warren had declared it, I think is pretty much dead, at least for now, through the election, depending on which candidate wins the election. After the election, who knows? If the Biden campaign comes out on top, it may be back to war on crypto. If the Trump campaign wins, they seem to have stated a position where they are very pro-Bitcoin and believe in Bitcoin mining, and we're obviously very supportive of any stance and any candidate who is supportive of Bitcoin and Bitcoin mining.
All right, Fred, thanks a lot. We really appreciate you taking the time to join us. Fred Thiel, he's Marathon Digital Chairman and CEO, joining us there.
I'm curious. Do you think this is going to come up in the presidential debate on Thursday night?
Absolutely no idea.
Yeah, I don't know.
You?
Well, I mean, Trump is kind of made it a point. I mean, we know that he's scheduled to meet with some of the Bitcoin executives, and he has this conference that he's supposedly going to, according to Axios, in July as well. So he's certainly making it a thing. So I don't know. I don't know how much appeal it is, but according to Fred, I mean, 55 million voters apparently think this is an issue.
It just depends on sort of what their list of voting is. Like, is that the number one issue you're voting on? Is Bitcoin?
I don't know.
I highly doubt that.
I don't know. Yeah.
Is it?
No, I don't know. Well, not for me, but
not for me.
Yeah, sure.
I'm just more curious as to what, do we know what asset class it is yet?
Bitcoin?
Yes.
That's
do we
a loaded
know?
question, Alex.
Like, is crypto a security? Is it a commodity? Like, do we know yet? Is it go with NVIDIA?
Alex, even Gary Gensler doesn't know the answer to that question, which I think is why we're in this mess to begin with.
This is why I get so confused then with allocation. All right, well, coming up, we're going to continue to count you down to the closing bell. Jonathan Krinsky, BTIG Chief Market Technician, will be joining us as we're so close to the end of that second quarter. This is Bloomberg.
With ServiceNow, AI can transform your business by helping your people work better. Because when your people work better, everything works better. So, let's get to work.
Idris Elba, where's he? Yeah, he's super nice.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
Introducing the all-new 2024 Lincoln Nautilus Hybrid.
We handcraft every Stearns & Foster using the finest materials like indulgent memory foam and ultra-conforming inner springs for a beautiful mattress and indescribable comfort.
Save $400 on select mattresses, plus get a $300 gift. Shop Mattress Firm in-store or online.
Naturally, I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age, a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New season starts July 10th on Bloomberg Television. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
30 million to the buy side. Dow 30, 60 million to the buy side. Mag 7 stocks, 220 million to the buy side.
People really have to understand is the models that they are training and the models that I think are going to win over time. And it's a long time. It's not going to be tomorrow. It's not going to be the next day. We're talking years, if not a decade, to really let this AI thing become what it can be. What does it need most? Data. And what do you store that data on? Memory. And who makes it? Well, just a handful of people, but Micron makes it. And that's why they're in the focus.
Kim Porras there over at Boca Capital Partners. She helped to kick us off to the close just about an hour ago. A look ahead to what's going to happen after the bell with those earnings out of Micron and whether that AI story, I guess, takes on a different complexion. It won't just all be about NVIDIA.
Yeah, or like the beat and raise story can continue. But it's not just Micron that we're looking at. It's Amazon, $2 trillion market cap. That's really propelling the S&P higher, really propelling tech stock higher. And here's what the stat I was searching for when I was talking to Kim. 1 in 4 funds, hedge funds, hold over 40% of their portfolio in just 5 stocks. That's according to Bank of America. Talk about some serious concentration risk.
Yeah, absolutely. But I guess nobody wants to get left behind. I mean, that's like kind of the ultimate fear of missing out. You got to be on the NVIDIA train. But as Kim said, she actually wasn't a holder of NVIDIA. She was in Micron and a few others. And I think a lot of people are sort of looking at those, I guess, secondary stocks, for lack of a better phrase. No disrespect to Micron. Those earnings coming after the bell a little bit later tonight. Let's talk a little bit, though, about some of the moves that we're seeing in the broader market. And let's bring in Jonathan Krinsky. He's the chief market technician over at BTIG, helping us count down to those closing bells, just about 8 minutes away. All right. I'm really confused right now, Jonathan. When we're talking about a market that now seems to be inching back towards its record highs, whether you're looking at the NASDAQ or the S&P, despite the consolidation that we've seen over the last couple of days, I don't know what the fundamental case of that is, but are you seeing sort of technical indicators that show that that momentum can continue to propel stocks higher once we get past the end of this quarter?
You know, it depends which stocks you're talking about. We're continuing to see unprecedented statistics in this market on a daily and weekly basis. NVIDIA, for instance, when it was the largest market cap company in the U.S. last week, traded 100% above its 200-day moving average. We went back and looked at every largest market cap company in the U.S. since 1990. And the largest spread that company has ever traded above a 200-day was 80%. That was Cisco on the day of its all-time high in March of 2000. So, look, we wrote a note today that's kind of whack-a-mole in the top 10 names. So, when one name takes a breather like NVIDIA today, you have Amazon and Apple kind of picking up, lifting the boat. So, as long as that rotation among the top names continues, then the S&P and NASDAQ will continue higher. The issue is that we just can't seem to get this broadening under the surface. Even you had biotech try to break out a few days ago, it gives it all back. You have, small caps in general just can't seem to muster any sort of sustainable rally. So, S&P and NASDAQ, yes, they can continue higher as long as these big names move, but,
Well, that's what I'm curious about, because everyone keeps talking about, oh, we need to see the breadth, we need to see the market broaden out here. And I guess, I don't know, if you look back over the last, 8 or 9 months, I mean, some will say, well, I don't know. I mean, 7 to 8 stocks brought us here. Why can't they continue to take us even further?
Yeah, I mean, it's a bit of a paradox if you think about it, because the bigger those names become in the index, the less that breadth matters to the index, assuming those names keep moving higher. If you were to take it to the extreme, and if those top 10 names made up 90% of the S&P, then obviously the rest of the 490 names could, essentially go to zero and it wouldn't matter. So I think it's, it's always a double-edged sword, though, right? So as long as, that's what we've been saying, as long as those names keep going higher, the S&P is fine, but I think most investors don't just own the S&P, at least on the institutional side, and that's the issue. It's just hard to get any sustainable rally outside of those big names.
So, Jonathan, when you have this kind of concentration, what is the risk, and what does a blow-off top wind up looking like under these conditions?
Yeah, I mean, I think there's been a lot of parallels to August, September 2020, if you remember that period. That was when Apple was moving higher into its stock split. You had the NASDAQ kind of, accelerate into the upside. So we haven't quite seen that sort of acceleration because, again, we've kind of had, a push and pull among those top names, but we are seeing signs, when you see those names move up without breadth. For instance, today, the NASDAQ 100 was green with only about 20 names in the NASDAQ that were actually higher. That's only happened a handful of times. So, that sort of move is analogous. I think ultimately to see that real blow off top, you would want to see the index moving up with volatility moving up as well. And we're not seeing that. We're kind of seeing volatility near the lows. So I don't know if you could call it a blow off right now. I think you're just saying we're lacking some participation. And that's kind of the risk is that, those big names pull back here.
The other part of this note that Bank of America had, Savita Subramanian had it out, was talking about the rise of passive equity inflows. And it's not the only person I've heard talking about this. And I'm wondering how much that's distorting the overall market action. When you have the passive having to rebalance every day, it makes these 10 minutes really important, but also it becomes a circle that you just keep bidding up the same stocks over and over.
Yeah, I think that's right. I mean, you mentioned just before, what percentage of funds have in the top 5 names, and so it's on the institutional side, it's on the retail side. Given the advent of ETFs, there's been a lot of talk about this XLK ETF, which is the tech sector ETF. 2 names now, Microsoft and NVIDIA make up, I think, over 40% of that ETF. So certainly that's a factor. But again, it can work the other way too, but we just haven't seen that unwind yet.
So, Jonathan, to kind of wrap this up for us and give us a sense here, as we start to talk about the earnings season coming in, where fundamentals are going to be maybe a little...
Hell yeah! Can you hear me? I don't know if you can hear me. Woo, baby! I'm getting a fat print, baby! I'm getting a fat print, baby! Now send it up to 550. Now send it up to 550 tomorrow. Hell yes. This day sucked. Sideways. Oh. We target right there. Get the target right there. Now pull back and we'll go up and trade 550 next. God damn, dude, they're going to do this like today, tomorrow, and Friday. It's going to suck. Murder the option chain and then send it end of day. I got to close this right now. Hold on, I got to close this shit. All right, I'll see you guys tomorrow. Looks like I'm going to leave it up on still. It still has some juice left in it. Not selling it yet. I'm going to leave it on for tomorrow.